But then don't you think that we really need to increase the tax limit in ATC, and something needs to be given to the old tax regime taxpayers? And even if it is nice that the government's intention might be to onboard people as per the new tax regime, something should be done to encourage the participation of retail investors in the equity markets. Something on those lines can be expected, because that is also the need of the hour. Don't you agree?
So, Kavita, two things here. One is for a veteran taxpayer, and I would include both you and me in that category. I think what we need to see really is a more committed effort to get people who are still out of the tax net into paying their due taxes. How is it you still see people with bags of cash? I mean, who carries 50,000 rupees to buy a gadget in a store? Obviously, this is non-tax paid money. So somehow some people have found ways out of GST net, and which of course reflects in their higher disposable incomes. So the government has to do something to stop people like us from being, we feel we're being cheated because there's somebody next to you who has 30% more income simply because they're out of the tax net. That's one. Second, what they must do is to take away this whole confusion. It's a very untidy system, the whole capital gains story in India, the way that it is counted. So equity goes long term at 1 year, real estate at 2 years, REITs at 3 years, debt products at 3 years. The rates are all different, 10% without indexation, 20% with indexation. So there is, I'm not sure what directions the tax rule makers have tried to give through this definition of long term, but I think there is need for rationalization. Second, and this is really important, because look, you have real estate which allows you to go zero tax on your long-term capital gains should you invest it in 54 EC bonds or buy another property. I mean, there are limits and all that, but yet you get a free pass if you reinvest. Why should that free pass on capital gains not come to debt and equity investors? Kavita, if I'm just rebalancing my mutual fund portfolio, for instance, away from a poorly performing equity fund to a better performing one, which suits my portfolio, why do I have to pay a capital gains tax? It's not, it's not even, I'm not using that money. It's just getting redeployed within a week, within 15 days into another equity scheme. So I just feel that it's unfair to two asset classes over real estate, and this should get solved because we're looking at a far more mature market than it was 20 years ago, and we need to move forward in the rules of taxation also.
So in a nutshell, you're also focusing on uniformly taxing the asset classes and maybe the change in capital tax gain structure?
Yeah, absolutely. I mean, this is what is required. So we are not quibbling that should there be a capital gains tax. We are saying, all right, it's a poor country and you are trying to get tax revenue where you can, and you're taxing the profits that people are making. Short term is usually added to your income slab level, and the long term profit is taxed at differential rates. Why not use, for instance, equity? We want people to hold long term. So why not make capital gains, long term capital gains at 5 years, and then they go zero tax after that? And you may tax less than, shorter term at a 10, 20, 30%, that depending on what formula the government decides to do. But why not trigger behavior according to the nature of the asset class? Most debt products are short term in nature. Both real estate and equity are meant for long-term use in individuals' portfolios. So why not nudge people using very low or zero tax rates for long-term holding of these assets?
Co-present could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Do you think the government can also look at increasing the revenue streams in order to increase the tax to GDP ratio, or you think that would negatively impact and will not be a very smart move considering the times we are in right now?
Are you saying that increase the rate of taxation on
Or maybe a
capital
tax to GDP ratio, have more revenue streams through that part?
Yeah, so my constant, the one thing that I get stuck on is you will increase your tax to GDP ratio as more people who should be paying taxes begin to pay the due income taxes. So there is an argument, Kavita, which says that, but the indirect tax is already being paid, but that's being paid by all of us. So why is it that certain categories of people find the loopholes in the existing system? The government has access to big data. Why not use that, find disproportionate assets and bring them to book, onboard them onto the taxation system? So that compliance and that inclusion of the veteran non-taxpayers that's completely, it's essential. We cannot be a $5 trillion economy with a mindset of taxpayers which belongs to the 70s and 80s.
All right, but then let's also talk about giving a boost to the lower segment of the economy, where this is the segment that has not been able to come back post-COVID. Any kind of relief expected over there?
Look, the budget, Kavita, is going to be only on terms of tax revenue, non-tax revenue, borrowing. The best thing that a government can do for the poorer sections is to keep inflation under check, because that's supposed to be the cruelest tax of all for the poor and for the retired. We have an inflation targeting central bank who's supposed to keep inflation between 2 and 6%. We did breach it in the last 12 months, but I think we've got that monkey under control now. So the biggest thing that the government can do is not encourage spending on the revenue account too much. So when you spend on the revenue account, the multiplier is less than 1 rupee. And when you spend on the capital account, the multiplier is 3 times. So 1 rupee spent, the multiplier is 3 rupees. So the prudent thing for the government, of course, is to curb the unnecessary spending, try and get the subsidy bill under control, try and get the freebies under control, and focus more on infrastructure development and keeping the budget deficit under control so that we don't get triggered inflation out of that.
But also, this is the last full-fledged budget before the general elections 2024. In spite of that, we can see the government being very restricted and very focused. Any populist measures that can be announced, or should we even expect such kind of announcements?
Kavita, Nirmala Sitharaman, the finance minister, was at an event 3 weeks ago, and she made a very categorical statement. She said that we're a government that believes in empowerment and not entitlement, which means that we would create the conditions for people to, in a dignified manner, create their own livelihoods, create their own opportunities, and execute them, rather than providing unlimited freebies. So I think that direction is very clear. And whatever I've understood of this government, whether it's a pre-election year or not, a large-scale bankrupting of the Indian budget is not going to happen. This was the expectation before the UP budget, and I remember I came onto a channel and said on record, I do not expect the government to do anything in this budget because it's before an election. I say the same thing. You might have small reliefs given to certain segments of the population, but a large scale, like a loan waiver or a large scale handing out of money to sections of the population, which destroys the budget track that it's on, I don't expect to see that.
How do you think a balance between inflation and growth will be established? Because inflation, even if we are seeing that it's tapering down now, there's no guarantee that the data that comes further will be the same or might just get better. But at the same time, maintaining the growth and in fact encouraging the growth is also very crucial. So there has to be a balance. How do you see that coming in the budget?
Kavita, the whole idea of having this inflation band between 2 and 6% has been taken into account, thinking of that amount of inflation which is in the system to manage growth. So I'm not sure that. So one is that you're saying that inflation could come back. Of course, it could come back, and then the RBI has enough tools in its control to get that inflation back down. We are not going to go into a recession like the other economies are. We might have an impact of that recession in terms of a slowdown, but growth is not going to fall off into either a stagflation or even a recession. We might get impacted by the recession into a slowdown, but I don't see growth falling off a cliff in the next 12 months at all. And the early signs from the US at the moment are that they might not go into such a severe recession as was being predicted earlier. So we still need to see it because the wage inflation story is yet to play out over there and over here, which adds its own momentum to the inflationary processes. But having said that, I'm not part of that conversation which says that India is in big trouble and we are going to be hit very hard by the global recession. We will be affected, but we are not going to tip off into a deep recession at all.
So Monica ma'am, I was talking to a few women investors. We keep doing these kind of shows on the channel during this time, and a lot of them had many demands, to encourage women entrepreneurs, to give special tax relief to women investors, and especially the first time women investors. Do you think something on these lines can be seen?
I seriously doubt it. I really don't think women need a tax incentive to start investing. It's more a confidence thing. Women tend to make actually better investors. They are more stable. They have less ego than men. They are able to not trade too much so that their portfolios deliver over a period of time. So I think it's more psychological than taxation at all. So I don't think women need, neither should they demand, nor should they get anything in the budget. Because the cost of compliance is so heavy. When you start doing these exemptions, deductions, different rates, it becomes a very messy system. So there is a learning period, and women are very smart. It would take them a little bit of time to understand that jargon is predominantly being used to throw them off their game. But once they get past that initial hesitation, they're going to be very good at it. So I'm not, because once you give something, it's very difficult to take it back. Not in favor of any freebies on this account.
All right, so in a nutshell, a very calculated, a very pragmatic, and obviously a budget that focuses on the long-term trajectory. Thank you so much, Monica ma'am, for being on the show and guiding our viewers and explaining them the real expectations from the budget this time.
Thank you.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my
Finance Minister Nirmala Sitharaman is all set to announce Union Budget 2023 on 1st Feb. So a lot of expectations building up around right from changes in the income tax slab to rejig in the new tax regime, fiscal deficit targets to GDP growth, a lot of expectations from the corporates, sector representatives and even from common man, a common taxpayer, a salaried class. So today in this discussion, I'm going to focus on taxpayers' demands, and with me is Alok Agrawal, partner Deloitte India. Alok, welcome to the show. Thanks. And we are going to talk about the kind of expectations or demand a normal taxpayer has from this budget. But before I get into the details as to what needs to be changed and what kind of reliefs are expected, I want to understand the current problem of a taxpayer. Because, whenever we go on ground and we talk to people, a salaried individual actually wants a disposable income, an increase in the disposable income, some money in their hand, in their pockets to maybe spend or invest more. So what is the ground reality?
Sure, Kavita. So as you rightly said, this is that time of the year where the salary taxpayers have a long wish list of expectations. And over the years, unfortunately, there is a feeling that a large part of the tax burden from an overall economy perspective falls on the salary taxpayer.
Right.
As we know, PM Modi had commented a couple of years ago that there are only about 1.5 crore taxpayers who actually pay tax.
Okay.
Now that a number may have changed a bit, but that shows the scale of the problem in terms of the small tax base. Now, I suspect that a large proportion of this is a salaried taxpayer.
Right.
So the government had introduced, new tax regime, but we'll talk about that. But coming back to the problem is that you have tax rates which have not reduced. In fact,
Right.
for higher income brackets, tax rates have only gone up with surcharges, etc. And you have some deductions, exemptions, which have kind of become, very largely irrelevant because of the inflation over the years, where the limits have not changed.
Right.
We will talk about that. So effectively what has happened is, even for those taxpayers who are not in the higher tax brackets, the effective tax burden has increased. If you look at the real value of the income they are earning as compared to the tax they are paying. So I would say that is the problem of the salary taxpayer.
But looking at the government's outlook and the kind of government this is, Alok, won't you agree that this is a very reformist government, a government that believes in empowering a taxpayer or salaried class, or for that matter, every class out of the society? So in spite of that, why don't we have a bigger chunk in the tax net?
Sure. So yes, I mean, there are several great reforms, and one area which the government did attempt some reform in the individual tax area is with respect to the new tax regime.
Right.
And as far as the new tax regime is concerned, the thought was good that let's simplify it by not having too many deductions and exemptions, and let's provide for lower tax rates. But the billion-dollar question, if I may, is, how attractive do you make it?
Exactly,
right?
exactly. And I mean, apart from that, a lot of people are actually not aware of the new tax regime. So let us just begin with this. What exactly is a new tax regime? Because we've seen a very low number of onboarding, talking about this particular new tax system. A lot of people don't understand. A lot of people believe that, it's for people who are the lower income ones, who don't want to pay tax, or maybe who can just get away with the old tax regime. But who exactly can be a part of new tax regime? What kind of taxation and tax slabs are we talking about? And as compared to the old tax regime, where we saw a lot of people were actually saving and investing because they had to take these tax benefit. The new tax regime just takes this discipline away from you.
Yes.
So what is the new tax structure?
Yes, sure. So Kavita, that's a very important point you made. So we'll come to that.
Yeah.
But as far as the new tax regime is concerned, the government has introduced, more slabs. So let's say if we go up to 15 lakhs, where the 30% tax rate applies, there are several slabs, right? And the rebate which is there for low income taxpayers is still there. So up to 5 lakh rupees, you still have a rebate under Section 87A, which effectively ensures that you don't pay any tax.
Right.
So the idea is that they still want those individuals to file tax returns just to ensure that the tax base is there with the government in terms of the data of taxpayers, but effectively they will not pay any tax. So let's say from 5 lakhs to 15 lakhs, they have split it into several tax slabs with graduated tax rates. So the problem is more in terms of what you are foregoing if you want to take this new tax regime. So you are pretty much foregoing all the exemptions and deductions except for one or two exceptions. We'll talk about that. So let's say you have standard deduction of up to 50,000 rupees for a salary taxpayer. Now, in a new tax regime, you forego that standard deduction.
You don't get that.
No. Then, in India, we have so many individuals who are staying in rented housing, right? Because they don't have home ownership. So for them, the house rent allowance was a very attractive exemption under the under their compensation structure. So now the HRA exemption is not available in the new tax regime. Then over the years, as you rightly pointed out, people have started contributing to Provident Fund, people have started contributing to PPF. Now you have Sukanya Samriddhi, you have housing
NPS.
loan principal payments. So you have so many of those investment oriented items in the Section 80C deduction, which is capped up to 1,50,000 rupees per annum, which is also not available. So when you have salary taxpayers who are, let's say, growing in their careers after a few years and they start planning to save for the long term, they may have taken provident fund under their company structure, and they may have started making some other investments that we just spoke about.
Right.
For them, it does not make sense to forego that 1,50,000 of ATC deduction.
Yeah, yeah.
So this is one of the main reasons why people have not really gone for the new tax regime.
Exactly, exactly. And also, do you also agree to the fact, because we've been talking to a lot of experts and industry representatives, and one viewpoint also said that India as a country is going beyond tax saving investment. Somewhere down the line, the mindset is such that tax saving is fine, that's needed, but that's not something that can actually accomplish your financial goals. Do you think the government also has this in mind, and what would be the exact intention of having this new tax regime in that case?
Yes. So let's say, we know that a lot of individuals now in the retail side are investing in the stock market through mutual funds, through SIPs, right? So I would agree that they are not really making their investment decisions based necessarily on tax
saving instruments
alone. But having said that, wherever they see an opportunity to get a tax benefit as well, they would obviously prefer that.
Exactly.
So let's say that if the government makes the new tax regime more attractive as compared to the old tax regime. Yeah. So let's take an example.
Yeah.
So I would say couple of the basic items what we spoke about, for example, the standard deduction, right? Because there is no proof you have to give. It's a flat 50,000. It makes it very simple for that to be included in the new tax regime. You could also give exemption for HRA, because if you are recognizing the challenge of the salary taxpayers, especially who are building their careers from their initial days to take rented accommodation, because most of them are traveling to metros and tier 1, tier 2 cities to take up jobs. If you recognize that challenge, then HRA exemption would also be important to make the new tax regime more attractive. And then lastly, you could perhaps look at NPS. Let's say while the new tax regime does allow the 10% employer contribution as exempt, but that is very uncommon. In our experience, we have seen very few employees.
For private sector. For private sector uncommon.
Yes. So we have seen very few employees opting for NPS, whereas what they would they would prefer to do is they would prefer to make their own contribution where there's a deduction of 50,000 rupees under section 80cc(d). So if that, maybe that 50,000 rupee 80cc(d), if that can also be included, some of these things would help in making the new tax regime more attractive.
Okay, so for retirement, PPF out and NPS in, that is what the thrust should be on.
Yeah, I mean, if that is the thought of the government, that we want more people to migrate into NPS, then perhaps they could incentivize, taxpayers by allowing the NPS related deductions in the new tax regime. Because currently what we see is only taxpayers at, let's say, maybe around the 10 lakh rupee annual income, they may find the new tax regime more attractive. Once you start going above that, and nowadays you have a lot of middle class taxpayers whose annual income is above that. Once you start going above that, and they obviously start making deductions into the ATC kind of investments, then for them the new tax regime is not attractive.
This will actually fade out your old tax regime? Is that also the intention, now slowly, just get it out of the system and just make people...
Yes, I think that perhaps was the idea of the government, but we have a long way to go, because if you look at the proportion, only when they have a reasonable proportion, I would say even a majority of the salary taxpayers who have moved to the new regime, only then they can think of removing the old one out. But I would say that's early days for that.
So, okay, let's talk about the old tax regime now. ATC, I don't know, I mean, since a very long time, there has been a demand of having more investment instruments, maybe more creative investment instruments, that would also help you save tax and align those kind of instruments with your financial goals, increase the 1.5 limit. That has not happened since a very long time. If at all the government tries to do something over here, what could be the working area, or what is the scope of doing any sort of changes?
Sure. So, Kavita, ATC, the last increase was in 2014 by Finance Minister Jaitley. Now,
Wow.
that is, we are 9 years,
Yeah.
into 23 budget now. So, if you look at the inflation, we are completely, gone past. If somebody even looks at the cost inflation index that the government prescribes for calculating long-term capital gains tax, right? It's the official index under the tax law itself. Then also we would say that the bare minimum limit for ATC should be at least 2.25 lakhs to 2.5 lakhs.
People wanted 5 lakhs.
Yes. So, there is a lot of room for looking at ATC limit.
What about having more investment instruments in it? I mean, and especially more market-linked products, because somewhere down the line we also feel that the government wants to encourage people to participate in the equity market. The participation of a retail investor needs to go up.
Yes.
How can we add more to it when we talk about ATC?
Yeah. To be honest with you, Kavita, ATC has a fair number of different items in it.
Totally.
Yeah. The only thing which I can think of, which used to be under a separate section called ATCCF, which is infrastructure bonds, which was removed many years ago. Given the government's focus on infrastructure investments, perhaps they could consider one of those kind of items in the ATC basket. But the problem is not in terms of what are the options under ATC. The problem is the overall limit. Yeah. So unless they enhance the overall limit, it will not make much of a difference, because people are already exhausting that limit through Provident Fund and PPF.
Yeah.
PPF is
a lot of
also very
insurance
popular.
policies. Yeah.
Yes. So if you look at housing loan principal repayments, even that is under ATC. Now with the increase in housing costs over the years,
That's been a demand.
Yeah, it just doesn't make sense to an individual taxpayer, because most of these items become irrelevant. They are not able to claim any tax breaks on these items because they've already exhausted the ATC limit through the basic item like Provident Fund, etc.
Great news for
favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money,
The interest payment on home loan, how much according to you should be increased to? What's
Yeah, so under Section 24, for example, we've had a deduction of 2 lakhs, which is allowed on interest on housing loan. Now, this also coincidentally was increased by FM Jaitley in 2014 itself.
okay?
And again, it is far below the the current inflation rate, as I just explained. If we look at it, so again, a bare minimum increase of at least 1 lakh, if not more, given the number of individuals in India who are taking housing loans, and for them 2 lakhs on an annual basis is far lesser than the interest component of the EMIs they are paying on their housing loans.
Okay.
So again, there's a lot of lot of logic or rationale for an increase in the limit under Section 24 for interest repayment on home loans.
What about first-time home buyers? Because we've seen a rise in home loan, and people buying property for their consumption or maybe for their investment. Anything specific for first-time home buyers that can be given?
Yes, again, now the government had introduced a deduction, an additional deduction of 1.5 lakh rupees for affordable housing, and that was only provided for loans taken till March 2022.
Right.
Now, strangely, that was not extended, but we are hoping that the government will relook at this and, extend that timeline, because obviously now you have stopped the deduction only to those individuals who had taken loans prior to March 22, whereas many more individuals continue to take loans. That's one, in terms of an extension of the timeline for the loan. And second is even in terms of the absolute size of the value of housing, because that was only up to 45 lakhs, if I'm not mistaken, which is a very, very small amount.
Right.
Even if you look at tier 1, tier 2 cities, that may fall short of a majority of taxpayers. Because if you really want to give a benefit for the taxpayers who are paying tax, because that's where it makes sense to claim a tax deduction. If you're paying tax, then obviously you have to look at what category of housing does that taxpayer actually end up using, which is perhaps far more than the 45 lakh kind of ticket size.
Right. Anything on ATD you think should be changed, especially for senior citizens?
Yes, Kavita. ATD also needs another relook in terms of the limits. So we have the two limits of 25,000 and 50,000. Now, while they have increased the senior citizen limit a bit over the years, I would say there is a stronger case for looking at the basic limit of 25,000. Because that is where they have not made any changes over the years. And the COVID pandemic has taught us how important it is to have adequate health insurance.
Yeah, totally.
So many people have realized that the 25,000 rupees is not adequate, and they've had to lose, tax breaks to the extent of the additional premium that they are paying. And also, the preventive health checkup sub-limit within that, which is 5,000 rupees, also needs to be relooked.
Okay.
Because these are, basic necessities, and if we have to really provide a genuine deduction, then we need to relook at some of these, because again, for a family, a 5,000 rupee limit of preventive health checkup is not sufficient, especially when it's part of the 25,000.
Exactly.
So maybe they carve out a separate one for preventive health checkup, and they look at increase in both for the preventive health checkup as well as for the regular insurance premium.
So let's move on and let's talk about LTCG and standardization and uniformity, getting uniformity in the capital tax gain structure across asset classes. Do you think that's also the need of the hour? Looking at people, look at how investment aware people have become. It's also the government's responsibility to encourage people to think about their financial goals, their investment planning, and so LTCG and the entire capital tax gain structure needs a relook.
Yes. So there's a lot of talk in the last, I would say even in the last couple of years before the budget about rationalization of the capital gains tax rates. And it is genuinely very complicated. Now the biggest area of focus is where the maximum people enjoy the benefit, which is, let's say, the long-term gains for equity shares and equity-oriented funds. where the government brought that within the tax net at 10% without indexation, where you're holding the securities or mutual funds for at least 12 months, right?
Right.
Now, there is some thinking there whether you need to relook at the time duration, whether holding something like this for only 12 months is genuinely a long-term
duration.
or,
Okay.
you know, or whether you need to increase it to at least 24 months.
Because it's equity.
Yes.
Okay.
For example, debt mutual funds have a time of 3 years, right? So there are arguments that, you know, there's a mismatch here where debt mutual funds are a relatively more stable, less volatile kind of investment as compared to equity, but you have given a 3-year period for that as compared to a 12-month year. Now, of course, the average taxpayer who enjoys the exemption may not be very keen on this change of having an increase from 12 months to 24 months. But there is some...
But there's the volatility logic which makes sense. Yeah.
There's some talk about, you know, rationalization between this. For example, you know, you have property which is in the 24-month bracket, right?
Okay.
So if you're holding immovable property for more than 24 months, it becomes long-term.
Okay.
Now you have foreign securities also at 24 months.
Okay.
So if I'm holding equity shares, let's say of a US company, it's at 24 months again. If it's more than 24 months, it's a long-term capital gain. I get indexation as well as I pay only 20% on the net gain after reducing the index cost.
Right.
So I think what has happened over the years is because of changes on an incremental basis every few years on one asset here, one asset there, it has become fairly complicated. So I do agree that there is some need to rationalize. But the key question again is twofold. One is, how much does it help the government in improving their tax collections?
Exactly,
Because
yeah.
the government would certainly look at that. And whether the change will perhaps even impact the stock market.
Exactly.
Because obviously, you know, you don't want a big impact on the sentiments of the retail investor. As we discussed, you know, there's a huge amount of retail investment in the markets over the last few years.
All right. So in the end, just your last take. It's a full-fledged last budget of the Modi government.
Right.
Pragmatic or populist?
I would say more populist, because always we are optimistic, right?
Totally, like always.
So I would say yes, some tweaking to make the tax slabs more attractive for the individual salary taxpayers would make it very attractive for taxpayers to earn more, save more, and then spend more, right?
Yeah.
Which is what the government should be looking at.
Exactly. Save more, spend more, and then invest more. That's going to be the mantra. Thank you so much for being on the show. And with that, it's a wrap for this conversation. Thank you so much for watching.
Great news for those who want to rise.
Philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Ahead of every budget, here at ET Now, we've been getting you always the biggest voices, the who's who of India Inc., of the markets, about their expectations for the upcoming budget, and this time, really no different. Today we have with us K.K. Mistry, the Vice Chairman and CEO of HDFC. He's joining us to give his perspective on what the housing sector is hoping to hear from the budget and also the demand trend that he's spotting in the housing finance business. Thank you so much for joining us, Mr. Mistry. Good to have you with us this evening, sir. But firstly, I want to ask you about housing. Now, this has been a priority for the government, the credo of housing for all. How far has that agenda really been pushed? Because as these interest rates rise, Mr. Mistry, the SIPs have come down, and that's likely because of the rising rates, which would mean rising EMIs. So in your opinion, sir, what should the government do to further enable the housing sector, and what would you say the consumer really needs at this point?
A housing loan is a 15-year loan or a 13-year loan if you take an average. In that period of 13 years, interest rates will go up and interest rates will come down. No bank can afford to give a 13-year fixed rate loan because you do not have access to 13-year fixed rate funding. And therefore, necessarily every lender in the market gives floating rate loans, where interest rates increase or decrease depending on where rates are in the economy. Since rates have gone up in recent times, the interest rate is higher, therefore the EMIs are higher, and therefore you see temporarily that people are the amount of money that people are putting into systemic investment plans may have come down. But you must understand that a housing loan is a 13-year or a 15-year loan. And over that period of time, rates will go up and rates will come down. So it doesn't make too much of economic difference whether you take a loan at a time when rates are high or low, because if they are high now, they will come down. If they are low today, they will go up at some point in time. So in a long-term loan, it really doesn't make much difference when you take a floating rate loan. Now, coming back to the budget, what I believe would be probably the theme of the budget over the next couple of years. One is to continue facilitating growth. We, as I said, have done extremely well. Full credit to government, full credit to RBI for the measures that they've taken. But we should be on path to achieve a $5 trillion GDP by 2025. And if that means putting more in incentivizing savings, incentivizing investments, encouraging more of foreign money coming into India, encouraging manufacturing. These are some of the measures that may need to be taken over the next couple of years to put India on path to achieve that $5 trillion economy, which in my view would be very much and very pragmatic and would probably happen.
Right. So you're saying that we are on a strong footing right now. When it comes to the housing sector, the demand looks strong and the government can only help propel it further. But specifically about taxes, Mr. Mistry, the government has reduced these rates for corporates in 2020. The corporate tax growth ever since has been quite spectacular. I'm just wondering if you believe it should be considered for personal taxes as well. Reduce taxes, increase savings, and also incentivize reporting. Would you think that's a good approach?
One would probably look at is how do we incentivize more savings or more investment in the economy? If you look at tax rates, for example, we reduced the tax rates a few years ago for corporates. And as a result of the reduction in corporate tax rates, we have seen more tax collection. The tax collection has increased over time. Not only has the tax collection increased over time, but also companies with more cash in their hand have reinvested that money in their businesses. The businesses have grown, more jobs have got created, and as a result of the higher business, the incomes are higher, and therefore the tax paid by them is also higher. Now, whilst that was done for corporates, individual tax rates still probably may need to be looked at. The individual marginal tax rate in India is 43%, 42.7% if I recall right. So there might be some measure in place over the next 2-3 years to look at bringing that tax rate down so as to incentivize people to save more, to invest more, which will then result in economic growth, and it will result in higher tax collection over a period of time.
Great news for those who want to rise.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, सब साथ बढ़े. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj.
Budget. Here at ET Now, we've been getting you always the biggest voices, the who's who of India Inc., of the markets, about their expectations for the upcoming budget. And this time, really no different. Today, we have with us Keki Mistry, the Vice Chairman and CEO of HDFC. He's joining us to give his perspective on what the housing sector is hoping to hear from the budget and also the demand trends that he's spotting in the housing finance business. Thank you so much for joining us, Mr. Mistry. Good to have you with us this evening, sir. But firstly, I want to ask you about housing. Now, this has been a priority for the government, the credo of housing for all. How far has that agenda really been pushed? Because as these interest rates rise, Mr. Mistry, the SIPs have come down, and that's likely because of the rising rates, which would mean rising EMIs. So in your opinion, sir, what should the government do to further enable the housing sector, and what would you say the consumer really needs at this point?
A housing loan is a 15-year loan or a 13-year loan if you take an average. In that period of 13 years, interest rates will go up and interest rates will come down. No bank can afford to give a 13-year fixed rate loan because you do not have access to 13-year fixed rate funding. And therefore, necessarily every lender in the market gives floating rate loans, where interest rates increase or decrease depending on where rates are in the economy. Since rates have gone up in recent times, the interest rate is higher, therefore the EMIs are higher, and therefore you see temporarily that people are the amount of money that people are putting into systemic investment plans may have come down. But you must understand that a housing loan is a 13-year or a 15-year loan. And over that period of time, rates will go up and rates will come down. So it doesn't make too much of economic difference whether you take a loan at a time when rates are high or low, because if they are high now, they will come down. If they are low today, they will go up at some point in time. So in a long-term loan, it really doesn't make much difference when you take a floating rate loan. Now, coming back to the budget, what I believe would be probably the theme of the budget over the next couple of years. One is to continue facilitating growth. We, as I said, have done extremely well. Full credit to government, full credit to RBI for the measures that they've taken. But we should be on path to achieve a $5 trillion GDP by 2025. And if that means putting more in incentivizing savings, incentivizing investments, encouraging more of foreign money coming into India, encouraging manufacturing, these are some of the measures that may need to be taken over the next couple of years to put India on path to achieve that $5 trillion economy, which in my view would be very much and very pragmatic and would probably happen.
Right. So you're saying that we are on a strong footing right now when it comes to the housing sector. The demand looks strong and the government can only help propel it further. But specifically about taxes, Mr. Mistry, the government has reduced these rates for corporates in 2020. The corporate tax growth ever since has been quite spectacular. I'm just wondering if you believe it should be considered for personal taxes as well. Reduce taxes, increase savings, and also incentivize reporting. Would you think that's a good approach?
One would probably look at is how do we incentivize more savings or more investment in the economy? If you look at tax rates, for example, we reduced the tax rates a few years ago for corporates. And as a result of the reduction in corporate tax rates, we have seen more tax collection. The tax collection has increased over time. Not only has the tax collection increased over time, but also companies with more cash in their hand have reinvested that money in their businesses. The businesses have grown, more jobs have got created, and as a result of the higher business, the incomes are higher, and therefore the tax paid by them is also higher. Now, whilst that was done for corporates, individual tax rates still probably may need to be looked at. The individual marginal tax rate in India is 43 odd percent, 42.7% if I recall right. So there might be some measure in place over the next 2-3 years to look at bringing that tax rate down so as to incentivize people to save more, to invest more, which will then result in economic growth, and it will result in higher tax collection over a period of time.
Great news for those who want to rise with...
It almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is...
Up steps Shepherd to take the first penalty of the night. You know, John, it doesn't matter. It goes to ground and the klaxon sounds. It's in, bottom left-hand corner, and it's a long way back up the motorway for those United fans. Puts the ball down and Rose. Oh, Davies gets a fingertip to it, but it's not.
Hello and welcome to Budget Coverage. This is ET Now, your budget headquarters.
Good morning, and you're watching Budget Cafe on ET Now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Very good morning to you, Ankita. And obviously, budget continues to be an important day coming in for our equity markets. Union budget, 1st Feb, 11 a.m. will be the speech starting for the Finance Minister Nirmala Sitharaman. Her 5th straight budget coming in this time. But that's all about domestic, an important day for the domestic equity markets. But what happened in the US markets, Ankita?
Well, Vinny, the US markets have resumed their rally, it seems, on a very important day, not just the Indian budget, but also the FOMC meet that's likely to happen today. Now, US markets rallied yesterday on the back of strong earnings and encouraging inflation data that pushed the S&P 500 to its best January since 2019. And the Dow Jones Industrial Average rose 368 points. The S&P 500 gained almost 1.5%, and the Nasdaq Composite added 1.6%, notching its best January since 2001. The Federal Reserve is expected to raise interest rates by just a quarter point, but also likely to signal that it will stay vigilant in its fight against inflation, even as it reduces the size of the rate hikes. And the Fed releases its latest rate decision today at 2 p.m. ET, and the Federal Chair Jerome Powell briefs the media at 2:30 p.m. So do keep an eye out on that, a very important number that's going to come out besides the Indian budget, of course. Also, the European markets were a bit mixed despite the Eurozone growth figures that came in ahead of estimates. Data published yesterday morning showed that Eurozone economy grew 0.1% in the last quarter of 2022. That was better than the analyst estimates of 0.1% contraction. Now, though still it represents a slowdown from 0.3% growth in the third quarter of last year. Now, separate data published yesterday also showed a surprise fall in Germany's retail sales for December, painting a pretty mixed picture ahead of the European European Bank's interest rate hikes decision that is due tomorrow. Now, the markets have already priced in a 50 basis points rate hike in the next meeting. The Pan-European Stock 600 closed down 0.2% with majority of sectors and all major indices ending in the red. DAX and CAC were up very flattish, but in the positive territory. FTSE was down 0.1% in trade, and that was the global roundup for you. Vinny, what's the crude looking like on such an important day?
Absolutely, just look at the crude prices. What we saw coming in a couple of days back was a sharp fall coming in crude prices, but overnight we've seen that Brent crude futures are actually above and near that $85 per barrel mark as well, recovering from the almost 3-week low that we saw coming in for the Brent crude prices. That was around the $83 per barrel mark as well. Obviously, US wage growth data, weakening dollar bolstered by the risk sentiment are factors that we're keeping out for the Brent crude oil prices as well. So marginal gains are what we are seeing coming in for the Brent crude prices this morning as well, Ankita.
All right, Vinny, and back to the Federal Reserve. All eyes will be on the Fed Chair Jerome Powell today. The Federal Reserve is expected to raise interest rates by just a quarter point at its meeting. Now, the expected quarter point hike would be the smallest increase in the federal funds target rate range since the first hike of the cycle in last March.
And the United States is readying more than $2 billion worth of military aid for Ukraine. This will possibly include longer range rockets for the first time, as well as other than munitions and weapons as well.
And PayPal has announced plans to lay off 2,000 employees, or around 7% of its workforce. The president and CEO of the company also said they aim to tackle the challenging macroeconomic environment.
And the two Senate Democrats reintroduce legislations to strengthen airline passenger protection. This is after a year of travel disruption that was capped by chaos that stranded thousands of people over December holidays.
Whether it will be a budget which has a lot of populist measures, or will it be a budget where fiscal prudence gets precedence over everything else? Will it be a infra-led growth or a consumption or demand-led growth? I will dissect along with many other panelists on ET Now on 1st February. Watch me on ET Now.
And well, it's the big network exclusive. The Adani Group has acquired the strategic Israeli port of Haifa for $1.2 billion. My colleague Gurpreet China spoke to Adani Group chairman Gautam Adani to decode what lies at the heart of this investment. He also shares his views on the Hindenburg report that rattled Adani Group stocks. Listen in to what he had to say.
ये इसका स्ट्रेटेजिक मेडिटेरियन सी के ऊपर है, एंड वी आर रियली feeling very proud of investment in this Haifa port, and it is a very strategically, and the relationship between India and Israel, that friendships, we have to strengthen that, and this investment in Haifa port is one of the largest port of Israel, and it is well connected.
तो सर अगर बात करें तो कैन वी से गेटवे फॉर यूरोप एंड एशिया आल्सो?
Both on other side also, later on it will be connected properly with connecting to the Saudi Arabia also.
And if we can talk about the way we have seen that China is trying to have a road links also through the seaports, are we going to have a better connectivity?
This will be a much better connectivity.
Sir, and sir, today we have seen that Hindenburg's that controversy is going on. You have already given a very long clarification on this thing. Anything you want to convey, because you feel that it's an attack on India?
Besides, basically, of course, it is attack on India is one part, but ultimately, end of the day, we have completed our FPO, irrespective of what basically they have said, and I am really thankful to all our investors.
Hi, my name is Shashank Shrivastava. I am from Maruti Suzuki, and I'll be taking a close look at the forthcoming union budget from the auto industry perspective. Auto industry, as you know, has had 3 really tough years, and in fact the last year was actually good from a volume perspective, but the challenges continue. So I'll be talking about the expectations from the industry regarding how to make growth a reality for this industry. So tune in to ET Now as I decode the union budget from an auto industry perspective.
And Charandeep Singh, the founder and managing director of Girik Capital, believes that this will be a similar budget to last year. Let's go across and listen into his expectations coming in for the upcoming budget.
Tinkering with the taxes, it's very important once you set up a tax regime, which is not more than 4 years old, to let it run its course. I don't think that it would be taken very well by the market at all, any tinkering, which is adverse, be it increasing the long-term tenor or making long-term and short-term at par. It's very important to have consistency in tax regime. And I also hope that this stays its course, the current tax regime, because you've already tinkered with it once in the last 4 or 5 years. So I think that, yes, I would be in the camp and favor. And, one might think it's self-serving, but that's not the case. I would just say be consistent. And consistency is ultimately, you're a long-term winner. You show the world that you have a stable tax regime. It increases the confidence of investors manifold.
Ideas always before a budget is what? Look at home loans, that there will be an infrastructure play. Are you folks expecting anything different at all?
I'm happy to take that. I think it'll be a similar budget to last year's, wherein the government has emphasized spending on infrastructure. I think that spend on infrastructure will continue because that train has left the station. So I think emphasis on infrastructure development and manufacturing. I think these are the things that should continue to get benefit in the coming years, especially now.
And well, as we are bringing to you all the budget expectations, we also had Sridhar Sivaram, Investment Director, Enam Holdings, share his expectations from the union budget. Let's take a look.
If I connect the dots and listening to what Mr. Bajaj had to say and some of the other comments that we have seen, this is what I think may happen, that is basically talking of rationalizing the tenure for long term. So today if you see, the long term capital gains for equity is 1 year, for real estate and REITs is 2 years, and for debt is 3 years. So you're really talking of rationalizing this. It's highly possible that everything moves to 3 years. Okay, so that's number one. The second is that the difference between a long term and short term is only 5%. So you're talking of 10% for long term and 15% for short term. That seems too less. It's highly possible that 15 goes up, maybe to 20, worst case to marginal tax. But
now let's just talk a bit about the economic survey as well, which was tabled in the parliament just a day before the budget. ET Now's Nayantara Rai spoke to the chief economic advisor of India, that is Mr. V. Anantha Nageshwaran. Listen in to what he had to say.
Medium-term outlook being robust, precisely because we have done the hard work last decade. So we went through a long financial cycle, as many countries have done. And when we go through a long financial cycle, it does cast a long shadow on economic growth, which is what happened towards the second half of the decade. And we did do the repair work, both in the corporate sector and in the financial sector. By the time that repair work got completed, we, of course, were hit by other global shocks. And now that the global shocks either are settling down or receding, the fact of improved balance sheets would naturally result in a good credit cycle and a good capital investment cycle. And that will drive our economic growth as it did in the first decade. Hopefully, the lessons that we learned from the experience of the first decade is that exuberance can become over-exuberance, and we need to hopefully some of the new technologies which we have and being able to assess credit risk better. And now we have the insolvency and bankruptcy code. So we have processes of exit for borrowers and lenders. All these things I hope will give us a sustained and long credit cycle and a capital investment cycle, keeping us growing at a steady rate of 6.5% to 7%. Not only for the next several years, but into the decade and until the end of the decade and beyond. That is the main story of the economic survey.
Absolutely. And what you have also said is that inflation is expected to be well behaved in the new financial year, and at this fiscal, we're likely to see growth come down, while India will stay the fastest growing economy on this planet. What are your growth projections? What is your outlook on inflation?
We do expect, we don't make forecasts for inflation per se, but we do expect, as the RBI does, that the consumer price inflation rate would come within the range of 4 to 5%. So it will stay well within the RBI's target band in the next financial year. That is what we expect. And we are not making our own forecast. We basically are seconding what the RBI has said. On real GDP growth, yes, we do project a baseline number of 6.5% for the next financial year, with a band of 6 to 6.8%. And we also acknowledged that downside risks dominate the upside risk to this number.
Our expectations from the budget are based on three key themes. The first one being a budget that stimulates growth, as has been in the previous budgets of the last few years. The second is supporting the infrastructure growth, because infrastructure growth is key to the development of travel and hospitality business in India. And finally, a tourism booster. It is time that this sector gets a booster dose, so that the sector that suffered the most, demonstrated the highest level of resilience, is not only coming back on its feet, rather is contributing the maximum in terms of new job creation as well as indirect job creation.
Well, that was Puneet Chatwal of Indian Hotels on his budget expectations. But let me bring in ET Now's consulting editor Maithili Bhusnurmath to discuss with economists about their expectations from the union budget. Let's take a look at what they had to say.
I think I would say more neutral. In terms of the fiscal deficit, we think the target of 6.4 for this year will be met. And the government will bring that target down to set a target of 5.9% of GDP. Now, FY24 is a year where we think real growth will slow down, and therefore nominal GDP growth will be down. Therefore, the deficit coming down, but the quality of consolidation focusing more on capex, which is what we expect. I would say net-net is neither expansionary nor contractionary, but more sort of neutral from our standpoint.
There's no good year to present a contractionary budget. Whether it's a pre-election year or a post-election year, it's always a tough decision. But our sense is that this is probably a good year to attempt that tough decision. That's because of several factors. One is that on growth front, there seems to be a conflict between data and narrative. The data is supporting the fact that growth is still quite strong. The narrative is presenting some challenges ahead. The government should go with the data, not with the narrative. Second issue is that inflation stickiness in core can any day turn into a bigger challenge closer to election. So from a macro stability perspective, it's better to focus on fiscal consolidation, not stoking inflation, rather than going in for a stimulus at this point. Third issue is that our debt levels are still very elevated, so much so that interest expenses are now close to 40% of our total revenues. We can't get debt to GDP ratio even declining unless fiscal deficit is brought below 5% of GDP. So we have to understand that our starting point itself is very expansionary. So there is a need to consolidate now. And this is a year where we are going to get a big one-off from substantial subsidy reduction just because of certain factors that may not repeat every year.
We are looking at a fairly neutral budget of fiscal deficit of 5.9% of GDP with a net borrowing program of slightly over 12 trillion rupees. I do think that the economy will slow. There is at least, if you look at our house view, there is a combined US and European recession coming. Lending rates obviously have gone up because the Fed is raising, the RBI is having to raise rates. So when you put this together in the context of an election, I think the government has to step up welfare schemes to some extent. It has to also give a free hand to the RBI to, control inflation. I think that said, the government obviously will want to carry on with capex because the fiscal multiplier is obviously far higher than the consumer, consumption multiplier, but over time. So I think that they could push on capex schemes where the outgo will take some more time, like PLI and so on. So overall, I think that, this will be a play-safe budget, especially given the global concerns that we face at this point in time.
Many people think that budget is no more relevant. I am of this opinion that even if you are not allowed to fire the crackers, it does not diminish the spirit of Diwali celebration. Let's join on 1st February with me, Vijay Kedia, on ET Now to celebrate Diwali of stock market, union budget. See you.
And the former president of FICCI and CEO of HUL, Sanjeev Mehta, shares his insight on how India is placed in the global growth trajectory. Let's go across and listen in.
India is very well placed today. We would be growing at about in the vicinity of 7%. The inflation is contained in the vicinity of 7%. I think even the fiscal deficit should be very close to the budgeted numbers. And when you look at it from a context of 23, all the estimates that are pouring in, the global economy will be growing. It would be one of the 3 slowest growing years in the last 3 decades. In that context, if India grows at 6%, it would be a great achievement. And that would then set the ball for us to achieve the kind of growth we are all seeking, which would be crossing the threshold of 7-8% and be in the vicinity of 8-9%. And today, the fundamentals when we talk about our debt to GDP, the government is in the vicinity of 80%, but very importantly, we often forget the private sector debt to GDP is in 50s. This is a stark contrast to, say, China or US, which are in 3 digits, over 200%. When you look at from a balance sheet problem, the banks have been recapitalized, the corporates have deleveraged. So we are talking of a context where we are very well placed. So the first thing should be consistency of policy. Yeah, and I see no reason why the government will veer away from this consistency of policy. The second is the work on recovery of the economy post the pandemic, then the sharp hit by the inflation, the relief to the poor, and the reforms, the 3 R's. That should continue in the direction in which the government has set the ball rolling.
Our expectations from the budget are based on 3 key themes. The first one being a budget that stimulates growth as has been in the previous budgets of the last few years. The second is supporting the infrastructure growth because infrastructure growth is key to the development of travel and hospitality business in India. And finally, a tourism booster. It is time that this sector gets a booster dose so that the sector that suffered the most, demonstrated the highest level of resilience, is not only coming back on its feet, rather is contributing the maximum in terms of new job creation as well as indirect job creation.
And well, moving on, divestment is a word that was used quite often over the past 2 years, especially with the government offloading stake to launch the biggest IPO on D Street yet, the LIC. But what is divestment all about and why is it an important tool for the government? Well, former Niti Aayog Vice Chair Rajiv Kumar is here to explain exactly that.
Disinvestment is a good name given for privatization, and basically what you have in this country and in several others is that the government has ownership of some very large assets or companies in the economy. Now there are clearly some of these companies and sectors where government ownership is clearly not required. Now nobody can argue, for example, that government should be running hotels, and which we run in this country. So this government has decided that it does not want to remain in areas which are non-strategic, and therefore it will privatize those areas and hand over these companies and these assets to the private sector. And that is the word which should be really called privatization, but and now it is called privatization, but earlier the term used was disinvestment.
Okay, and with that, we are absolutely out of time on this edition of Budget Cafe on ET Now. But don't go anywhere, because at ET Now we have a whole lineup for y'all for the budget. We'll be taking y'all through the budget, and that will be starting very soon for y'all, just at 7:30 a.m. So don't go anywhere. We'll be back with more budget news.
Nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, And each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000.
The market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
To be the next superpower, Maruti Suzuki Arena presents Rising Bharat Budget. Catch the most exhaustive.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines.
Their market analysis and best recommendations. Tune into The Budget only on ET Now.
Up steps Shepherd to take the first penalty of the night. You know, John, it doesn't matter. It goes to ground and the klaxon sounds. It's in, bottom left-hand corner, and it's a long way back up the motorway for those United fans. Puts the ball down and Rose. Oh, Davies gets a fingertip to it, but it's not.
Hello and welcome to Budget Coverage. This is ET Now, your budget headquarters.
ET Now, your budget destination, where the biggest voices will decode the budget. We bring you the who's who of India Inc. and the ones who have a seat at the high table. Along with a prolific think tank of corporate India and market veterans for a budget programming like never before. Decode the budget with the voices that matter. Budget 2023 with ET Now. Rise with India.
Our expectations from the budget are based on three key themes. The first one being a budget that stimulates growth, as has been in the previous budgets of the last few years. The second is supporting the infrastructure growth, because infrastructure growth is key to the development of travel and hospitality business in India. And finally, a tourism booster. It is time that this sector gets a booster dose so that the sector that suffered the most, demonstrated the highest level of resilience, is not only coming back on its feet, rather is contributing the maximum in terms of new job creation as well as indirect job creation.
This is how the markets also rejoice after the budget. You're watching us on the ET Now and ET Now Swadesh Budget Headquarters. Welcome all of you.
Good morning, Good morning, Aisha. Well, it's a big day. The fifth budget from the Union Finance Minister. In less than 5 hours from now, she would be standing on the floor of the Parliament, and it's going to be a budget like never before. The 3 C's she'll have to focus on. Number 1, the path of fiscal consolidation. Prioritize growth and keep the capital expenditure and the growth momentum strong. And let's hope there is no change on the capital gains tax.
Yeah, we're hoping that, Ajay, aren't we? Ki, after the budget, I hope there is no tampering for equity markets, and this is exactly how the markets behave. They're so brittle right now. I hope dhol baje.
Well, that's correct. बिल्कुल बात आप एकदम सही कह रही हैं, आयशा. Good morning, निकुंज. और कल ग्रोथ की बात करने की ये भागड़ा वाली जो हमारी एंट्री थी, वो बाजार की के साथ ही मेल खाती है. 120 पॉइंट एसजीएक्स निफ्टी गेन दिखा रहा है. कल इकोनॉमिक सर्वे ने ऑलरेडी ग्रोथ का माहौल बांध दिया है, और भारत एक चमकता हुआ सितारा है पूरी दुनिया में ग्रोथ को लेके. तो देखना ये होगा कि यूनियन बजट 2023 में गवर्नमेंट और फाइनेंस मिनिस्टर ग्रोथ के मोमेंटम को आगे ले जा पाती हैं और बाजार उसको कैसे रीड करता है. यही बात है. फिस्कल देखिए, हर बजट की एक प्रायोरिटी होती है. 2021 के बजट की प्रायोरिटी थी इकोनॉमी को संभालना, जिसे हम बोलेंगे सर्वाइवल. 2021 की प्रायोरिटी थी कि इकोनॉमी में ग्रोथ मोमेंटम इंटैक्ट रखना, जिसे हम बोलेंगे रिवाइवल. और 2021 की जो मेन मुद्दा रहेगा वह रहेगा थ्राइव. तो इस बजट में ऐसा क्या आ सकता है जिससे इंडियन इकोनॉमी एक जायंट लीप फॉरवर्ड करे, और यही हम आपके लिए आज आइडेंटिफाई करेंगे. हमारे साथ जुड़े रहिए. ET Now स्वदेश पर, ET Now इंग्लिश पर आप सोना जीत सकते हैं, आप पैसा बना सकते हैं, आप हमारे एक्सपीरियंस से बेनिफिट कर सकते हैं, और हम एक संकल्प आज लेते हैं कि इससे बेहतरीन बजट कवरेज ना आपने देखी है ना आप देखेंगे. जुड़े रहिए ET Now स्वदेश और ET Now इंग्लिश के साथ
दिन भर.
आज के वैश्विक परिस्थिति में भारत के बजट के तरफ न सिर्फ भारत का लेकिन पूरे विश्व का ध्यान है। मुझे पूरा भरोसा है निर्मला जी इन अपेक्षाओं को पूर्ण करने के लिए भरपूर प्रयास करेंगे।
Good morning, ladies and gentlemen. Welcome to your budget headquarters. Over the course of next few hours, we will discuss, debate, and also talk about the compulsions which are at play. What should markets expect? What are the anticipations? And what are the factors which will ensure that India really takes a giant leap forward? Now, the backdrop this time is strikingly different. In 2021, remember COVID crisis. The objective of the government was to focus on the survival of the economy. 2022, it was about revive the economic stability and revive the economic engine. But 2023, it's about thrive. So from survive to revive, and this year it is thrive. This is how the balance sheet of the government looks like. The most important number, as always, is fiscal deficit. Our analysis is indicating that fiscal deficit will be well under control. Tax revenue, that is the biggest hurrah for government. The estimates were conservative and the growth has been superlative. But a red mark on higher subsidies and lower disinvestment and telecom revenue. Net, tax revenue will ensure that the fiscal deficit at 6.4% is maintained. Lower subsidies, whether it is food or fertilizer, and the underlying growth of the economy will ensure that expenditure is also taken care of and fiscal prudence is not compromised. So the way we look at budget, these are the projected numbers. Fiscal deficit could be in the range of 5.8% or sub 6%. Nominal GDP growth, which is what we expect. Now remember, the hallmark of this government has been, they've been very conservative with their estimates. So estimates in a sense are going to be in and around the nominal GDP growth of 9 to 10%, and capital expenditure, which is what we want to understand, that how much would they be spending in terms of having the multiplier effect in infrastructure, railways, defense. We expect that number to be about 3% of GDP. So the 3 C's on which this year's budget would be rated, judged and debated would be the first C, consolidation. Walk on the path of fiscal prudence, but ensure that you are spending enough and necessary to ensure that the economy is picking up and it is headed in the right direction. But capital gains, yes, what will happen to LTCG and STCG, that is something which is of immense curiosity. But over the years, the budget exercise has been consistent. The focus has been on growth and creating the multiplier effect. So if status quo is maintained, I guess that would be called as a good and a grand budget.
So let's put into perspective what has been the market reaction over the past many budgets, 15 budgets that we're tracking, and find out how the markets have reacted. Now, while data does suggest that the influence of the budget on the markets has reduced year after year, one thing that does remain intact is the kind of volatility that we do see on budget day. Now here is the kind of data that we're tracking. You've got the budget day moves that we've tracked over the past many years, and here is what we have the data to suggest that on the budget day the moves have been fairly measured on the upside or on the downside. It was out of the last 15 years that the Nifty has closed in the green 8 times in total. In particular, it was in February 2021 when the Finance Minister Nirmala Sitharaman really seemed to have pleased the street. We got a resounding thumbs up with a solid 4.7% move on budget day that we saw that kind of a move. But otherwise, 7 times in the last 15 years, the Nifty has closed in the red. The biggest disappointment was in the year 2020. We were in the thick of COVID as well, just prior to that, and you had the markets declining about 2.5%. Now, let's also talk about the kind of move that we've witnessed in terms of volatility, because that definitely has been a sure shot. Here is in the last 15 budgets, we've seen majority of it which is closed in the green. This time around, in the run-up to the budget, you have the volatility which is at an 11-year high, and that's what we're seeing in the run-up to the budget this time around, as the focus is going to be, of course, on the 3 C's, the consolidation, capital gains, and of course, capex-related moves. That is going to be fairly critical. Now, the expectations as well is measured by how the market has moved in the run-up to the budget. The market has fallen on 2 of 3 occasions in the last 30 days and the post the budget, and the probability of such a fall rises only 80% if the market has risen in the last 30 days preceding the budget. And we've seen that it's been up both before and after. In the last 2 times only, we've seen the markets rally up 8 times and have ended up wrapping up 8 times lower after the budget announcement has been made. And that's pretty much what we've seen. But majority is we've seen the markets going in with a lot of nervousness and even wrapping up in the red post the budget announcement 11 times. Of course, we're mapping our data over the last 3 decades for the budget, and 8 times lower and higher post the budget. That has been on an instance in the last 3 decades for the last 8 times in total. Now this year, given the fact that the index has been down close to 1%, the Nifty, where the odds are stacked up that we could potentially see some sort of a positive surprise. So it's clearly a little bit difficult to actually predict what the markets could do on budget day, but that only remains to be seen basis the kind of announcements that we had. But given the fact that we've gone into the budget a little bit nervous, maybe the odds are, stacked in favor of, wrapping up in the green, but we'll have to wait and watch. That's really putting into context the budget and the market move.
Alright guys, budget is all about taxes, and this year is no different. LTCG and STCG. For an equity market participant, those taxes are important. In India, if one looks at the tax regime is not complicated, but it is very complex. Different categories have a different tax rate. Now, obviously, the government's intention is to simplify the tax structure, and they're committed to do that. But is this the right time to really bell the cat or go ahead with any kind of tinkering in the entire LTCG and the STG structure? So there is a difference in good to have tax versus need to have tax. One important differentiation for Indian equity investors and traders is that there is tax on dividend and there is STT. These are taxes which have worked like a charm for the government, and STT collections over the years have really gone higher. I personally, for one, maintain that equity is a different asset class. It should not be clubbed with other asset classes. And if there is a change in the entire LTCG and the STG tenure, or even for that matter rate, it could impact your STT collections. STT collections have worked like a charm for the government over the years now. Most of the experts we've spoken to are of the view there are 2 ways the taxation structure could change. Long term, the duration could go from 1 year to 2 years. That may not be such a swing event, more like a 400 to 500 point Nifty swing event, because markets are indirectly getting ready for it. But if there is a change in STCG, which is from 15% and if it goes to business income, that could inject a dimension of nervousness and the volatility in the market. So I continue to maintain there is a time for everything, and looking at the macro headwinds, and given that Indian equities already have a high tax, perhaps there is no need to change the capital tax structure.
All right, that's really setting the context as to what's expected from the budget. But I'm sure everyone is waiting with bated breath as to how the market is going to fare. We've put into perspective how we fared over the past many years, where 2021 was the massive rally that we saw. 2020 was a big disappointment from the market standpoint. Budget volatility has only increased, and it was at its peak in the last 11 years in budget 2022. Well, today we've got the budget bull ring for you, where we've got our experts, Naresh Mirani, Kunal Botra on the technicals, and we've got Sandeep Savarwal, who's graced us in our studio on the fundamental side. And they're going to keep you equipped with real-time ideas on the stock markets, get you views on the index, and tell you what you should be buying, selling, and holding. Good to have you all on board. Thanks so much for joining in on Budget Day, Sandeep. It is an exciting day for us, and should we get maybe a dhol over here to get things started? Are you getting out your boxing rings? Do you think that it's going to be a tough fight for the Bulls today?
So I think given that it's been a tough month for the Bulls till now in January, so I would think that the market's going in very light. There is very less positivity. So I wouldn't be too, let's say, afraid or scared of the budget. So I don't think people should be scared of the budget, especially given the global context in which we are operating today.
Yeah, and even given the fact that we at least have been standing out as compared to the rest of the globe. Kunal, let's get in your take. What about you, getting out those boxing gloves right now? Do you think that it's going to be sort of a calm, collected day, or there's going to be a lot of spikes, jagged edges, intraday volatility?
So I think volatility is a part of budget theme, but you know, there have been very interesting phenomena. If I remove 2022, 21, 20 and 19, all of the 3 years, the markets have corrected pre-budget. Post-budget, there has been a very big rally. And there is a very similar kind of a technical phenomenon which has happened every time. So we can just hope and expect that this time around as well, it's very, very similar.
Phenomena are the same this time around, at least going into the budget?
2019, 20 and 21.
Okay, no, but this time?
So,
are we expecting it pre?
So pre-budget, we've already seen a correction. Post-budget, hopefully if this phenomena plays out with perfection, then we can expect a post-budget rally.
Chalo, fingers crossed. Now, Naresh, let's get in your take on the index. We went in very quiet. Friday was, of course, the meltdown. We saw Monday as well. That sense of a pullback kicked in yesterday, but it was the broader markets that really stole the show. So, index level, what's your take?
So, in the last 2 days, the broader market has clearly suggested that the markets do not want to correct. The previous day, we did not break the lows of the previous day. The Nifty fell 150 points, the small cap did not. Yesterday, the small cap index was up almost 1.5 to 2% across the board, even 3% for some of the indices. That clearly tells you the market is waiting for a blowout move. And overall, if you look at the global indices, we have every index around the world near a breakout. So whether it is S&P 500 closer to 4100, we have Nifty which is still lagging behind. So I expect post-budget broader markets as well as the markets to do well. That's the view.
Okay, Sandeep, just wanted to get in your take as to what you're expecting. If at all we were to see some tinkering on the tax front, do you think that's going to be a huge disappointment from a market standpoint?
If they do something on capital gains tax, it will be a disappointment because they don't need to do it, and it will especially spoil the sentiments at a time when India has already been underperforming. So I think if they don't do anything on capital gains, that itself will be taken as positive. I think people will ignore everything else because X of that, Indian valuations have corrected, things are reasonable now, and I would think that the markets are set for an up move, X of any capital gains move which could spoil sentiments in the near term.
Okay, so fingers crossed that the mood isn't spoiled today in the markets, Nikunj, and that we have, the markets moving on expected lines, as there's going to be no rabbits pulled out of the hat by the finance minister this time in the budget.
Well, I really hope so. You know, Aisha, the template of the budget is very well defined budget. Prioritize growth, spend prudently, but also do fiscal consolidation. Difficult. Yeah. The ask from the market is don't change taxes. The ask for the economy is continue this good work in terms of capital expenditure. The ask by macroeconomist is that spend but bring the fiscal deficit down. Logically, you want government to spend more and bring the fiscal deficit down. Mathematically, is it possible? Yes, it's possible because tax collections have gone higher. So this time, if the template of the budget is oriented towards growth, consolidation on the right path and capital expenditure with no major tinkering in taxes, this would be a wow budget. And the market...
And I don't think that there is any reason for the finance minister to even tamper with taxes right now. And I'm purely talking about capital gains. I mean, they've just done such great amount of good work, starting off from demonetization, GST, RERA, what have you. I mean, think about it. Yes, we are ahead of elections, in 2024. But to please 95% of the population, I don't think the finance minister is going to derail what the 5% of people who invest in the country into the markets are doing. Because in any case, it's taxed money that you deploy in the markets, right?
So Aisha, there is a good to have tax, which we can say it's hygiene tax. Indian tax system is not complicated, but it is complex because of different asset classes at different rates. So you want to rationalize it at some point in time. So it's a good to have hygiene tax. That you are rationalizing everything. But is there need for it? The need for it is maybe not now, because STT has worked like a charm. Equity culture in India just about started. FIs are selling and domestic investors are coming back. That's protecting the equity market. And when you are talking about the Indian economy growing at an enviable pace, 6 to 7%, you need fresh capital. Capital can only come by foreign investors because India ultimately is capital deficient, and equity market in a sense have really championed the cause of capital raising. We've seen that even in the Adani FPO, how smoothly the issue went through.
Absolutely.
Ultimately it's the capital which came to rescue, it's equity capital which came through it. So my sense is that there is no need for that tax right now, because the additional benefits or the tax collection which will go up because of this tax may not be higher or significantly is going to change the needle when the fiscal situation is not bad and the tax collections in general are looking solid.
Yeah, absolutely. Well, the good news is, at least this morning ahead of the budget, the SGX Nifty is indicating a mildly positive start. And I say mildly because it's 0.5%. We, of course, need a lot more. But that can happen. Whether it will or not, that we will find out once the markets open, and of course once the finance minister does table the budget in Parliament. But for now, we're going to take a very quick break, come right back. We've got a lot of experts lined up on the other side. We're going to, of course, discuss stocks as well, pre-budget positioning, post-budget positioning, all of it.
Budget Master Contest.
General health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
What an entry, Nilesh. Roll. Like, what could you ask for?
So
what
good to have
else
you
could
back.
you ask for?
Okay, I just want to establish this interesting point, Aisha and Nilesh. Nilesh, you may have to just move slightly towards me. Just want to establish it for the benefit of our viewers. Now, this is the 52-week change in the market. Budget, say budget tak. And markets have just been flat. The mid-cap index also is similar kind of a move. The small cap index, slightly different. But the point, I guess, Aisha, Nilesh, I'm just trying to bring out here is that 2022 budget, the market expectations were high. The outperformance of 2021 was solid. Market approached the 2022 budget on a high note. Currently, the levels are the same, but the mood accepting the dhol which welcomed Nilesh, I guess from a market standpoint, is strikingly different. Would you agree with that?
Yes, I clearly think so. I think
the mood last year was way more buoyant than what the mood this year is, and therefore the expectations last year were way higher. This year, the general expectations are that it might end up being a populist budget because it's a year before the general elections. Markets are a little more quieter than what they were last year. So I think all in all, the expectations, honestly, I have not seen expectations as kind of subdued in the last many years as we see them today.
So what can really change the narrative? And I must say that you're being extremely, what shall I say, somber by calling them quiet. I don't think they're quiet. It's rather brittle. At least it has been, quite rough in the month of January. What can change the temperament? Not tampering on taxes, will that do the trick for the markets right now?
I think what we need right now is a budget which focuses on jobs, a budget which focuses on creating infrastructure, and a budget which probably leaves more in the hands of the middle class. What we are beginning to see is some kind of slowdown in demand, and to revive that, we will have to leave more in the hands of the middle class, which could mean in form of maybe raising the exemption limit, the tax exemption limit. I know it's going to be challenging and tough, that how do you allocate more for infrastructure, how do you allocate more for manufacturing, but I think the reality is we'll have to leave more for the middle class. And to me, that is something which would make this an extremely comprehensive and a very long-term oriented budget.
Okay, so, Aisha, there's just one wall, and I'm going to request my producer to file in the assumptions what we have made. These are consensus assumption on fiscal deficit, on growth, on revenue. That data point will just, come up on the screen. So what we've done is that these are consensus collated data points about the fiscal deficit, and that data point will just come up on your screen. So let's start with that data point. Fiscal deficit, anything under 6 is good news. Revenue assumption for FY24, anything between 9 to 10% realistic. That data point will just come up on your screen.
Oh, absolutely. I think if we can have a deficit below 6%, I think that's going to be music to for the markets. And of course, if revenue projections are around that number, I think that will be great. Both these two would honestly make this kind of pretty much a very, very strong budget.
Aisha?
But in particular, Nilesh, like we were chatting yesterday, you have a lot of expectations which drill down to various sectors in the markets as well. We know how the capex theme has now become so big. We know that the government is going to have its focus and thrust on healthcare, on education. But even various sectors like, if we can just have Nilesh's graphics on air as to what he's anticipating from the budget. Walk us through your list, and thereby which sectors would have sensitivity in today's trade.
So first and foremost, I clearly believe that this budget will have or should have a lot more for the infrastructure sector. We've seen areas like railways, roads, the kind of fillip that they have got. So clearly, I think boosting infrastructure, investing in infrastructure, and not just physical infrastructure, digital infrastructure, intellectual infrastructure, which is nothing but the social sectors like education, health. I think these are some of the big areas that clearly the budget will be focused on, and there's a lot more to look forward to the budget on that. The second big area is that we've seen oil and gas and alcoholic beverages are two big sectors. They're huge sectors, but they still...
Petroleum, gas, liquor under GST. Yes. That's your key demand, right?
These are huge sectors,
it is a state and a central topic here.
I think our job is to wish. Our job is to look forward to it. It's obviously the finance minister's discretion to essentially whether to kind of concede to these wishes or not. But I clearly believe that these are steps which I think are now overdue. They ought to be done in the interest of the economy, in the interest of finances, in the interest of business. So I think these are some of the areas that we need to look forward to. And the third area is, I think, the surcharges and the cesses on income tax, I think are huge. I think these need to be moderated, or probably best case scenario to be done away with.
Nilesh, one thing which really stood out in your budget wish list was that there was no D word, there was no disinvestment. All you said was professionalize some of the government-run companies like an FCI.
Yeah, absolutely. I mean, disinvestment is something which every year we expect, and it's had kind of a mixed response or a mixed outcome. There have been some really big ticket divestments like Air India and all of that, but some of the others have pretty much been work in progress for a long period of time. So I'm not quite sure whether, I mean, yes, we can keep talking about saying there should be more disinvestment, but whether it happens or not, is something which we have to see. But I think what is even more important is to professionalize some really large public sector undertakings and some large institutions that matter. For example, the Food Corporation of India. I think the food economy in India is a very, very large economy, a very large part of the economy. And I think somewhere professionalizing it, corporatizing it, and bringing it really some of the modern practices, I think will do a lot more good to the economy, to the food economy, and to farmers in general.
Before I wrap, I want to just look at two aspects here. We're going to pin it down to an individual theme or a budget stock list, menu card from Nilesh. And also I want to go back to the assumptions what we've made in terms of the consolidated numbers, the fiscal deficit number, the revenue tax number, the GDP growth number, and also the more important joker in the pack, the subsidy number. Now before that graphic just comes up, Nilesh, what is on your budget menu card? Stock number 1, stock number 2, stock number 3.
I probably would talk more in terms of,
I think... what the goal was for, Nilesh.
No, clearly the infra pack clearly is the area to really watch out for. And so out there, some of the capex oriented capital goods kind of companies is something that essentially will have a lot more in store for them from this budget. So be it railways, power, energy, transmission, these are clearly the sectors to watch out for.
So what this else? We have is the graph of L&T in the last 52 weeks. It's already given you an appreciation of 7.25%. Does the ambit have to widen itself from L&T to even the smaller ones?
Oh, absolutely. I mean, the reality is that there is a huge capex cycle which is starting to unfold. The investment cycle clearly in the last 1.5 years has really kind of in a way woken up. And in that of an environment, whenever there's a bull market in a sector, clearly the mid caps, small caps do always better than the large caps. We've seen this across technology in 2020, 2021, or any of the other sectors. It's clearly the mid to smaller companies which will kind of be the big outperformers in the infrastructure space.
Okay. Before we wrap, gut call at 3:30, will the doles will be on or the doles will not be there based on the budget?
The doles will be on. The doles will be on, not just at the end of the budget, but I think for the rest of the year.
Okay.
High five, come on, high five.
On that note, while we play the dhol, and we're going to save it for after the budget as well, fingers crossed on that, it's also time to get you a lowdown of all the expectations from North Block. What is the Finance Minister going to do? Here's our reporter team and all the budget khabar that they are picking up.
For you.
आज के वैश्विक परिस्थिति में भारत के बजट के तरफ न सिर्फ भारत का लेकिन पूरे विश्व का ध्यान है। मुझे पूरा भरोसा है निर्मला जी इन अपेक्षाओं को पूर्ण करने के लिए भरपूर प्रयास करेंगे।
Yes, a government may provide a special focus on infrastructure in the budget. Sources are informing that the capex-driven economic growth may be government priority amid tough global challenges. Overall capital expenditure target may go up by 25% to over rupees 9 lakh crore, which has seen a 123% jump in last 3 years. Sources are informing that the budgetary allocation for PM Gati Shakti Master Plan and National Infrastructure Pipeline may be increased. Budgetary allocation for PM Gati Shakti Master Plan may be increased by over 50%, which was rupees 20,000 crore for last year. Under PM Gati Shakti Master Plan, many projects have already been identified, and now government will provide its focus on implementation of these projects. Projects of railways, roads, and highways, airports, ports, priorities. Sources are also in Additional passengers amenities may be announced. Dedicated Gati Shakti cargo trains will get space in budgetary announcement. Apart from that, overall budget outlay for Jal Jeevan mission may be increased up to 25%, where government is trying to provide tap water facilities to every household by 2024. We can also see some announcement related to transmission sector, where government may provide roadmap for future investment in transmission sector to realize, evacuation of 500 gigawatt renewable energy. Some specific announcement could also be made related to Ladakh-Haryana transmission project.
The Modi government is all set to give a huge thrust to railways in the upcoming union budget with an aim to modernize and transform the rolling stock. Sources have indicated that the budgetary allocation for the financial year 2023-24 could be somewhere around rupees 1.9 lakh crore to 2 lakh crore, which is beyond 30% as compared to the last FY. So this budgetary allocation will be focused on introducing more semi-high-speed train. It is very likely that 500 new Vande Bharat trains will be announced in the budget for the next 3 to 5 years. That means 100 new Vande Bharat trains for each year. Not just Vande Bharat trains, hydrogen fuel based train is another area where railways is focusing, and it is very likely that 30 to 35 new hydrogen fuel based trains will be announced in the budget that will help railways to achieve net zero carbon emission target by year 2030. In addition to this, the modernization of rolling stock also include that 58,000 new wagons will be introduced, and these newly designed wagons will help railways to widen its freight basket. Along with the wagons, auto sector is where railways is focusing, and 4,000 very specialized wagons, or you can say the carrier coaches, will be introduced for the auto sector. Along with this, the safety is one such area where the funds will be allocated for the Kavach mechanism. More than 3,000 kilometers of tracks will be brought under Kavach mechanism. Also that the fencing of important rail routes will be brought in, and a separate fund will be allocated for the fencing of routes where semi-high-speed train or Vande Bharat trains will be running. So this will help railways to achieve semi-high-speed mobility. So these are a couple of important announcements that we can see in the upcoming union budget.
ET Now, your budget destination, where the biggest voices will decode the budget. We bring you the who's who of India Inc. and the ones who have a seat at the high table. Along with a prolific think tank of corporate India and market veterans for a budget programming like never before. Decode the budget with the voices that matter. Budget 2023 with ET Now. Rise with India.
Co-presented by NTT.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are
Now the real action starts. That's the Nifty. In last 1 year, markets have seen no change. The difference is that in the run-up to the 2022 budget, the market expectations were extremely high. But now expectations this time around are very low. And the levels have not changed at all. The small cap index in last 1 year, just no expectations. So can I say that this time around, even though nothing has changed in terms of a global environment and the positioning of the government, expectations are the lowest you've seen in a long time?
Yeah, Nikunj, I completely agree with that. So as we know, market works from euphoria to despair. So similarly, the sentiments work from huge expectations to extremely low expectations. So I think this time there is fear. What will the government do? Will it be totally socialist? Will it increase the capital gains tax? Will the structures change? So no one expects anything positive. So as far as my understanding goes. So to that extent, even if, let's say, hypothetically something negative comes, I think its impact will be limited to a few days. And on an overall basis, I think we are very well positioned as an economy. So markets, in my view, in 2023 will do well irrespective.
Okay, now let's look at the budget stocks. What we've done is that purely looked at 10 stocks, which in a sense really could be the budget theme. Push on energy, push on infrastructure. ITC, RIL, L&T, Tata Power, Maruti Suzuki. That's the lot number 1. Out of this lot, which to your mind could be the budget stock? Let's go back to the lot 1 thing, please.
So I think from the previous wall which we saw, I think L&T will should do well, because as it is, they are doing well, and if at all there will be a positivity due to the budget because the capex theme continues. And in my view, the government should do something for consumption. So I expect that, see, private sector capital investments has started. So government doesn't need to support as it used to earlier. But consumption has been hit by the high inflation. So they need to boost consumption. So the best way to do it is to reduce taxes, at least for the middle class. So if they do that, I think the consumption stocks do well. So I think Maruti will do well.
Okay. So your budget pick, first and second would be L&T and Maruti.
Yeah, from these 5 stocks.
Let's look at few more stocks. And these are 10 stocks which we've identified, which at least we feel that there could be a little bit of budget impetus. Hero MotoCorp, the same logic applies if there is a change in income tax rebate. Mahindra and Mahindra, again the same logic applies. But State Bank of India and BOB, PSU banks, if there is an incremental change in FPI limit, how positive that could be?
So given that these banks have already done well, so now they need a boost in performance to do well. So if there are some changes incrementally, it could be better. But I think from these stocks, my pick is M&M. So M&M I've held for a long time now. It's at an all-time high. It hit an all-time high yesterday. So I still believe that it gets advantage of a rural income resurgence. And on top of that, it's got a very strong product profile, which is also futuristic. And valuations are still not very expensive.
So I'm going to stack the stocks which Sandeep has identified for our viewers, and we'll call it Sandeep Sabharwal's budget trade. L&T, it's no ITC this time, by the way. It's L&T, it is Maruti and Mahindra.
That's right.
Anything else which is not part of the wall, which is part of your list?
Yeah, so I think government will do something on consumption. So to that extent, beaten down consumption names, which I wouldn't buy earlier, but which are down 30-40% from the top. So let's say something like a Bata. Peak was 2300, today it's at 1500. So I think a lot of the decline in earnings, valuations have got corrected. So I think that's something which I'll be looking at. Then from the mid-cap infrastructure theme, something like NCC, which has been doing well, but it's not as well recognized in terms of its valuation boost. So it still trades at 5-6 times earnings, so that could do well. And I think if something happens on the consumption side, we will see some of the durable names which have got beaten down could also come back. Something like a Voltas, Havels, which are down, like Voltas is down 40-50% from the top, Havels is down 30-40%. So I think these are things which people should have a look at.
So Sandeep, I'll request you to go to the bull ring. That's where all the action is, and that's where I think Avan would also be joining in a second now. So why don't you take your seat there? Thank you very much, and it was quite a grand welcome, Sandeep Sabharwal, I must say. I want to just recap the 3 C's, which we at ET Now, in a sense, are calling as the theme of this budget. The 3 C's. Consolidation, which is looking at how there are global uncertainty. 2023 at a global level is not off to a great start. It is going to be a fight and a toss-up between inflation and recession, and the global road, in a sense, has got a lot of dangerous turns ahead. The first C is to maintain fiscal discipline. That's the first C, consolidation. Second, capex, which means the finance minister will have to walk on the path of fiscal consolidation, keep the fiscal deficit in and just below 6%, and also ensure that enough and more stimulus is given to the economy via the infrastructure route or via the expenditure route to create a multiplier effect. And then third, capital gains. Now, from a market standpoint, the view with experts we've spoken to is that India has STT, equity culture has just about started, tax collections are strong, so the backdrop for a strong the backdrop for a change in the tax regime, whether it is LTCG and STG, is perhaps not there. I think that in a sense is going to be important from a real market standpoint. I think Avan is just about getting ready, and I'm going to just throw it to her. So I'll just wait for my director to give me the next directions in terms of what is coming on the show next. Okay, so that's the way in which I think the entire stack is. Tax revenues have been higher, subsidies have been lower, and disinvestment revenues have been lower. The 3 C's, I want to go back to that graphic once again. The 3 C's, which are going to be crucial in terms of a market understanding. The way forward, consolidation, capex, and capital gains. The 3 C, 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 C.
Oh yeah, absolutely. For now, the SGX Nifty is holding up about almost 0.5%. Some amount of respite at least is what we can hope when the markets open. That's only if we choose to follow what the SGX Nifty is doing. Let me also welcome on board Jahangir Aziz, MD and Head Emerging Market Economics Research at JP Morgan, joining in on the show right now. Jahangir, thank you so much for taking the time out and joining us today. I'm just taking a leaf out of the economic survey, which is clearly pegging the nominal FY24 GDP growth at 11%. With real GDP at 6.5%, is that a realistic number, you think, Jahangir?
So I think, the context in terms of how we are looking at, 23-24 is what will be the last 6 months of this fiscal year. So, if you just take the government's own estimates or, CSO's own estimates that the year as a whole, 22-23, is going to be 7%. You already had a 13.5% in the first quarter, you had a 6.3% in the second quarter. So just by CSOs and the government's own estimates for this year, in the second half of this fiscal year, the run rate of growth needs to fall to around 4%. So we will be going into 23-24 fiscal year with the previous 6 months at a run rate of 4%. And these are not our growth numbers, these are the government's growth numbers. The government itself is saying that the run rate is going to slow to 4% in the second half of this year. Now, if you're going to think about 23-24, and if you're saying that, look, growth is going to be 6.5, 7, whatever the number is, then essentially you're saying that of 6 months of 4% growth rate now needs to jump by about 200 basis points for 4 straight quarters on average in the remaining 4 quarters. Now, that's doable, provided your global economy was going to support you. Look at the global economy. In the global economy, I know that we are fading U.S. recession risks in the near term, but there is a U.S. recession still in play in the end of the year and into 24. China is reopening, that is true, but the China reopening spillover this time isn't going to be anything like 2010-11, because this time around, China's growth is going to be powered by consumption and by services sector recovery, which has very little linkages to the rest of the world. We know that the European recession has been taken out because, natural gas prices have fallen, but that isn't really that strong a lift. So overall, the global economy in 23-24 is going to slow down. This is a very hard task to say that, India is going to grow 200 basis points faster from the second half of the current fiscal year. And I'm just going by government estimates when the global economy is actually going to slow down. So I think it's going to be very difficult to get growth beyond, I would say, 5%. And that is, again, I'm adding 100 basis points of improvement in the growth rate in 23-24 compared to the second half of this fiscal year.
Sure. But Jahangir, India is still the fastest growing large economy. Tell us a little bit about your views on how growth is pegged to be in FY24, which the survey does highlight. And the larger goal for India is eventually to become a $5 trillion economy. How quickly you think we can get there?
Look, the $5 trillion, ambition is much more aspirational. It is good to aspirational. It's good to have something to target. But I think to make it to a 5 trillion or whatever the size of the economy is doesn't really matter. To grow faster, I think the Indian economy needs to get through probably one of the most difficult periods coming ahead, which is this year, where we do not know how far the Fed will go. We think that the Fed is going to do on February 1st, they'll do one more rate hike, and then they will do one more, and then that's when they're going to pause. But the other central banks, both Bank of England, ECB, and even now Bank of Japan are lifting rates. So the global financial conditions are not going to ease that much. The only benefit that we right now have, or the tailwind that we right now have, is that the dollar has weakened, and most likely the dollar is going to weaken. But if you look around the world, what is happening to the rest of the world? I think the rest of the world is slowing, barring China. And again, as I said, China's growth is not being driven by industry and infrastructure, so there's a lot of spillover to the rest of the world. It is going to be driven by services consumption, and that does not have a lot of spillover into the world. So I think that in this period, in the next year, 18 months, I think what is far more important for India in order to meet its 5 trillion target, or whatever the target is to actually survive 23-24 without losing macroeconomic stability. And I think that's going to be the key. It's going to be maintaining and preserving macro stability in a very difficult global environment, and then making sure that once we go through this period, we then do things on the reform side, et cetera, and get to a faster growth trajectory.
Jahangir, just request you to hold on. We're going to come right back to you and get in a better picture on the macros. But for now, let's go right back to the bull ring, get those real-time stock recommendations, reconnect with our market guests to find out some of their top large cap recommendations then. And Sandeep, I know we probed you before and you didn't share anything. Would you like to share live any top large cap ideas?
So I think like we discussed on the wall, L&T from the capital expenditure cycle theme, and Maruti from consumption boost theme if there are some tax breaks for the middle class. I think these two from the Nifty look good to me.
Okay, that's Maruti as well as L&T. And is it going to be a similar view, Kunal, when it comes to your large cap bets, or are you going full tilt financials?
No, I think Maruti is also one of the picks which I had highlighted. I think it's a stock which is now trying to get into a recovery phase. So I believe that, and auto apparently has been one of the best performing sectors so far this year. So I would be bullish on Maruti. Titan is the other stock which I would be bullish on because of the fact that the stock has come back towards a very strong oversold territory. So the risk reward initiating longs over here is very, very positive and attractive for Titan. So that's the other stock from the large cap space.
Okay, great minds think alike. It's Maruti that's both on Sandeep as well as Kunal's radar. Titan also great risk reward. What about you, Naresh? Are you also going to jump on the bandwagon and say Maruti?
No, so I'll be on the PSU bandwagon. So one would be the largest. So one would be the largest PSU bank, SBI. The stock is back to 530, 540 levels, which is where it was almost 12 to 16 months back also. This used to be a resistance for the move before, and now this should act as a support. So this is a good entry point for the medium term, and it has underperformed the whole PSU basket. Second would be a buy on NTPC, which is another stock which is a defensive but has shown a lot of relative strength and is now getting into a momentum move. So like NTPC in the and overall the whole power sector looks interesting.
All right, there you have it. I should have known that Naresh would not waver. He sticks to the PSUs, so continuing to bet on NTPC as well as SBI. So there you have it, Aisha. Top large cap recommendations right here from the bull ring.
Oh yeah, absolutely. A lot of large cap ideas, but stay right there. We're not done yet. We're going to get you some mid cap as well as small cap ideas too, with that in just a bit. Let me now welcome on board Adrian Movat, emerging market equity strategist, joining in on the show right now. He's been an India fan and an India observer for many, many years now. Adrian, hi, good morning. Welcome to ET Now. How many years of tracking India?
Gosh, I suppose since the 1990s, so 30 odd years.
My God. Okay. So, Adrian, something very interesting happening in India. While long-term the conviction stands, in the last month or so, probably because of some of the money flowing to underperforming markets like Hong Kong, China, and other EMs or what have you, you are seeing an exodus of FII money out of India in just the last 1 month or so. And of course, we've got some domestic issues like, all that was going on with the Adani group of stocks as well. But that said, can the budget really pull a rabbit out of the hat and bring FIIs back to India equities?
I don't think the budget can bring a rabbit out of the hat that would really make people change their view on the Indian economy and the Indian equity market relative to markets like China, Korea, Taiwan, where we've gone from a very negative view to a more constructive view. Jahangir, who you were interviewing earlier, sort of highlighted the constraints that the finance minister faces in terms of big policy changes. I mean, I would sort of sum up that there's a bit of a favorable story for the Indian budget insofar as urea prices, fertilizer prices are down, food prices in terms of the impacts on subsidies are a little bit better, and that's allowing the fiscal consolidation. There is an expectation of higher capex, but then that's a dollar amount or a rupee amount of capex, I should say. Remember that costs have gone up, so the real impact of that higher capex may be modest. So I don't see this budget being a big theme in terms of changing the asset allocation that EM investors currently have.
So then what will do the trick, Adrian? Because, you know, we're also approaching elections, and popular belief is that the budget may have a bit of a populist tone because it is the budget ahead of the big general elections.
Well, but you see, populist budgets typically are not things that international investors look on that favorably. There may be a few sectors at the margin that benefit from this. But remember that directly playing the Indian consumer is relatively difficult with the composition of the Indian stock market. So I don't see the budget or the election cycle being an important driver for asset allocation decisions. And remember, we're talking here about a relative story, and it is worth remembering just how well India has done relative to the other major emerging markets over the last couple of years. And so having a relatively short period of underperformance and asset allocation away from India is probably an acceptable price to pay after such a strong period.
Right. Adrian, hang in there. I'm going to, get Jahangir back into the conversation. And Jahangir, in the current backdrop, you're mentioning in your report on the budget, you've detailed out what priorities the government has had in the last 15 years. What trends do you see play out in the last 15 years, and what do you think is going to be a continuous theme in that sense?
As I said, our key priority should be that in 23-24, we need to preserve macro stability. We cannot be adventurous. We should not be overambitious. The Achilles heel of India has always been its current account deficit. Whenever current account deficit had hit this 3.5% mark, we have had trouble. We've had trouble in 2012, 2013. We've had trouble every time this 3%, 3.5% number is breached. And I think if you're going to push growth either through expansive fiscal policy, or you're going to push growth through massive incentives for the private sector to start investing, suddenly without taking into account what is happening in the global economy. And if that 3.5% is breached, I think macroeconomic instability will become a serious question, and there is no reason why we should basically sacrifice medium-term growth just because in the next, 2 quarters or 3 quarters or 4 quarters, we wanted a bit of higher growth through these kinds of expansionary policies.
Adrian, now the markets want government should walk a path of fiscal consolidation, yet continue to spend on infrastructure and productive capex. The government has to ensure that the demand is taken care at the bottom of the pyramid. The global modern markets are indicating that, look, if fiscal deficit is punctured, that could have a problem in terms of where the next year borrowing target would move. How do you think the balancing act realistically would work?
Well, as I said earlier, that there has been some help in that energy prices have come down, and therefore nitrogen-based fertilizer prices have come off their highs. And perhaps there's a little bit less pressure on the food side of things. So the market is helping out the finance minister here. But I would really want to reiterate what Jahangir was just saying. Now, let's not forget that global capital markets went through their worst year in many decades, whether they were bonds or equities. And it was related to economic instability, particularly around inflation. And I think what capital market observers, particularly those that are willing to own India at its higher valuations than you see in the rest of EM, are owning a more expensive India because they value the macro stability. They value a more conservative type of budget and finance policy. They sort of value an environment where perhaps policy is stable as opposed to giving short-term benefits. So it's not an exciting story, but if we can have a consistency, if we can reduce the fiscal deficit, which seems to be in the projections, and therefore reduce the savings deficit within the overall economy, then that should help to stabilize the current account deficit.
Sure. You know, Nikunj, what Adrian just told me, he's been tracking India for the last 30 years, since 1999.
I didn't realize that.
Yeah, well, longer than both of us. Okay, Adrian, always great to have you on ET Now. Pleasure speaking with you, and we'll catch up after the budget again soon. And Jahangir, glad that you also could stay up and take time out to speak with us today. On that note, we're going to take a very quick break, but don't go anywhere. Our chat with experts and what to expect from Budget 2023 continues on the other side.
Publicly listed company, we have access to capital, we have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company, we have access to capital, we have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Watching our budget coverage live from the ET Now headquarters here in Mumbai, counting down to the budget in just a few hours from now. 11 a.m. is when the finance minister is going to be presenting the budget in Parliament. But that said, let's quickly take stock of what the Asian markets are up to, and more importantly what the SGX Nifty is indicating, because of late one has seen that we've been completely decoupled from what the rest of the world has been doing. That said, right now the SGX Nifty is holding up about 0.5%, so it's maintaining its steady ground. And Asia as well is not looking bad at all. You've got Korea holding up 0.6%. Japan is mildly in the green. Hong Kong, Shanghai, though, a lot tempered in today's trade. But since we're anticipating what is that we can expect from the budget this time, let me now welcome on board our next expert, Santanu Sengupta, India economist at Goldman Sachs, joins in on the show right now. Santanu, great to have you today on ET Now. Santanu, just yesterday the economic survey pegged the nominal FY24 GDP growth at 11%, with real GDP at 6.5%. Wanted to understand, like I was chatting with Jahangir as well earlier, if that's realistic, you think?
Yes, thank you for having me on the show. We think that 11% is a relatively realistic number for nominal GDP growth for fiscal year 24. We are looking at a similar number in the budget estimates that we have built in. We think that real growth could be in the region of 6.5%, and thereafter, if you have about 5.5% odd inflation, you would land up with a nominal GDP growth of about 11%. For fiscal year 24.
Now, the other big question is Indian economy is growing, and Indian economy is growing at a run rate which perhaps is one of the fastest in the world. So the question is that how far do you think it will take, or how long do you think it will take for India to reach the $5 trillion mark?
Right. So if you think about 2023 in terms of a calendar year basis, from 2022 calendar year to 23 calendar year, our view is that you're going to slow down by about 1 percentage point. So you grew at roughly 7% in 22, you'll be growing in our view at roughly 6% in 23. But this slowdown is just coming back towards your potential growth. So we think India's potential growth is around the 6% mark. So I would think that you are at about trend or at about potential in terms of where you're getting to in terms of the growth number in calendar year 23 or in fiscal year 24. If you think about the $5 trillion mark, our view is that India grows in the region of about 6.5% over the next 3 to 4 years in the forecast horizon. Given the FX forecast that we have, we think that India can get to a $5 trillion economy by about 2026 or fiscal year 27.
Right. You know, Santanu, the economic survey also flagged the current account deficit as a key monitorable given the possibility of rupee depreciation. I wanted to understand how is it that you're viewing this and what are the key macro risks that you currently see for India?
So in terms of the current account deficit, we are looking at the current account deficit in the region of about 3% of GDP. Obviously, depending on where oil prices ultimately settle, but the rough number that we are looking at is about 3% of GDP. Now, if you look at the current account deficit from the macro cycle point of view, you are trying to grow investments and you're entering into an investment cycle. At the same time, if you have a wide fiscal deficit, it's therefore obvious that the current account deficit will be wide because to fund the investment cycle, you will have intermediate imports of capital goods, transport equipment, and so on. This is even apart from where oil prices settle and so forth. So therefore, our view is that as long as India is growing fast or trying to boost the investment cycle, with a large fiscal deficit, you will be having a wide current account deficit. On the INR, though, our view is that you will see about 83 in the near term on the 3-month horizon on the INR, dollar INR, but thereafter we expect it to actually flatten out or appreciate a little bit towards 82. And the reason is because what happens ultimately to the dollar INR is a function of what our view is on the dollar. And we think that the dollar would likely weaken over the year 2023.
Right. Santanu, lastly, in your view, what are the 3 key metrics that investors here in India and abroad, of course, should look out for in the budget to assess how investor-friendly the budget is?
I think investors would be keenly watching the commitment to fiscal consolidation. As I pointed out earlier, it is important from managing your overall public debt to GDP, and it is also important to signal to the market how committed the government is on fiscal consolidation. So that's the macro risk part. The second thing that investors would likely be watching out for is how much of expenditure allocation the government decides within this consolidation, of course, how much of expenditure allocation they decide on capital expenditure versus revenue expenditure. Our expectation is that the government, which has shown great commitment towards CapEx over the last few years, will continue with that tradition in fiscal year 24 as well. So capital expenditure we would expect to be maintained at 3% of GDP, which means it will grow at the nominal GDP rate. And finally, what the government decides to do on subsidies. The food subsidy part is well known. We'll have to see what the government does on fertilizer subsidies.
Okay. All right, Shantanu, really appreciate your time. So glad you could join us. Now 9 o'clock, pre-open rates, 4 minutes to go. It's a big morning. It's a big morning considering the positioning of the market. Just such a busy day for us. There is budget, Adani FPOs sail through, and guess what? There's FOMC tonight.
Yes, that's going to be the big one, is it not?
So you just in middle of earnings season, budget, FOMC meeting, a sell-off in Adani group of stocks, a shakeout in some of the PSU banks.
got subscribed fully.
It's quite incredible.
And some marquee names. I mean, names you typically don't hear of, but India's largest FPO, they all participated. All the ultra HNI, I mean, HNI is actually a small word to use for them, but the big Doyen family offices have all put in money into the Adani FPO.
Yeah, there are 2-3 things to look at here, Aisha. Number one is the spirit. The spirit with India Inc. has supported one another. Yeah. Normally there are
there are corporate rivalries, business always has corporate rivalries, but this time around when there has been a targeted attack on a corporate group, the India Inc. in a sense has rallied around. I think that's great news. Second, from a market standpoint, this is a big relief. These were the poster boys.
Yeah.
These stocks, in a sense, have really represented the bull market.
It shook the market.
It shook the market.
I mean, let's not sugarcoat it. It shook the market.
Exactly, it shook the market.
Yeah.
So that entire overhang of an FPO is over. But I think what will happen, Aisha, and that's my personal sense, is that when you have a churn, it's like, if I may use the word Hindi, mein samudra manthan.
Yeah.
Good and bad, nectar and poison, it gets separated. The similar phenomenon could be at play in Adani group of stocks. There was a rising tide phenomenon in 2021 and 2022. Everything which had a prefix and a suffix Adani went higher. That may not be the case. Now markets would say that where do we find a greater degree of comfort and higher degree of near-term visibility? So the cement companies, Adani Port, ACC Ambuja, some of the companies where near-term predictability is very high, you may actually see outperformance coming there. And the Adani group of companies, which in a sense have seen a linear move, now actually may see a very differentiated kind of a pattern going forward.
Since we're talking about the FPO, it's the big network exclusive that we have for you. The Adani Group acquired the strategic Israeli port of Haifa for $1.2 billion. And my colleague Gurpreet Chinna spoke with none other than Gautam Adani himself to decode what lies at the heart of this investment and, of course, his view on the FPO going off so smoothly.
ये इसका स्ट्रेटेजिक मेडिटेरियन सी के ऊपर है एंड वी आर रियली फीलिंग वेरी प्राउड ऑफ इन्वेस्टमेंट इन दिस हाइफा पोर्ट एंड इट इज अ very strategically and the relationship between India and Israel, that friendships we have to strengthen that, and this investment in Haifa port is one of the largest port of Israel and it is well connected.
तो सर अगर बात करें तो can we say gateway for Europe and Asia also?
Both. On other side also, later on it will be connected properly with connecting to the Saudi Arabia also.
And if we can talk about the way we have seen that China is trying to have a road links also through the seaports, are we going to have a better connectivity?
This will be a much better connectivity.
Sir, and sir, today we have seen that Hindenburg's, that controversy is going on. You have already given a very long clarification on this thing. Anything you want to convey because you feel that it's an attack on India?
Besides, basically, of course, it is attack on India is one part, but ultimately, end of the day, we have completed our FPO, irrespective of what basically they have said, and I am really thankful to all our investors.
Well, the finance minister, you could see she was there outside the knock block. Instead of a briefcase, well, things have changed, haven't they? Now it's a tablet, and I think she's there you see, a motorcade now is leaving for the parliament. So there you go. Less than 2 hours from now, Union Finance Minister Nirmala Sitharaman would rise on the floor of the parliament and present her 5th budget. This time around, the backdrop is supportive. The tax collections are strong. Globally, the uncertainties are high. So can she really walk on the path of fiscal consolidation, commit to a higher capital expenditure, ensure that the middle class and the taxpayer is being taken care of, and stimulate the economy, and please rating agencies along with the voter bank. So it's not going to be an easy budget to call out for, but looking at the balance sheet of the government, I think this is the best balance sheet and the best economic backdrop what we've seen in a long time. Ironically, market expectations this time are low. Market expectations are limited. There is a sense of, if there was a sense of excitement same time last year, this time around there is a sense of fear. And Aisha, same time last year the watchword was greed and excitement. This time it's fear and nervousness.
1 year. Anything can change.
Anything can change.
Yeah. But you know, the good thing is that right now I was just observing the pre-open rates and you've got a strong start. At least the pre-open rate seems to be indicating that. So it's a 1.25% move up for the Nifty, and a couple of names that I definitely want to highlight. Let's see what Adani Enterprises and that group of stocks are up to, what Adani Ports, Ambuja, ACC, Adani Wilmar, etc. are doing currently in trade. And then, of course, the entire PSU pack. All the experts, Nikunj, that we've been talking to, they've been talking about the capex and the manufacturing theme, and it is the PSUs which clearly seem to be the favored bet. Sandeep Sabharwal was talking about as to how L&T is his top draw. He was also talking about whether or not the finance minister is going to put more hands in the money of more money in the hands of the middle class,
Yes.
and whether that's going to middle class. Taxpayer. Whether that's going to really, sort of propel some of the consumption names like Maruti, for instance. We've seen how the last year belonged to an M&M and Tata Motors, TVS Motors, I beg your pardon. Perhaps this year could be a Tata Motors and a Maruti year. So yes, the entire PSU pack, I was just looking at some of the names from yesterday, be it a BEL, BHEL, PNB, REC, Chambal Fertilizers. These were all your top trades, and maybe today also could be very well that day. But here's Sridhar Sivaram from Enam Holdings telling us what he's anticipating from the budget, and in particular from capital gains tax.
If I connect the dots and listening to what Mr. Bajaj had to say, and some of the other comments that we have seen, this is what I think may happen, that is basically talking of rationalizing the tenure for long term. So today, if you see, the long-term capital gains for equity is 1 year, for real estate and REITs is 2 years, and for debt is 3 years. So you're really talking of rationalizing this. It's highly possible that everything moves to 3 years. Okay, so that's number one. The second is that the difference between a long-term and short-term is only 5%. So you're talking of 10% for long-term and 15% for short-term. That seems too less. It's highly possible that 15 goes up, maybe to 20, worst case to marginal tax, but we'll know in the budget. The other thing is that the government is looking at rationalizing all savings products which are tax-free today. So they've already, sort of plugged the loophole with capital gains, with say insurance in Europe. There are other insurance products which are tax-free. So what we hear is that is the other possible tinkering around which the government could do. We don't know how this plays out and what all come. If the worst case comes in everything, then that's bad. Which is why I said that some bit is already priced in, and some bit is not. So we will get to know more on the budget day as
budget will do what it has to do, but I don't think your long-term portfolios can change too much. Yes, the flavor could be PSUs, but that's already been all of 2022. So Aman is right here. I think we should take it across to our chartist, and guess who's with us? Sanjeev Bhasin from New Delhi.
Good morning, sir.
Busy on his calls.
Subah samay kiska phone aa? Who called you early in the morning?
He has 3 phones, Nikunj.
Oh, I
so
didn't
it could be
realize.
anyone. Yeah.
One for mid-cap stock, small-cap stock, large-cap stock.
So what shall we start with? Mid-cap stocks?
Mid-cap stocks.
Chaliye, start.
So Sanjeev, run us through your top mid-cap bet.
So both are banks. First one is Bank of Baroda. I think the numbers, Avan, on the third will be most stellar. The best quarter you have ever seen. And I think that PSU banks, if you just took the numbers of PNB, 85% provision coverage ratios tells me that they are fully provisioned. and the next 2 years actually belong to them. So Bank of Baroda is my top pick. Second would be IDFC First. I think Vaidyanathan is arguably one of the best bankers I've known, and this stock is poised to go from here to much higher levels. I would say the first level could be 75, 78, and we'll take it from there. But this stock is going to be a big outperformer. On the back that he has transformed the bank into a lean, mean machine, and on the retail side, they're doing extremely well. You can add one more name where I think there has been a lot of pessimism on solar panels and so on. But just to give you a brief, SW Solar 375, 40% was bought by Reliance Energy. Their stock is 275. They have an order book of 4 gigawatts. By April, that will turn into 32 gigawatts, out of which 24 is external, 8 is through internal. You can imagine the potential what solar energy and solar panels have. By the way, they are the lowest cost solar panel maker in the world now. And if you are saying the next 3 months, 3 years, it's the next 30 years which is all about solar. So this stock can be a 5-bagger from here. But as a caveat, as a disclaimer, we are fully invested in this stock, so we have biased interest. But I can tell you this stock is a doubler in this year itself, Avan.
This is a very, very interesting
Buy
name.
now, put all your money.
I was just going to come to it. This is a very interesting name that you're talking about. Tell us a little bit more. What is their order book right now? What is the visibility like, SW Solar?
So like I said, see, the past was little murky because Shahpurji Palonji had gone into a lot of countries and places like Argentina and all had a lot of default. So they had to. Now Reliance has cleansed the balance sheet, Reliance in it. And the future belongs to green and clean and solar paneling. Aisha, like you said, they have an order book of 4 gigawatts, which in April can go to 32 gigawatts. This is from internal sources. You can imagine a 5-fold jump and what it means for the next 2 years' earning. It has an equity of 18 crores, so you'll find hard to get in and get out. But please put some money and stay put. Because you're not looking at the next 3 years, you're looking at the next 30 years. This has the potential of being a 5-bagger from here. Mind my words.
And you're hitting the table and giving a
I'm thumping the table. Bank of Baroda, IDFC First and SW Solar and 18,500 by next week on Nifty.
Kunal?
Okay. Kunal is...
Doesn't have 3 phones, but views here.
मैं तो निफ्टी को रेंज में देख रहा था ये तो ब्रेकआउट हो रहा है
Let's hope that on the budget day we get a breakout finally of this boring range which we have been.
Okay, Avan.
Yeah, and I see that very cool pen that's going to throw up some interesting stock recommendations that you're flagging off. Now we heard financials. What is it that you're looking at from the mid-cap standpoint?
So I'm targeting...
Like Harry Potter kind of a thing.
Yeah,
pen
exactly.
And I'm going to create magic and stock idea comes up.
Yeah, the bond.
Even I'm intrigued of how this pen would actually showcase. But then the 2 stocks which I would want to highlight, and 2 of them are completely different in terms of the price characteristic. One of them is Trent. Now the stock has done exceptionally well in the last 1 year. Surprisingly, in the last 3-4 months, the stock has corrected by 30%. But I think at current levels of 1200, I think it's a very good risk-reward buy for Trent at current levels. So I'll be very bullish on the stock. 1300ish is where I would keep the targets for the stock and 1150 as a stop loss. We are not talking about the metal space as such, but I think SAIL is one of the potential, which has been an underperformer, but which I believe can scale up significantly high from current levels. So that's the other stock which I would be very bullish on. I would expect SAIL to go back to the 3-digit mark this time around.
Okay, you clearly like Tata Group stocks. You picked out Titan and now you're picking out Trent and yes, of course, SAIL. Maybe we'll get the magic on the pen going for our small cap recommendations. But Naresh, let's find out. Are you sticking to the PSUs?
So not sticking to the PSUs, but still into power and financials.
Okay.
The stock has gone through a sideways phase for the last 12 to 18 months. So there was a period of time wherein it was one of the best movers in 2020-21, and now it has made a good base at 180 to 200. So I expect it to slowly scale up towards the 250-300 mark. Second is about Mahindra and Mahindra Financial. Now this is a stock which has been an underperformer for the last whole decade. Finally, over the last few months, it has started outperforming. And it has now given a breakout on a multi-year chart on a 2-3 year basis. So I expect this to take leadership, and also in the current correction, this has shown a lot of relative strength. It has not corrected as such. So I expect this one to go towards 260 to 300 as well.
I'm just going to recap the stocks in the bull ring. I'm just going to stand for a moment. And Avan, I think let's recap the ideas. The large cap ideas, what do we have from our experts?
So some of the top recommendations within the large cap space, you were looking at a Maruti as well as a Titan coming in.
So
you were
Maruti
saying
and Titan.
consumption.
Okay, Maruti and Titan from Kunal. That's the large cap idea. Our viewers, please take notice of it.
And by the way, great minds think alike, because Sandeep Sabharwal as well, who is sitting right here, was also betting on Maruti. And you guys were talking about it earlier as well, that consumption boost, and clearly how this could maybe be Maruti's year.
And Naresh, what's your large cap idea?
So that would be SBI and NTPC still sticking on to the PSU bandwagon.
Okay, so lots of ideas coming in. I would, urge our viewers to take note of it. But remember, watch ET now and will gold coins today. The question of the gold coin is just going to, come up on your screen. Basin Saab must say there was a Punjabi tadka in your voice today when you thumbed the table and said that Nifty hoga 18,500. Kunal, Punjabi tadka in your voice.
Absolutely.
You have to make a comeback. Resonate that. Wonderful. 2 minutes to go. It's a big day. It's a decider. I'm going to take, my seat back again, and maybe we'll try and capture the, market opening from the wall per se. It would be good to, go there. But yeah, I think what is crucial here is that it's an important day, considering the backdrop. Adani FPO, Adani Enterprise FPO is sailed through. Market positioning is really nervous, and there is a sense of fear in the market ahead of the budget positioning. And then if you look at the global event tonight is FOMC. So Aisha, I think we can easily go up to the wall right now.
Yeah, you do that. I'm just going to quickly recap the first question that we're going to be asking. Remember, we're running the gold contest. Get these answers right by watching ET now, and you can win gold coins today. So who is going to be presenting Budget 2023 today? That's an easy one. Your first option is whether it's going to be Prime Minister Narendra Modi, B, Finance Minister, or C, the President. Send us your answers. You've got the SMS numbers running in on your screens. We're going to be randomly picking up 10 winners by the end of today. The contest, of course, closes at 4 p.m. So continue watching ET now. Every hour, we're going to throw up a new question. Send us your answers. And who knows, maybe you can win a gold coin from us. But Nikunj, we're getting set for the market open, so I'm going to hand it to you while I join you in seconds from now.
All set to open the first rates any second now. It's a flat start for benchmark indices. Let's look at the market breadth right now. I think we'll just wait for a minute for the market rates to update right now on the wall.
Your advanced decline ratio is right at the bottom there, yeah.
I think the Sensex and the Nifty is just taking a little bit of time to load up. Let's take this wall out right now. Aisha, maybe you want to take over. There you go. The first rates now are going to be pouring in any second. The rates on the wall will start changing.
It's a great start actually, Nikunj. We're holding up 0.6%. We're 0.5% higher for both the Sensex and the Nifty, as I can see. The Nifty IT is the one which is holding out, and actually it's banks which are doing the magic, holding up almost 1% as we speak right now. SBI up 1.25%. I can see a big move coming in on ICICI Bank as well, holding up a good 1.5%. And then let's just bring up all the Adani group of stocks. The FPO gets subscribed fully. It's a success, the FPO. Adani Ports holding up very smartly in trade. I can see almost a 2% uptick coming in there. Adani Enterprises is going to come up for you on your screens next. If we can just have those stocks flash up for you on your screens. The market breadth as well is looking positive as I see right now. 1301 advances within the entire NSE gamut, and that's really not a bad count. So ahead of the budget, at least, we're trying to edge up to that 17,800 print so far, at least. We're looking good. In fact, since we're getting the first rates, I'm going to quickly take it across to Kunal as well as Naresh and get in their perspective on what they're making of the first moves on budget day. While, of course, budget announcement is a little more than an hour away, but let's see what the market pre-positioning is looking like. Kunal, some amount of relief, thankfully.
Well, I think it's a very enthusiastic start for the markets. And I think it's good that we are seeing short covering as well, which is coming by in the indices. So if it's a blend of short covering, supported by news, supported by events which probably happen post-budget, then I think it's going to be a perfect tadka for the markets to probably scale past to 18,500.
We're waiting for lunch already, aren't we, Naresh? Nifty Bank actually, as the first rates seem to be indicating, that's the one which is the leading sector.
Yeah, so we are seeing that recovery getting stronger and stronger, and more importantly, we are also setting up for a breakout over the global indices as well. Yesterday, we were very close to 4,100 on S&P 500. Dollar index continues to break down. So all we need is a budget which is neutral to positive, and that could trigger the markets itself. Not even expecting good things.
Sure, absolutely. I'm going to come back to you guys for first trades, the trades that you're punching in right now. But Sanjeev, I think a big uncertainty also got lifted with the Adani FPO getting subscribed.
Correct. And, you know, Aisha, we've had the worst January start ever. At a time when global indices have had the best rebound since 2009. So why the underperformance? The events are over. You have the Fed pivot today, for which there will be little, but it's almost certain that 25 basis point and no more. Now look at the, you know, don't miss the woods for the trees. Dollar is going into double digits, which means metals, commodities, China reopening is a big trade. And India's own banking sector results. You know, the proof of the pudding lies in the results. Look at Maruti, look at M&M hit an all-time high yesterday. So
Indian hotels,
exactly.
The analysts couldn't believe the conference call.
So then either you buy this fear, or then you stay on the lines and come back at 18.5 when we go next week.
Next week. Kunal, any trades that you're punching in right now?
So Maruti is a stock which I would look to trade at current levels. Even L&T is something which I would keep it on radar. Maybe not at this 1.5% gap up opening, but I think if it flattens out, then I think it's a very good trade for budget as well.
Okay, Maruti continues to be the top draw from Kunal, though he switched from Tata Motors, Kunal. No?
No, it's an addition.
It's an addition, okay. Naresh, what about you? Sticking with PSUs?
PSU continues to remain a favorite. So NTPC is one, another is Tata Power. So looking at power and financial, so this is the two spaces. So that is where I continue to add positions. So Tata Power, M&M Financial, and then NTPC.
Sanjeev, when we talk about the budget, there is so much talk around capex, infrastructure. We've seen that one-way move up happen in defense stocks, in railway stocks. Have you missed the boat, or shall I say, have you missed the train already, or can you still jump in?
No, I think these themes are here to stay. Railways, defense, infrastructure, data center, and plus EVs and green energy, you know. These are not going to be done away. They have to be repeatedly for the next 10-20 years. So I am very, very sure. And plus, banks are proxy to growth. You know, why did the bank nifty correct from 44 to 40 despite good results or 39? It's all on the back that XYZ on Adani. Now the issue is over. There has been no ever default on any of the group companies or any of the liability franchise. In a growth economy or in growth stocks, you have to have banks as a proxy to lending. You cannot do without that. So I think the bank nifty is going to head to new highs over a period of time. And Aisha, has been 33 years. I've never seen L&T, Siemens, Cummins, ABB hit all-time highs, which tells us that they are seeing the capex and the growth visibility much more positively than us. Leave aside that, look at Nestle. They are investing 5,000 crore in the next 2 years when they invested 15,000 in the last 20, which tells you that they are so positive on the go. You put in money only when you expect growth. So very, very bullish on growth. And this industrial capex is going to be a game changer for India.
How do you play that theme?
So simply put, buy a basket of stocks, like I told you, L&T, ABB, Siemens, Cummins, Bharat Forge, or buy a mutual fund which has a, an exposure more to these. But leave aside that, I think Nifty, Bank Nifty itself, for the layman, are giving you the best entry points. If we are looking at new highs coming in February, then you are missing the woods for the trees.
Okay, we're already in Feb. It's the 1st of Feb. Kunal, how soon do you see that level on the Nifty Bank?
Yeah, I think we should be hopefully in the end of February. But I think the idea is risk reward. You have to enter at these levels rather than be more pessimistic or be more fearful. So that's the overall punchline or the overall theme which I believe every trader needs to look at.
Kunal, what's going to lead the Nifty Bank higher? Will it again be SBI, the stock that you're bullish on? Or will it be maybe a combination of some of the private names, which will show you a bigger move? Maybe Axis or even ICICI Bank, which in the last month has actually underperformed.
So ICICI purely because of the underperformance can lead from here because it's already corrected quite a bit from 950 down to 830s. So even if it goes back to 950, it would be the leader in the Bank Nifty from right now. In terms of a structural breakout, it is Axis, which is the new leader. So it is a mix of ICICI and Axis. And the surprise pack could be HDFC Bank, which has gone nowhere. But it has started making a base at 1550, 1600. Has tested that 1700 mark multiple times. So once it crosses 1700, that would be the killer rally stock going forward. So I would be watching out for HDFC Bank.
Right. Okay. Watch out for HDFC Bank. And the first trades are looking impressive indeed. In fact, while I wait for Nikunj to join in, we've already got our next few experts right here in the studios. We'll have Nikunj with us in just a short while for now. Ravi, great to see you in person. You don't come often to the studios, but the budget has made you come here. And as always, Mr. Kedia, shall we start with the song or we'll end with the song?
Later on.
Okay, later on, after the budget. So Ravi, what do we expect from the budget? Can it really change the mood for the markets?
I don't think. Unfortunately, I think the relevance of budget is going down day by the day. And of course, there are more important events lined up like Fed meet and RBI meet. Those are more market moving events than budget is literally. I think we expect continuity from the budget. As long as there is nothing that rocks the boat, we are fine.
Okay. All is well, Mr. Kedia?
Every time.
Every time,
all is
anytime.
well. And no expectation is the best expectation, okay?
Okay. But having said that, Ravi, is the market a little nervous at all about something on, say, capital gains?
Surely, I think what market expects is maybe there will be some normalization of the period where the long term will be redefined to 2 years. If that is the only thing that happens, I think market will digest it. But if there is increase in rate along with that, then that will be a slight negative for sure. There has been, in my opinion, a lot of regulation and over-regulation towards curbing the market liquidity. So that is leading to, the movement being very, very sharp. So I guess not tinkering too much would be good news.
Right, okay. Here we can see a couple of budget-sensitive trades typically which tend to, react to all the budget announcements. So I'm just going to quickly recap them for the benefit of our viewers. Typically anything on a tobacco tax, ITC, Godfrey Phillips, these tend to be the sensitive names, although it is, nowadays it doesn't happen in the budget. It is, it's taken care of in the GST ambit. Anything on green hydrogen, that's going to impact stocks like Reliance Industries, defense moves. We've already seen how favored the defense stocks have been off late and how they're making fresh highs day in and day out. And of course, the entire EV push, along with the PLI scheme, that's bound to help the entire EV theme. Everything from a Hero MotoCorp to an M&M to a Tata Motors, and of course a whole host of auto ancillaries as well. They will tend to be the sensitive pack in trade today. But while we continue with that, Ravi, what is the best way to play the budget theme, if at all? Or would you say leave the budget aside, look at what your long-term portfolio is supposed to be, look at the India macro picture and base your stock portfolio onto that?
See, budget since last few years has been focusing on capex and manufacturing, and we need to boost our exports. I think that is the number one pain point in our whole economic scenario. So I think our budget will continue to focus on these areas, and I think that remains the best area to focus on from next 3 to 5 years, because the capex cycle is just picking up, the manufacturing cycle is just picking up. So I think that will remain. Only thing is, the burden needs to shift from central government to state government and private sector on continuing with the capex cycle. But I think that those themes will still continue, and budget will give enough incentives for the cycle to continue, is what I feel.
Okay, now let's understand. I'm going to look at the one-year chart of the Nifty. Let's go back to that graph once again. For me, that is the sum and summary of what markets have done in last 1 year. A year ago, close your eyes. Let's go back to 2022. The Nifty in last 52 weeks is absolutely flat. Mr. Kedia, Nifty in last 1 year is absolutely flat, right? The mid-cap index in last 1 year is absolutely flat. The difference is in 2022 budget, expectations were high. Markets were confident that the GDP accelerator would be there. Markets in 2022 Feb had enjoyed a great 2021, so that sugar rush was on. Right now levels are same, but there is no excitement. There is fear in the market, there is no pent-up demand, there is no open interest. Are we getting ready for the next big wave or rally in the market? Pour in your experience, Mr. Kedia. Yes or no?
No, yes, of course. Because it shows, the trailer shows that, as you said, that there is no excitement in the market. People are not expecting so many things to come in this budget. So even little bit of optimism will bring joy in abundance.
Ravi, would you agree with my assessment?
I absolutely agree with that. I think we have been going through a time correction consolidation. We had fantastic gains post-COVID, and we needed to digest those. I think that digestion period is coming towards an end. Whether budget provides that trigger for that next wave, I'm not sure. But sooner or later, even if there is no negative and if the Fed pivots, I think we should be ready for the next move.
Okay, Shankar Sharma is also ready. I've been told we can connect. Shankar, good morning. Which part of the world are you joining us from?
Oh, I'm right here in Bombay. I came in late last night.
अरे studio आना था फिर तो.
He's here. Enlarged.
Yeah,
Shankar
but
Sharma.
it will take me longer to reach your studio than to go back to Dubai. So I prefer to just stay near the airport and head back tomorrow.
So, Abhinav, what to do, Shankar? Our infrastructure hasn't reached there yet at par with Dubai, right? But it's getting there,
कभी
Shankar.
होगा
That
भी
is...
नहीं, आयशा, सुनो मेरी बात. वो कभी होगा भी नहीं. India में infrastructure is the equivalent of waiting. Sridevi is waiting for Amitabh Bachchan to come back from when she was in Kabul in Khudagawa and he went to India and वो पागल हो गई बोलते बोलते वो एक दिन जरूर आएगा. और उसको लग गया मतलब सालों आने में.
Shankar, I always say that Indian markets are like Hindi picture.
मुझे तो लगता ही नहीं, मुझे लगता है इंफ्रास्ट्रक्चर में सुनता रहता हूँ, नजर तो मुझे कुछ आता ही नहीं है. मैं 38 years back when I first came to Bombay, the infrastructure was the same. It's still the same today. Okay, in terms of travel time, in terms of all other visual aspects of the infrastructure, काम होता रहता है non-stop. There is no doubt about it. But उससे फायदा क्या हो रहा है? That's a very very big debate.
Okay. Shankar, from a budget standpoint, if there are no changes in the tax rate, if the finance minister focuses on growth and maintains a reasonable amount of continuity, and if all the numbers which markets are working with in terms of capital expenditure, if they are met, are we in for a strong post-budget rally?
Yeah, I would think so because the markets have been fairly tepid in the preceding few months, and therefore that's always better than a bullish pre-budget market situation when markets run up in a couple of months or at least a month prior to the budget. I've usually found that then markets have a poorer post-budget run. When the markets have done poorly pre-budget, then usually the stage is set for a very strong post-budget run. So I think just on the basis of probability, I think we should be looking at an uptrend post-budget rather than flat to a downtrend market.
Okay. You know, Ravi, Shankar just said that infrastructure in India is like Sridevi from Khudagawa. That she went mad waiting for Amitabh Bachchan saying ek din wo zarur aayega, but wo kabhi aaya nahi. Mr. Kedia, I'll come to you. I know you watched the movie and heard the songs as well. But from where you live, you already have a vantage point of the coastal road. I know that. Infrastructure, you think that's the place to bet in on purely because there's so much pessimism and it's lasted now for decades. Is infrastructure the theme?
No, infrastructure, not from investment point of view, but I think India's infrastructure is definitely on the improvement. You cannot but be optimist about it. In a year's time, if you take the example of Mumbai itself, we'll have the coastal road ready, we'll have the Trans-Harbour Link ready, we'll have metro, underground metro ready. So, a lot of things will come to fruition in next 12 to 18 months. So, I am very optimistic about it. Of course, we have a lot of large projects going on throughout the country as well. So, I think this connectivity is important for us to maintain the pace of growth. I don't think there is any question that infrastructure will improve, but it is only that we are way more impatient and we demand much more speed than what finally gets delivered.
I'm quite surprised you said no to infrastructure as an investment. Mr. Kedia, what do you have to say about that?
No, of course, I think that would be the theme because so far whatever capex had been happening in India, the government was spending. I now think government entire focus would be give push to the private infrastructure or private capex and all. Now coming to what Ravi has said, I read somewhere that this Jewar airport, which is coming in 2025 or something, from the first day it would be the biggest airport in the world. And same thing is going to happen with the new Mumbai airport. So this kind of infrastructure is getting created in India. So of course, I think that is the theme and that is the future.
Maybe, but then we'll have, sorry, you were saying something?
My resistance to investing in infrastructure is only from the point of view that there are not many good business models available in that space. Of course, the physical growth is there in infrastructure.
Chaliye, we have a consensus with you and Shankar over there. But Shankar, you know, I think more than Mumbai, Dubai, the focus is now shifted to China, right? Underperforming markets are the ones which are clearly the flavor of January, and I think they're going to tend to be. What will now change the mood? What will bring FIIs back? And can budget really do the trick?
Yeah, that's a very, very relevant point, Aisha, because I think more than what is going, with the underperforming markets, what is really relevant for India is that we need huge dollops of dollars. And this is the elephant in the room, and I'm usually the guy who points out the elephant in the room because of various reasons. Most people do not. But the fact is that we are running into a significant twin deficit problem, the budget deficit. We'll see the fiscal deficit, what the FM announces today, but it could be 6.5. God knows if they really want to make a push, could be even higher. And then we have a current account deficit, which is probably going to be 4% or higher. Looking at in my view, exports are headed nowhere but down because the two big trading blocks, US and Europe, are not going to be buying a lot from India or for that matter anywhere else, given their own situation. So we have a significant problem in the CAD, and because of this, we have a twin deficit which is now into double digits. Last we saw that was in 2009 when we were classified in the FIJAIB in 2010-11. I think nobody wants to talk about it, but the fact is we are back to a twin deficit problem, and more importantly, we have a balance of payments deficit. So last year we had a BOP negative, which is a rarity, an absolute rarity. And by the looks of it, FY 23-24 is also going to be a BOP deficit. Looking at the pace of FII sales we have seen in the last month and a half. So I think India does need to shred its complacence that, we don't need FII, we don't need dollars, we are self-sufficient, we have enough capital. Sorry guys, we do not. We are running short of dollars. We have a BOP deficit, and therefore we need to convert that into at least a neutral, if not a surplus, to fund our current account, which is already into a problematic zone. So to sound a bit of a sobering note here, the FM must focus on getting dollars in. Domestic capital has no option but to remain invested in India, okay, to be clear. So domestic insurers will buy government bonds because they don't have much else to buy, right? But it is really foreigners who have now a plethora of options in China. For example, I put money in Mexico because that has emerged as a fantastic transaction, in the last few months' time. Turkey, again, great exporting nation. Mexico, great exporting nation. China, great exporting nation. So all these countries have come into their own in the last...
Shankar, I'm coming right back to you. But, on budget day, we always talk about volatility, how to make money. This is Ravi and, Mr. Kedia, this is how markets are moved. And Ravi, you want to just see the graph here? February, 2% move, 18, 2% move, 1.5% move, 3% move, 5% move. Of course, this was because of that COVID multiplier which kicked in, and 2% move. So if I keep February 2021 as an outlier, irrespective of short-term, long-term, irrespective of the tax regime, fiscal deficit, the average swing on the budget day with one outlier, which does not change your average, is 2%. Is that the sum and story of today's budget? Doesn't matter what the taxes are, doesn't matter which way things are moving. It is a 2 to 3% nifty swing event.
Vijay, you want to go for it?
No, I am optimistic, irrespective of whatever, because people are expecting. Only thing which can dampen the sentiment in capital markets, so far as stock market is concerned, that is long-term capital gain tax. If government tinkers with it, then of course market will fall. But again, I would say that would be a temporary phenomena. Maybe after 6 months or maybe after 3 to 6 months, people will forget that. So I don't know about what is going to happen today. So better I am expecting negative, government will impose tax and market will go down, if you're talking about the today's event. But yeah.
So you know what, my dad had advised me, one, don't trade ever, don't leverage, and especially don't trade on event days, which is like budget days. So unfortunately, I have to say I have no idea what's going to happen, just like Vijayji said. But we have to stay focused on the longer term picture, and I think the longer term picture for India is relatively better than the world. I think some amount of premium that we had to the emerging markets and outperformance has corrected a little bit, but I think soon enough we'll reach a stage from where at least the absolute performance can still come back to the Indian market from here.
Okay, let's go back to that the budget stock wall, and it is just a collection of where the budget action could really move. And I'll talk about themes, we'll talk about ideas. If Mr. KD and Ravi are there, I don't know, my viewers just start sending me text messages that ask Mr. KD about the next multi-bagger idea and Ravi from the multi-bagger theme. So we'll get into that also. Ravi, this is how we think the stack looks like. If there is an infrastructure boom, L&T would benefit. If there is a push towards alternate energy, Reliance, Adani, to a large extent Tata Power. If tax rates are changed, the immediate push would come into Hero MotoCorp or a Maruti because the money in hand of a taxpayer, it goes higher. Would you agree with this assessment that this by and large should be the budget collection, a bit of combination of rural, autos and consumption?
No, I agree with it. I think these are the themes actually which are quite already underway. It's already Larson's book is order book is almost 2.5-3 years. The book to bill ratio is quite healthy. So, and the execution cycle is also going on very smoothly. So I won't say that this is going to be a fresh impetus. We are already into the cycle and market has recognized it to a large extent. Maybe not Larsen, but some of the other capex stocks are trading at quite a bit of premium. So defense, capex, manufacturing, these are the themes. See, finally, what are the two areas that is really pinching India? One is that we are importing more than we are exporting. And second is we have to provide employment to many people. So government has to give push to those sectors which will create employment opportunities and create export opportunities. There are many things that can happen outside of the budget which can benefit as well, like signing of the FTAs. I think those are the things that we are really waiting for.
Mr. Kedia?
I think more or less I agree with this, but one sector which is missing here is banking. So I think hike in FPI limit in banks. So banks and NBFCs, I think they should... Yes. So that should also be included. That's a very underweight sector, I think. So this, because without credit, nothing is going to happen.
Okay, there's one more graphic which is about the tax structure in India. As taxpayers, I guess there's always a universal demand, and this is a poll where I get a 10 on 10 every time we do it, that should income tax rates in India be changed. Now that's of course for the STT. We've spoken about STT, that there is a difference in need of the tax versus good to have tax. Indian tax structure is complex, you want to simplify it, but this year may not be the right year in order to make any changes given that the equity culture in India has just about started. So this is just the tax structure, but on the income tax front also I'm just going to show that how things in a sense should be changed. Now if there is a change which happens in the second bracket up to 5 lakh rupees, then the watchword today could be all the consumption stocks, Hero MotoCorp, Maruti, FMCG stocks, because inflation last 5 years was in a structural decline, but post-COVID is in a structural update. When inflation goes higher, it will cost the taxpayer, which means government now need to be cognizant that from a low interest rate and a low inflation regime, we are moving to a high interest rate and a high interest rate regime. So you got to be cognizant of more money going in the hands of taxpayer. Let's take a break. We're just getting warmed up. The finance minister has left for the parliament. In moments from now, which is less than 1 hour from now, she will stand on the floor of the parliament and present her 5th budget. The backdrop of 2021 budget was survival. The backdrop of 2022 budget was revival. The backdrop of 2023 budget is the leap forward. So from survive to revive to thrive, what can she do to ensure that India takes a leap forward? Stay tuned, you're watching ET Now, your budget headquarters, and we're just getting warmed up on our budget coverage.
Co-presented by
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No.
market and we are tracking the budget coverage. We have a drone also in the frame. Lots is happening here. It is an action-packed ET Now headquarters right here in Mumbai, and we're counting down to the finance minister presenting or tabling the budget in Parliament just shortly. Quickly, status check on the markets, and 17,860 is where the Nifty futures are currently up to. You've got a Chola Finance, which is holding up very smartly in trade. It's an 8% uptick coming in there. There's Dixon, which is higher by about almost 6%. Gujarat Gas is holding out very well, 5% higher on that stock. And then, of course, Indian Hotels, after that blowout quarterly numbers, Nikunj, that they flashed, that is one stock which is doing really, really well. 4.5% higher for Indian Hotels. There's, of course, Loris Labs as well. And within the Nifty, the large caps, that is, it's a bunch of names actually which I can see good, look good. So there's Hindalco, there's Britannia, there's ICICI Bank, which is up a mammoth 2% after stark underperformance all through the month of January. There's Techem and there is Hero MotoCorp. So you can't really pick up any trend, at least within the large cap movers.
You know, markets are steady, Aisha. That is important. That we had a scare. Now markets are steady. That is what is crucial, that in the run-up to the event, now that fear which happened because of sell-off in Adani group of companies, that's behind us. This is the normal you want to see. Now how markets react to the budget speech, that's all secondary. But markets are at least stable. There are no compulsions and technicals which are at play because of that scare what we saw on Wednesday and on Friday and again on Monday. So markets are now pretty much back to what they were, let's say 7-8 days ago. Unlike that compression what we saw in individual stocks and themes, I think that clearly is over.
Yeah. By the way, Adani Enterprises has actually started off in the red today. That's down about 2.5% on the futures as I can see it. Let's just bring out the spot stock as well and tell you what Adani Enterprises, after the IPO getting through, is finally up to in trade in the spot Nifty, spot markets as well, or cash markets as well. The stock is lower right now by a good 3%. Giving it company is Indus Tower. This has been a little problematic in the last 10 odd days or so. BOB as well is lower by about 1.6%, and then there's Sun Pharma and ACC, which are also laggards. But for now, the Nifty marginally higher, and the breadth of the market is the one which is looking very, very solid. But the big question, of course, is what is in the store for markets this budget? Here's market veteran Madhu Kela sharing with us his take in this special interaction that he had with Nikunj.
Okay. Every time when budget is round the corner, you know, budget is also about taxes. We tend to discuss from a stock market side the importance of rationalization of taxes. In India, just to break it for our viewers, we've got different tenure and different tax rates. Different tenure if you're holding in equity, debt, real estate and gold. Similarly in India, if you are trading in F&O, different tax rate. If you're holding for more than 1 year, different tax rate. If you're holding for less than 1 year, different tax rate. Market nervousness, Madhu, perhaps is valid because the tax regime is different. There are two ways in which things could happen, and I'm just going to project it for our viewers. The short-term rates in India are 15%, long-term is 10%. If the short-term rate is changed in proportion with business income, will that be a negative news for the market?
So, Nikunj, let's first look at it. You know, you be in finance minister situation. Capital markets have enabled raising of 6.5 lakh crore rupees of equity in the last 3 years, right? I would urge and pray that these things should not be disturbed, at least this year, because, you know, everything is going well. Capital market is helping revive the economy. Revival of the economy, given the global context which we discussed, is very, very important. So I think any meaningful distortion on the capital gains tax regime may not get government significant revenue boost up, and as we discussed, it is not even needed. If they get 10,000 crore extra, that is not even needed. So I think this thing can wait, and it should wait, right? There is a merit in rationalizing the taxes, but should it be done this year is my point. I am saying that logically speaking, given the context that markets have also become nervous, given the context that there is talk of global recession, and we need very healthy capital markets, it should not get distorted. Having said this, like, you know, if the rates, if the time frame changes, let's say it long term goes from 1 year to 2 years.
That 1 year becomes 2 years.
2 years. I don't see a meaningful impact on the markets. But let's say if you change the short term capital gains
this one here,
to business income.
Yeah.
Let's say you club it with the business income slab, then I see a very meaningful impact on the markets.
So again, Mr. Kela is making a point that there is need to have versus good to have. Now you can argue that the short term, the capital market, capital gain should be changed, but that's good hygiene as per global standard. But the need to have is clearly not there. Given the global backdrop, there is no desperate need to raise taxes, and this also does not tally with the Prime Minister's vision of financial inclusion, because the SIP culture in India is just about picking up. You need a vibrant capital market,
and we have lived with it.
Exactly.
We have lived it for last 50 years.
Exactly.
In 1 year nothing is going to change.
Exactly.
But this year is very crucial for India, for us to be able to differentiate from the world
and take that leap forward.
Take the leap forward. So this is, and I expect, I am sure government is more will recognize it more than what you and I can discuss.
Of course.
That this year the economy, the people need support. They need growth push. So they will optically utilize this 2.5 lakh crore rupees of buffer which they have, and make sure that the sentiment remains very positive. So I feel that there will not be very large tinkering on at least on the short-term capital gains tax.
Okay, and just to supplement that point, that in 2022, calendar year 2022, we've seen record outflows by FIs, but record flows from SIP investors. So it's the equity domestic wheel which is chugging, and when an asset class is getting created, you need to incentivize it, and that incentive in a sense is something which really needs to be protected. I'm going to wrap with one final question.
And also, Nikunj, there is a significant risk which people take. Markets are very volatile.
Yeah.
So obviously there has to be some incentive for people to be able to take this volatility. And we are paying taxes, right? We are paying STT, which is a very major tax from.
Let's quickly tell you what the Nifty is up to. I've got the Nifty literally in my hand right now. And as you can see on your screens, we started off with a pop of about 0.5%, but from there, we've settled down a little bit. It's actually just very sideways. That's how you would describe. We're pretty lackluster so far, but yes, in the green, however. It's not a rara move as the SGX Nifty was suggesting. So we're holding about 0.5% higher as of now. If we can just quickly bring up what the mid-cap and the small-cap index is doing, because that is actually showing you way more of an outperformance as opposed to what just the index is doing. As you can see the Nifty on your screens. And there we currently have it. That, of course, is the Nifty small cap index, and the mid cap index as well is just going to come up for you on your screens. Nikunj, I'm literally holding the mid and the small cap index in my hand right now. The mid cap end of the market is the one which is actually outperforming what the benchmarks are doing. And by the way, on your screens, the finance minister has reached Parliament right now. She's got the tablet in her hand, and 11 a.m. is when she's going to be presenting the budget for this year at the House of the Parliament. So we're going to cut across to that. There you can see the Bahi Khata, as it is traditionally known, in her hand right now. But yes, very quickly, we're going to give you that slight bit of breather, because up next, we've got a whole host of market experts joining in, and also we'll have a budget think tank, the Who's Who of India Inc. and the market fraternity join in to tell you what to expect from the budget 2023.
It's a beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
Now, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
Now, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Hello and welcome. I'm Nirmala Rai coming to you from the CII Budget Headquarters in New Delhi, and I've got the CII President and the top boss of the Bajaj twins, as we call them, Mr. Sanjeev Bajaj. Thank you. Welcome to ET Now. It's 1st of February. Of course, we're going to have you live on ET Now. Mr. Bajaj, it's of course the last budget that we're going to see from this term of this government. So going into the budget speech at 11 a.m., how optimistic are you that it's going to be growth-oriented?
I would say I'm reasonably optimistic, Nayantara, and it's comforting.
What is reasonably optimistic on a scale of 1 to 10?
I would say 7.
7?
Yeah, and because let's look at the background. It's quite comforting from the economic survey yesterday to hear that the revival period is over for the economy and we are back to growth. I think that's a very strong signal from the economic survey. We have to keep in mind that as we focus on growth, it has to be a balanced growth. And you have to balance it with fiscal prudence. Governments around the world, including in India, have had to spend more in the last few years to save first lives and then livelihood. And now we have to get back on a recovery path. So keeping these things in mind, a strong continued focus on growth, but also greater prudence now in fiscal management to get our fiscal deficit back in control in the coming years.
Yeah, we'll have to see what kind of public expenditure estimates that we see put out by the Central Exchequer. But Mr. Bajaj, having said that, and if indeed the pandemic recovery is behind us and we need to continue to boost consumption, a good time to cut taxes a year before elections too?
You know, it always helps to increase spending because we are a large consumption economy and consumer demand can play a very significant role. We also have to keep in mind that we are seeing in the last year or so a bit of a K-shaped recovery, which means the lower income segments have still not found an opportunity to grow, and it makes sense because they got hurt the hardest through the pandemic, through the slowdown. Inflation bites them the most. And that's why a rationalization of personal income taxes at that level will put more money in their pockets, will create greater security, and hopefully will spur spending in those segments as well.
Mr. Bajaj, which camp do you believe in? India has seen one of the best performing stock markets on this planet. The real estate market has recovered after so long. Now the time to try and do any changes with capital gains tax, whether it is the percentage or the tenure?
The important thing on capital gains tax and other taxes as well as CII is we are asking for a simplification, a rationalization, so that it's easy to understand, it drives ease of doing business. So it's not that we are looking for a reduction in rates over there, but we are just saying that there are so many different classes, you have so many different periods, rates. The more we simplify it, the easier it is for business to understand and follow. And India has this great opportunity from now in the coming decades to become this manufacturing hub for the world. In whatever we can do towards that, this is the time to doing it.
Mr. Bajaj, you know, you understand markets so well. We were checking out where the markets were 31st of January last year and this year. Flat. I know it's not the finance minister's job to look at the stock price, to look at the stock markets, but what, according to you, can really move the needle? Because we have been one of the best performing markets.
You know, the markets eventually are a reflection of both what's actual on the ground, but also expectation from the future, at least in the medium to long term. In the short term, it can be a gambling machine, but as they say in the long term, it's a weighing machine. And that's why what's important for the markets is to understand how the promise of India is going to get converted into action from this year onwards in the coming years.
Banks have never been better for a long time, something the economic survey also took cognizance of just yesterday. The big bank cleanup that's taken place, they of course praised the 8-year reforms that we've seen in the economic survey. But Mr. Bajaj, now that we have that, and while we focus on deposit growth, this, that and the other, what can be the big reforms, even if it's outside of the budget? Because, you know, everyone has high expectations when it comes to the banking sector. Is it time for consolidation? We have one privatization exercise already underway.
It's very important for India to ensure that we have a strong financial services sector to support the real sector's growth in the coming decade. So while we have to do everything that we can to attract foreign capital, because we need large sources of capital, especially for long-term requirements, but we also have to make sure that banking, NBFC, insurance, asset management, these sectors get more and more competitive. Look at what's happening in the insurance sector. By opening it up to the private sector in the last 20 years, we have multiplied the number of insurance companies there, and we have significantly expanded the reach of insurance. This is something that we need to do with banking as well. And we believe that the government must accelerate their divestment program across sectors, but especially in this case banking that we're talking about. The banks are doing well right now. This is the best time for the government to get out and ensure that through privatization or divestment, we are able to create greater source of capability in those banks, not just for themselves, but because they have to support the real economy going forward.
So what would be the right way of doing it? Because you have a clutch of these small PSU banks as well, right? And look at the run-up in the share price. What would you say? Should it be consolidation, something that we saw in the PNB way, or maybe, you know, strategic sales, privatization?
That's for the government to decide. There are multiple options, and you just highlighted a few of them. We've seen whether it's consolidation, whether it's divestment, whether it's listing, like in the case of LIC, a very successful process that happened with Air India. This government has shown both intent and action, and we think they just need to accelerate in that process.
Is the most important thing perhaps black and white and no grey? That's, of course, always the most important in the budget and the fine print.
Well, the clearer it is, the better, but life is always shades of grey.
But what I found very interesting, the economic survey was yesterday when they were talking about co-partnering industry. Have things actually changed on ground, Mr. Bajaj, from distrust to trust to becoming co-partners?
A lot of it has changed. A lot of it is moving in the positive direction. A number of laws have been decriminalized. If you look at a number of plans of the government on data, on information, being very practical. So there is a lot of work that's already being done, but we have to continue to do more because this is a moving target. We have competing markets which continue to grow, which continue to improve in their ease of doing business, reduce cost of doing business. And I just hope we see greater coordination between the center and the states, because eventually investments come in the state. And the better and tighter the coordination between the two will make a big difference on the ground.
Should, with inflation not being such a big worry as it was maybe, since February of last year, and with the earnings season behind us, you had great results, but if you see profit pools are also going up. Kumar Mangalam Birla has said is going to be the Mahakumbh of capex. Is Indian industry finally going to be less stubborn? Are we finally going to start seeing the capex cycle turn around? The green shoots are obviously there.
So, firstly, let's keep in mind, private sector capital needs a certain reasonable return in a time period. Their money is to be paid back, so it's different from public sector capital. We have to keep that in mind. And private sector capital will come when it sees the opportunity. We are primed for that right now because over the last 7-8 years, we've not seen significant private sector capital come in. So capacities have now reached a level in many sectors where they need to reinvest. There were external uncertainties. Some of those, like war, remain. Inflation is something, as you're saying, coming into control, but still at the upper end of the comfort band of the RBI. So we need to ensure that we bring some of these other factors also right in the center of where it gives comfort. And then there is no reason that you will not see private sector new investment coming in.
And my final question to you, the economic survey hinted that, we should go back towards fiscal management is what your opening answer as well was. So what is industry at the same time wants the central exchequer to loosen the purse strings, but to cut down sharply, you folks want a 25% increase in expenditure and want fiscal consolidation.
And that's where the balance of spends comes in. So one, augment your resources through an aggressive divestment program. We believe that once they identify entities that need to be divested, move those from line ministries to DPAM. Let them focus exclusively on that divestment. Secondly, broaden our tax base. 12% of money is getting contributed by taxes. We need to take that to 15-16% by simplifying the tax slabs, by simplifying the rules. And capital gains is one more step, but for doing the same. So do that on the tax base, and then make sure that your funding from the government is very targeted towards productive assets and reduce non-merit, non-food subsidies.
Last year, a lot was said about the crypto tax, right? After the budget speech. This year, any guesses of what it could be from the new economy? A lot of buzz around online gaming.
Chatwal also joins us, Managing Director and CEO with Indian Hotels Limited. And Mr. Chatwal, good morning. Thank you for joining us. Shall we start with a the biggest smile ever? 400 crores of net profit for the quarter gone by. क्या बजट की बात करें, प्रॉफिट इतना अच्छा है.
It's a budget chat, not an earnings chat, but yeah, more tempting to talk about.
I want to start with 400 crores. Smile more, sir. 400 crores, little bit of smile more.
No, nice of you, Nikunj. We are very pleased, very proud, and till 2 years ago was very difficult what we talked about.
So now can I say that the hotel industry does not want anything from the budget because profits are bumper, so there is no official wish list for the hotel industry from the minister today.
I thought, Nikunj, ET now, and you were the well-wisher of the sector, having some kind of a soft corner, because I think it is very important that the budget is an enabler. The budget is always an enabler. Growth is an enabler. The GDP growth is the biggest enabler for the results in hospitality sector. The spend in infrastructure is critical for the success of the tourism industry. And finally, the positioning of tourism, I think, is a very important opportunity. It has been missed several times. I hope that it gets addressed this year or as early as possible. So I think giving tourism sector the infrastructure status is long overdue, and getting a state level industry status is also equally important. That will generate a lot of employment, a lot of indirect jobs, as has been proven globally.
You don't need a soft spot from us, right? The kind of pent-up demand, or actually what started off with revenge travel, pent-up demand, has really taken off on a different, orbit altogether, and all our best wishes with them already.
Yes, and my limited point is that the industry needed a lot of support. While
They don't need any.
They don't need now. The pent-up demand is so strong. Of course, infrastructure support is welcome. Shefali is also there with us, and now we'll talk taxes. Good morning. Time to take taxes. The most serious stuff of any budget, taxes.
No more, right? I mean, we don't hear much about taxes in the budget anymore.
But on the LTCG front and STG front, there are two types of taxes. One is good to have tax, which is that you want to make the Indian tax system, which is complex, easy. So it's a good to have hygiene tax that you simplify all asset classes under one bracket. But there is need to have tax. Looking at the fiscal stability, the facts that tax collections have been strong, is there need to tinker the capital gains tax at all?
Well, there has been the ask, and again, not that it's going to make so much of difference, but it's more a question of investor sentiment. So, by giving in a little bit and simplifying and rationalizing, if it keeps a large class of stakeholders happy, why not? So possibly rationalization is something which has been on the cards for some time, if they choose to do it. But other than that, I don't think there is going to be too much on the tax-related changes, because most of the work that we have ahead is more on, administrative reforms and simplification and things like that.
This is the most relaxed I've seen you ahead of a budget speech, because nothing is expected from budget and the tax from this time. Is it right?
But we will have something, because the G20 presidency will have a lot of say, and I think because a lot of people are watching, there will be a lot of announcements, especially related to international tax. We are going to be adopting some of the OECD proposed changes on the Pillar 1, Pillar 2 for the large multinationals. So there may be some announcements related to that.
Okay.
Shefali, is there a possibility that the tax net could get widened? The income tax slabs, they could perhaps go a little down the round.
Yeah, so that's possible. The slabs can, actually there has been an ask, to increase the basic exemption limit. That might happen. But in order to widen the net, they've already been, introducing the TDS provisions. And that has put a lot of people in the trail. That trend, to my mind, is going to continue, unfortunately, because I think that's an easy way to put a trail on the money. And that then, puts the onus on the people to comply. So that's already been happening over the last 2 years. We have more and more TDS provisions coming in.
Okay, Shashank is ready, Mr. Tyagi is also ready.
And Mr. Rajneesh Kumar
and
is
Mr.
also
Kumar
ready.
is also ready. Mr. Kumar, Shashank, Mr. Tyagi, good morning, gentlemen. So nice to have all three of you. And I can make out, Shashank, that it's really, really cold in Gurgaon.
Yeah, it's in Delhi. Yeah, it's cold. I'm in Delhi.
Mr. Tyagi is in Gurgaon.
Yes.
DLF.
Okay, Shashank. Now, there's a huge departure, Shashank, in terms of the budget policy making. The growth seems to be the center of the budget making exercise. There are no large tax changes. There is focus on multiplier effect, which is getting created by spending on infrastructure. What, to your mind, Shashank, should be the priority of this year's budget? 2021, Shashank, it was survival. 2021, it was about revival. Do you think flourish should be the theme of this year's budget?
Yeah, I think somewhere between a revival and a flourish, because as you rightly pointed out, capex increases. With that multiplier effect helps both on the supply side as well on the demand side. And especially if you have investments in infrastructure, roads, port, and I'm talking from an auto perspective, it's always good, it brings down the logistics cost and also provides the much impetus to growth, especially the medium and the long-term growth. And remember, the auto industry fortunes are very closely related to the overall growth in the economy. In fact, a very high correlation exists between the per capita income growth and the auto industry growth. The correlation being as high as 0.98. So that's so as far as auto industry is concerned, the budget should focus on growth. Infrastructure spending and rural spending can actually take the bigger share, which helps us also because the rural demand for cars have been increasing. In fact, for Maruti Suzuki, almost 44% of our sales are in the rural areas. So in that sense, I would expect the budget should be somewhere between a revival and a flourish.
I have two sheets.
Before that, I must tell him that, all of our stock pickers today on the show have given one stock. And Maruti clearly is one of their top ideas. They say that if the government is planning to put more hands, or rather more money in the hands of people, Maruti is the stock to bet on.
Absolutely. Car buying is related to how much disposable income you have, and any softening in terms of inflation or having a larger income levels which comes out by putting money in the hands of the people obviously is a very positive for the auto industry.
Absolutely it is, and I can see you have a swanky, bright yellow car in front of which you're sitting. But Mr. Tyagi, I'm going to come to home buying also in just a short while from now. But let me just welcome on board Mr. Rajneesh Kumar as well on the show. Mr. Kumar, three themes, the three C's that the budget this time around is intending to focus on: consolidation, capex, capital gains. And out of that, consolidation and capex are two very big things that even market watchers are looking out for. You can't do that alone, right? You have to have banks aid all that growth. What is your anticipation and expectation on what the finance minister is likely to do, which is going to be sensitive to the banking sector?
I think we've lost him there.
Guys, we're not getting his audio.
Okay. I think there is bit of an audio problem there. We'll try and sort it out.
Yeah.
So what we have, Aisha, we've got Puneet, who represents the hospitality sector, tourism sector, big employment generation. Auto, one of the biggest sectors in India in terms of where the manufacturing capability is moving. Real estate and banking. So this in a sense really represents the India. IT sector never gets anything from the budget. So that's the reason why we don't have any representation from the IT sector. And tax, Shivali is saying, yes, you're making my life easy this time. Nothing big is expected. No talk of a surcharge, no talk of a COVID surcharge, nothing on that front. So you got your task very easy this time around, right?
Fingers crossed.
Mr. Tyagi,
I think we can try going back to Mr. Rajneesh Kumar again.
Mr. Kumar, my question to you is very simple, which is that if India has to move from 3 trillion to 5 trillion, the nature of the Indian economy is such that it needs capital. What can be done in this budget to ensure that we have abundance of capital and the banking system in a sense is adequately funded? Just when the growth came back, the problem has started again. Deposits are not growing, credit is growing. So every time growth will come back, you will need more capital. What can be done in this budget to address that?
As far as the banks are concerned, if we are talking about their capitalization, I am not expecting that in this budget there will be any capital infusion as far as the public sector banks are concerned. But the fact is that, yes, the credit demand this year has been the highest in last several years. So the risk capital which was needed for the banks, it was provided by the government a couple of years ago. And as a result of the cleanup which has happened in the banking system, today the banks are profitable, and if they have to fund the demands of the economy and a higher credit growth, the money will have to be raised from the market.
Mr. Tyagi, I have got two sheets in front of me. One is the real estate demand of 2021. It has got 10 points. One is the real estate demand for 2023. It has only 1 point. Is it true that the real estate sector has got everything they wanted in the last 2 or 3 budgets? There is perhaps no large wish list?
Okay, so I think it will be over-optimistic to say that we have got everything that the real estate sector wanted from the budgets. But the fact is that, I guess I see a lot of factors. The last 2 years have been exceptionally good in terms of the residential demand, and even the commercial demand is now gradually bouncing back. So absolutely. From a budget standpoint, clearly, one should never stop wishing for more. And, one of the oldest demands of the sector, I think, at least 10 years now, is some form of inflation indexing on the interest rate exemption. Because that really would be a significant kicker, especially in the small to medium range housing, in that sense. I presume that the counter argument is that it's already doing very well, but obviously if that 2 lakh limit goes up to at least to some degree, even if not to 5 lakhs, 3.5 lakhs, 4 lakhs, some sizable increase, that will be a significant, I guess, sentiment kicker for sure. The second point on the commercial sector, which I think has been pending from the last budget, is the detailed promulgation of the entire SEZ conversion to DESH guidelines. And that's something which I think that at least the commercial realty sector has been waiting for a long time. And I guess, hopefully this budget should address that. So I think those are the two real points that I do believe that we are hoping that this budget will go some distance in addressing.
Okay.
Shashank, a lot of anticipation and expectation that the budget is going to give a thrust perhaps to EVs. With Maruti's foray also now into this, I wanted to understand what exactly is the ask of the industry, and at this juncture when EV, I would say, is still at a very nascent stage here in India, what is the feasibility of it all?
Yeah, so I think that's a great question because, when we look at EVs, still it's expected that this financial year, 22-23, the industry will see about 50,000 numbers being done on the EV front. I'm talking of passenger vehicles. That's just about 1%. The adoption of EVs obviously being hampered by the cost of acquisition, the high cost of acquisition which comes from high battery cost. And second is the range anxiety which comes from the lack of charging infrastructure. So I think if the adoption of EVs have to be faster, then obviously there have to be provisions which help in building up of charging infrastructure, and also if localization of batteries, some support in that would also help. There is a PLI, of course, but any provision which helps the localization, especially of batteries and other EV powertrain costs, would help in the early adoption. But meanwhile, and that is also Maruti Suzuki's point of view, we need to explore other technologies to bring down emission, and Maruti Suzuki has been doing it. In fact, the industry has been doing it. We have CNG, which is low on emission, great on fuel efficiency. We are talking about biogas as well, and strong hybrids. So one of the ways in which the transition to EVs can obviously come through those extra incentives for EVs, but also by way of some support for the less fuel consuming technologies which are intermediate, and like the strong hybrids, the CNG, which could also help on the emission front, as also in the later quicker adoption of EVs.
Kumar, I go back to that very basic point about India's capital requirement. Now, savings rate in India, Mr. Kumar, is coming down. Do you think in this budget there should be some consideration on the minimum cap which is there on fixed deposits? Right now, anything above 40,000 rupees in fixed deposit actually attracts a slab rate. Do you think that should be revisited? And the logic here, Mr. Kumar, is simple, that from a low interest rate and a low inflation regime in last 5 years, we are moving to a different regime globally. Next 5 years, interest rates will remain high and inflation will remain higher than what the last year 5-year average is. So these numbers, which in a sense were there in 2018, they need to be adjusted at least as per inflation.
Yeah, so interest rates on the fixed deposits, there has been a upward movement aligned to the inflation. Now, about the tax benefit on the interest earned on the fixed deposits, which is, you have mentioned, the current limit is 40,000 and 10,000 rupees for the savings bank interest. So total comes to 50,000 rupees. So if the idea is that there should be fewer exemptions, we have to see that the idea which was initiated last year, it has not taken off. So my expectation would be that there should be some further simplification of the exemption-less tax regime. In such a scenario, I doubt whether this limit is going to be raised.
Mr. Chatwal, really closing comments from you before the budget speech is tabled. What, to your mind, will be a good budget, okay budget, and a great budget? I'm not using the word bad or poor. Good, great, okay.
I think a great budget would be that takes care of the population, that takes care of all the stakeholders, that takes care of key industries, that stimulates growth, stimulates employment, and both direct, indirect, and positions India from the 5th largest economy and makes the platform for it to leapfrog to number 3 in the near future.
Mr. Tyagi, what will make for a good, bad, and a poor budget? I'm putting the poor word in.
Okay. So honestly, I mean, given the overall economy, and even the economic survey yesterday, I think honestly a poor budget looks completely out of context today, unless somebody does a really bad job, which looks very, very unimaginable. I think clearly, to reflect what was said, a budget which focuses on growth, on capex, and on putting more disposable cash in the hands of the middle class. I think those are the 3 basic drivers of what I'll say will be a good to solidly growth budget.
From home, you've not gone back to the office still?
Who, me?
Yeah, isn't that your house?
No. We've been operating the office for the last 12 months, but I typically go to office around 10:30. So your this session was slightly before that. I'll immediately post this, go to office.
Okay, in a Maruti car maybe.
Yeah, but Mr. Chatwal, how's our office? And where should we call you after the budget speech?
Sure. Thank you. Looking forward.
Okay. Shashank, Mr. Tyagi, Mr. Chatwal, Mr. Kumar, gentlemen, thank you so very much for joining us. That's our think tank panel. It does not get bigger than this when you've got India's one of the biggest banker, auto, infrastructure and real estate. So we will be decoding the budget speech completely for you, but now the countdown has almost started. In less than 30 minutes from now, Nirmala Sitharaman will be rising on the floor of the parliament and she will present a 5th budget, a budget which in a sense can really set the tone for Indian economy to take the leap forward.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world.
Paris, that's a drone shot.
Yes. All right, now what do we have on the wall? Markets are trading at the highest point of the day. Markets are, the nervousness which was, let's say, there till the time the Adani FPO did not go through, that nervousness is getting normalized. So from a fear situation, now things are getting settled. Now what happens today in terms of a market action and reaction would be a function of the budget speech. But let me tell you, in last 1 year, this market has not seen any change. In last 52 weeks, the small cap index has given a negative return. Unlike 2022, when markets were in a sugar rush because of a great 2021, that zing in the market, that excitement in the market, that euphoria in the market, the commitment to the market, I think, is all missing. For me, this is the sum and summary of where markets are. Sunil Singhania and Ramdev Agrawal, they both join us. Good morning, Sunil. Good morning, Ramdev ji. Can you both hear me?
Good morning.
They're right here.
Yeah, I can hear you, Nikhil. Can you hear me? Good morning to you and
Yes.
Aisha and the entire team.
Okay. Ramdev ji, I have a simple question.
Can you hear me, Nikunj?
Yes, Ramdev ji. If there is, I have a simple question for you, Ramdev ji.
Yeah.
If there is going to be a change in the capital gains, whether it is long term or short term, whether it is duration or rate, market में क्या असर होगा?
Let's see what is the change. I don't expect many changes in that. लेकिन मेरे को लगता नहीं कि इसका बहुत ज़्यादा इफेक्ट आएगा. थोड़ा सा नीजक रिएक्शन हो सकता है, थोड़ा बहुत सेलिंग आ सकता है यदि मान लो ड्यूरेशन बढ़ाया तो. बट मार्केट मेरे ख्याल से इज नॉट ड्रिवन बाय कैपिटल गेन्स लॉज एंड थिंग्स लाइक दैट. आपका कॉर्पोरेट अर्निंग्स, इंटरेस्ट रेट्स, दोज आर द मोर इम्पोर्टेंट थिंग्स देन कैपिटल गेन्स टैक्स. बट एनीवे शॉर्ट टर्म में तो थोड़ा सा इम्पैक्ट आएगा उसका.
Same question for you. Sunil Singhania, the same question for you.
Okay. So I think one good thing, Nikunj, which you mentioned, unlike 22, where, in the prelude to the budget, we had a great year of great returns and there was a little bit of over-optimism to some extent. I think this time, budget to budget, we have a flat market. As you rightly said, there's a short, small negative as far as the small caps and the mid caps are concerned. And over the last 1 week, whatever little speculative positions were there, that have also gone wind down. And at the same time, market is expecting some kind of changes in the capital gain side. So there is a small probability, very, very small probability, I would say, that there would be tinkering in the capital gains tax. And that the logic is very clear. Over the last 20, 30 years, I think this incentive of tax benefits to equity investors has ensured that domestic investors are providing capital to the country for growth. If it would not have been for these small investors and the Indian investors over the last 18 months, the kind of selling which we have seen from foreign investors would have meant that Indian markets would have been half of what they are today. But hats off to the Indian investors, and thanks to the various incentives which the government has given over the last 2-3 decades, I think this equity cult has ensured that the markets have been very resilient and Indian companies are now reliant on Indian capital also to grow. So there is a very, very small probability that there would be any disincentive to do this. Having said that, I think the positioning is so light that even in the worst case, if there is some tinkering, there will be definitely a reaction, but it would be much smaller than normal. And I would say that even if there is no further incentive and there is status quo, the market will take it very, very positively. So I think the way the markets are positioned, we remain quite optimistic irrespective of what the decision is. And anyway, my personal view based on logic is that there should not be too much of a tinkering.
In Ved, I'm going to read it off. Duration changes is factored in. If 1 year becomes 2 years, markets are not going to, accepting a knee-jerk reaction, that's factored in. Hike in rates will dampen the sentiment. No major impact if the period is extended to 2 years. See an impact of STCG if it is clubbed with business income, which is that if STCG, which is 15% right now, becomes business income, which is as per slab rate, then Madhu expects the markets could go down. Let's look at some more opinions and some more views on the same. Mahesh, increase in period or rate will be negative. That's his view. Any tinkering could impact the near-term sentiment. Vijay Kedia.
No, I am also of the same opinion. If suppose tenure is raised, is increased, then I don't think it is going to have any negative impact in the market. But of course, if the tax rates are raised, then of course this will take the market down, but only for the short term. Maybe ultimately market will recover in 3 to 6 months' time, because going ahead, future of India is very bright. And one more thing I will try to point out, that on dividend we are paying 42% tax. So I think government should...
Everybody does not pay 42% tax.
No, but you and me are paying.
No, everybody does not pay 42% tax.
The smart seasoned investors are paying.
Anyway, dividend is paid from the money after tax, right? So that is, according to me, that is again a double taxation kind of thing. So maybe whatever happened in last 2 days in the stock market, if that can change the attitude of the finance minister to give some relief to the capital market, so maybe we can expect something good.
That's a tall ask, and what happened in the last 2 days reminds me. Sunil, in the very near term, you think a lot of uncertainty for the markets and the kind of panic that we saw around the Adani FPO, that has somewhat got eased off purely because of the kind of subscription levels we've seen.
No, I think keeping that event apart, obviously that event led to some, huge selling coming in from foreign investors, because they were also very uncertain about the exposure of banks to that particular group, which has got allayed. I think there was unwinding also from the speculative positions, whatever were left also. And I think that is the reason I'm saying that in the run-up to the budget, I have never seen so much cautiousness and positions being so light for maybe, the last 10, 15, 20 years. So I think the positioning is light. I think this was an event which was obviously being looked at, very closely. And I would say the markets have heaved a sigh of relief that it is behind us and it is back to normal. And we can focus on the entire market rather than only on one company or one group. I think to that extent, it does take away the uncertainty pertaining to that particular event.
Markets are rising, markets are rising. We are approaching the budget speech, which will start in less than 20 minutes. And markets are on a high note. I'm going to use the word Khulja Simsim. Why Khulja Simsim? Because Aisha, this graphic, if you frankly ask me, really captures it. I'm going to stand up and just, point out this graphic here. And Ramdev ji, Sunil, you may want to just hear me out. And if you can see it also, the average volatility on the budget day, the price percentage move is about 2%. 2017, 18, 19, there were two budgets in 19, and if you keep the 2021 outlier, so in last six budgets, the average volatility is about 2%. And in last 6 budgets, lot of taxes have come, lot of new taxes have gone, lot of taxes have been increased, lot of assumptions have been changed. But the bottom line here, Ramdev ji, is that, like you said, that in the short term markets may act, react, but ultimately the budget swing on an average in last 6 years is only 2%. Ramdev ji.
Yeah. So, what I think is that India has a competitive advantage in its capital market. The depth of the capital market, the maturity of the capital market, the dynamism of the capital market. Now, if you make it unattractive for the investors, say, if you raise the rate, say short-term capital gains, very few have holding periods of more than 2 years or 3 years or something like that. So some people have more than 1 year, but lot of holdings are about 1 year or less than 1 year. So if you make short-term capital gains taxed as a speculative income or business income, I think that is going to make the market unattractive, which is going to not hurt so much in the short run, but in the long run, I think investors will go away, because the actual return to the direct investors are going to become less, and hence market will become more speculative, and it is not in the interest of the long-term health of the capital markets.
Right. Sunil, let's talk about some of the themes that could come out in the budget. There is, of course, the 3 C's that we anticipate the budget is going to focus on. There's going to be capex, consolidation, and, of course, capital gains, like we've been discussing as well. But a lot has been already done. A lot has already happened in the market with regards to the capex theme. And, considering the large umbrella that is, we've seen just anything and everything within this space actually do well off late. Wanted to understand purely from a sectoral perspective, what do you think is going to come out in the budget, and whether the capex theme remains the dominant theme that investors have to have in their portfolio for the long haul? I'm not talking about the very near term.
So I think combining what Nikunj was talking about in terms of volatility on the budget day with your questions, one is, budget is now becoming more a policy statement rather than tinkering of tax rates in a major way, the way it used to be. So already GST is out of the ambit. You have a GST council which decides the rate. There's not been too much of changes in the direct taxes, and I think to that extent budget is becoming more a policy statement. And the average volatility anyway on a daily basis is like at least 1.5%. So a 2% volatility in budget is like business as normal. Coming to your question, you're right. A lot of this capex oriented themes and all are already playing out. But going back one day and hearing what the Prime Minister had to say yesterday, as well as the economic survey which came out again on 31st of January, I think the clear thought process seems to be that Mr. Modi and his team wants to lay down a roadmap for India from a 10, 20, 25 years perspective. And we are talking about 2047 when India would be a 100-year-old economy. And I think that is great because, what you need is very systematic, long-term plans and objectives which don't change on an annual basis depending on which party presents the budget or which finance minister presents the budget or which PM is leading the effort. I think this budget is to some extent going to be very different from the earlier budgets where we would have talks of things to be done from a 5, 10, 15 years perspective. And when you talk about that, it is very clear that we have seen what has happened on the railway front last 1 year. It's been a fresh breath of air. We have the Vande Bharat trains which are like world class. We have never seen those kind of trains. We're talking about bullet trains. We're talking about metro in some 60, 70 cities. And in Mumbai is finally going to have like a 300-kilometer metro network in the next couple of years. So I think the focus is very clear that we have to move forward in a very decisive manner, in a very time-bound manner as far as infrastructure and all is concerned. I think there is a very evident from this focus on manufacturing, whether it's PLI, incentives, China Plus One. We are seeing when we speak to companies, a lot of enthusiasm in setting up capacities despite all the challenges in the near term. There is demand which is coming up in India. And for a change, I think 2023 globally also is looking better with China opening up and Euro also, which was supposed to be in a recession, except UK. In fact, the yesterday's forecast of IMF, other than UK, there is no other economy in the world which is going to have recession in 23, unlike what was expected earlier. So there's going to be also an opportunity on the export front. So manufacturing, capex definitely are going to be standouts. We are also going into a phase, at least we believe, that inflation has peaked. And from here on, in fact, inflation by April, May will surprise massively because of the base effect. We might also have inflation which will be near zero, just because April and May of 22, we had an all-time high inflation and base effect. And towards the second half, at least our view is that we will start to have rate cuts rather than the fear of rate rises, which will also aid capital formation. So I think a combination of global effects, I would say factors becoming tailwind, a big focus from the government already, and opportunity for the India manufacturing sector. They will all culminate in the budget giving a view and a strategy and a direction from a 5-10 years perspective.
We've discussed capital gains and short-term capital gains, but what I would like to bring out for everyone's notice here is the income tax slab. Now remember, the income tax slab last were changed in 2018. That time inflation was low and interest rates were low. Last 5 years, we've not seen any change in the old regime, and the exemptions in the new regime have not changed. So if you frankly ask me, it's been 4 years, inflation's made a comeback, interest rates are moving higher. Is there case for the income tax exemption limit to change? There is a serious case. And if that happens, from a market standpoint, which are the stocks you should monitor? Our experts are of the view that the consensus view or the consensus stock on the budget day this time is Maruti, followed by Hero MotoCorp, L&T, and to some extent, one would argue, it is also green energy focused companies. So we've got this budget wall, which will tell you that which are the budget themes ET now has promised. They'll just come up on the screen. The budget wall, the stocks which are related with the budget theme. ITC, L&T, Maruti, Tata Power, Reliance, that screen will just change. But I have three of the best stock pickers in Indian stock markets. And every time when Vijay Kedia, Ramdev Agarwal and Sunil Singhania are on air, and if they are saying that, look, we are not going to be focusing on budget per se, it's a near-term event, let's then talk about a theme and an idea from them. So Ramdev ji, before we allow you to go, give us an idea, a money-making idea, the Warren Buffett way.
So I think पहले तो शांति से आप बजट सुनिए. You don't have to speculate anything in next 10-20 minutes. I think let's hear the budget. I think if you see the sentiment of economic survey, they are not counting too much on the global growth, at least for 23-24. So they are talking to a lot more on the capital expenditure by government, and they're hoping that private sector could also pitch in. And then household capital expenditure, which comes through by way of housing. I think there should be, I would expect that some kind of relief for the housing sector. Of course, private capex is going to pick up as the demand picks up. So building up the demand side. So I think let's see the budget. I mean, since we are talking on the day of budget for stock picking, there would be some ideas coming out of this budget. And my sense is it will be more around capital expenditure, some projects companies, the companies which are, in fact, some companies are asking beyond L&T, is there any contracting company? So I think there is a demand building up for capital expenditure, and there I think we might see some scaling up of some companies in next 3-4 years.
Sure, I can see Sunil already nodding in agreement with Ramdev sir that you have to expand your pool beyond L&T. Sunil, defense, railways, what's it going to be for you?
No, I was nodding the head when Ramdev said that let us wait for 10 minutes and hear the budget in peace. We are trying to speculate just before the event, 10 minutes before the event.
Before the event.
No, he's coming after budget also.
Because these things go way beyond the budget, Sunil, don't they?
No, but Sunil ji, you're coming after budget also. So would you give us a stock idea after budget?
No, so I think the biggest... No, Nikunj, we have been interacting for like decades. I think the biggest theme is India. And I think whichever investor has bet on that theme, which is India, has ended up making a lot of wealth. Having said that, there is no doubt that if we have to go from 3.5 trillion to 7 trillion, we have to focus on manufacturing and infrastructure, because services and agricultural can take us only as far as a little bit. But for major like growth in the economy, you have to have infrastructure and manufacturing which keeps pace. You mentioned about renewable. I would completely agree, because that is the best way to insulate India from the oil shocks which we keep on getting now and then. We got that earlier. We got that during the Russia-Ukraine issue. And it is so cheap, even when you look at companies, every company is having a strategy to at least have 30-40% of their energy coming in from solar. So I think that's a big theme. And if there is a little bit of push, it's possible that in 20-30 years, India becomes, completely non-reliant on fossil fuel, which would be the biggest achievement for a country which imports almost, 70-80% of its oil requirement.
Energy, rural focus themes, fiscal deficit number. I'm going to go to that wall once again, which talks about the consensus numbers. But Mr. Kedia, before the budget speech start, every time Vijay Kedia has a reputation of two things: stocks and songs, right?
Stocks and
songs. So you can choose both. You can choose one, but I insist. Let's talk about both, stocks and songs.
So
you can choose the order.
Okay. So let us talk about stock, actually. All these stalwarts, stock, songs and stalwarts, okay. They don't know what is going to come in the budget, like all these pundits, they don't know. Of course, I am last in the lane. But one trade I have done in this market, which is very contrarian bet, I have never done maybe in my life. I have bought one airlines company, one airlines share. Sorry, not company. I'm sorry. It's future. I'm talking about the future. So I have
flash it.
Yeah.
You and I was just like, did you just buy
I beg
the
your pardon. I beg your माफ करना मेरे को भाई. तो मैंने कंपनी का एक एयरलाइंस कंपनी का कोई स्टॉक लिया मेरे को और एक कॉन्ट्रेरियन बेट है. For the simple matter कि airport has become like a fish market and this aircraft has become like omnibus, you know, and the fares have also increased. और वो सिंधिया जी ने बोला था लास्ट ईयर उन्होंने बोला था कि भाई वी डोंट माइंड if the fare of the airlines are increased, otherwise airlines are going to shut down. So looking at all these things, I have bought one airlines stock and it's a contrarian bet. It could be a short-term bet also. So I don't know.
Indigo or SpiceJet? Indigo or SpiceJet?
And of course, Indigo. It's not a recommendation. Of course, this is my personal thing.
So you bought into Indigo?
Indigo.
So we're done with the stock, now with the song. Request for the finance minister.
No, I have sung one. It's an old song,
sure.
And I have tweeted it also and tagged finance minister. And the song goes like this: that पूछे investor तुमसे.
ऐसे नहीं गा के.
नहीं गा के भी क्या करेगा? Sorry. पूछे investor तुमसे. नहीं पूछे student तुमसे. पढ़ लिख करके क्या है करना, नौकरी की लाइन है लंबी, नंबर क्या आएगा अपना, क्या सारी डेमोग्राफी वाली बातें हैं बेकार, डिविडेंड के ऊपर लेती हो मैडम टैक्स क्यों बार बार. इसमें वन थिंग आई वुड लाइक टू ऐड, देन व्हाट एफएम सेज, तो बोली मैडम हमसे माई मगन डोंट यू वरी, बैठी हूं मैं करने सारी चिंता दूर तेरी, 5 ट्रिलियन की इकोनॉमी हो रही है तैयार, जल्दी ही आएगी जीवन में छाएगी तेरे बहार बहार.
Chale, wonderful, and we're going to flash Mr. Vijay Kedia's latest purchase with a disclosure that the stock he spoke about, he's got a vested interest and he's an investor and he really has invested in it. We'll flash that Vijay Kedia's latest purchase, Indigo. But meanwhile, Aisha, let's just step back and look at the markets right now. What do we have on the markets? Markets are approaching the budget speech, which will start any minute now, on a high note. When I say high note, on a relative basis where they were. We are at the highest point of the day. I want to look at Adani group of stocks. How can we forget that? I haven't spoken about Adani group of stocks. FPO has gone through. Adani Enterprises, FPO has gone through. No large stability in the stock price. Adani Ports, again down 10 rupees, even though FPO has gone through. And Adani Power, these three stocks are not showing any signs of stability. So it all just boils down to the 3 C's. The 3 C's in this budget. Walking on the path of fiscal consolidation, ensuring that you are spending, but you are spending more in sectors which will have a multiplier effect, which is infrastructure, and capital gains tax is the big C from a market short-term standpoint, which is something which markets are hoping will not be tinkered. But Aisha, the whole template of the budget in last 2 years is very different. If there is a complete extension of that template, which is clarity, commitment towards growth, and if the finance minister can, she's got this art of balancing growth versus priority, and also taking care of what the election compulsions are. So, is there a change in going to be? Okay, I think she's about to start. I think we can cut across to the
parliament. We have already cut to the parliament feed, and the speaker is in the chair now. Shortly, the finance minister is going to get ready to table the budget, and there she is in the.
Honourable Speaker, I present the budget for 2023-2024. This is the first budget in Amrit Kal. This budget hopes to build on the foundation laid in the previous budget and the blueprint drawn for India at 100. We envision a prosperous and inclusive India in which the fruits of development will reach all sections and citizens, especially our youth, women, farmers, OBCs, scheduled castes and scheduled tribes. In the 75th year of our independence, the world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track, and despite a time of challenges, heading towards a bright future. Today, as Indians stand with their head held high and the world appreciates India's achievements and successes, we are sure that elders who had fought for India's independence will, with joy, bless us in our endeavors going forward as well. Our focus on wide-ranging reforms and sound policies implemented through Sabka Prayas, resulting in Jan Bhagidari and targeted support to those in need, helped us perform well in trying times. India's rising global profile is because of the several accomplishments. Unique world-class digital public infrastructure, example, Aadhaar, CoWIN and UPI. COVID vaccination drive in unparalleled scale and speed. Proactive role in frontier areas such as achieving the climate-related goals, Mission Life and National Hydrogen Mission. During the COVID-19 pandemic, we ensured that no one goes to bed hungry with a scheme to supply free food grains to over 80 crore persons for 28 months. Continuing our commitment to ensure food and nutritional security, we are implementing from 1st January 2023 a scheme to supply free food grain to all Antyodaya and priority households for the next 1 year. Under PM Garib Kalyan Anna Yojana, the entire expenditure of about 2 lakh crore will be borne by the central government. In these times of global challenges, the G20 presidency gives us a unique opportunity to strengthen India's role in the world economic order. With the theme of Vasudhaiva Kutumbakam, we are steering an ambitious, people-centric agenda to address global challenges and to facilitate sustainable economic development. The government's efforts since 2014 have ensured for all citizens a better quality of life and life of dignity. The per capita income has more than doubled to 1.97 lakh rupees. In these 9 years, the Indian economy has increased in size from being 10th to 5th largest in the world. We have significantly improved our position as well as a well-governed and innovative country with a conducive environment for business as reflected in several global indices. We have made a significant progress in many sustainable development goals. The economy has become a lot more formalized as reflected in the EPFO membership, more than doubling to 27 crore and rupees 7,400 crore digital payments of 126 lakh crore rupees through UPI in 2022. The efficient implementation of many schemes with universalization of targeted benefits has resulted in inclusive development. Some of the schemes are 11.7 crore household toilets under Swachh Bharat mission, which is achieved, 9.6 crore LPG connections under Ujjwala, 220 crore COVID vaccination of 102 crore persons, 47.8 crore PM Jan Dhan bank accounts, insurance cover for 44.6 crore persons under PM Suraksha Bima and PM Jeevan Jyoti Yojana, and cash transfer of 2.2 lakh crores of rupees to 11.4 crore to over 11.4 crore farmers under PM Kisan Samman Nidhi. Our vision for the Amrit Kal includes technology-driven and knowledge-based economy with strong public finances and a robust financial sector. To achieve this, Jan Bhagidari through Sabka Saath, Sabka Prayas is essential. The economic agenda for achieving this vision focuses on three things. First, facilitating ample opportunities for citizens, especially the youth, to fulfill.
I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very...
Economic empowerment of women. Deen Dayal Antyodaya Yojana National Rural Livelihood Mission has achieved remarkable success by mobilizing rural women into 81 lakh self-help groups. We will enable these groups to reach the next stage of economic empowerment through formation of large producer enterprises or collectives, with each having several thousand members and managed professionally. They will be helped with raw materials supply and for better design, quality, branding, and marketing of their products. Through supporting these policies, they will be enabled to scale up their operations to serve the large consumer markets, as has been the case with the several startups growing into unicorns. PM Vishwakarma Kaushal Samman, PM Vikas. For centuries, traditional artisans and craftspeople who work with their hands using tools have brought renown for India. They're generally referred to as Vishwakarma. The art and the handicraft created by them represents the true spirit of Atmanirbhar Bharat. For the first time, a package of assistance for them has been conceptualized. The new scheme will enable them to improve the quality, scale, and reach of their products, integrating them with the MSME value chain. The components of the scheme will include not only financial support, but also access to advanced skill training, knowledge of modern digital techniques, and efficient green technologies, brand promotion, linkage with local and global markets, digital payments, and social security. This will greatly benefit the scheduled castes, scheduled tribes, OBCs, women, and people belonging to the weaker sections. Tourism. The country offers immense attraction for domestic as well as foreign tourists. There is a large potential to be tapped in tourism. The sector holds huge opportunities for jobs and entrepreneurship for youth in particular. Promotion of tourism will be taken up on mission mode with active participation of states, convergence of government programs, and public-private partnerships. Green growth. We are implementing many programs for green fuel, green energy, green farming, green mobility, green buildings and green equipment, and policies for efficient use of energy across various economic sectors. These green growth efforts help in reducing carbon intensity of the economy and provides for large-scale green job opportunities. Priorities of this budget. The budget adopts the following 7 priorities. They complement each other and act as the Saptarishi guiding us through the Amritkal. Inclusive development, reaching the last mile, infrastructure and investment, unleashing the potential, green growth, youth power, and financial sector. I now speak on the priority number 1, inclusive development. The government's philosophy of Sabka Saath, Sabka Vikas has facilitated inclusive development covering in specific farmers, women, youth, OBCs, scheduled castes, scheduled tribes, Divyangjan, and economically weaker sections, and overall priority for the underprivileged. Vanchiton ko variyata. There has also been a sustained focus on Jammu Kashmir, Ladakh, and the Northeast. This budget builds on those efforts. Digital public infrastructure for agriculture. Digital public infrastructure for agriculture will be built as an open source, open standard, and interoperable public good. This will enable inclusive farmer-centric solutions through relevant information services for crop planning and health, improved access to farm inputs, credit and insurance, help for crop estimation, market intelligence, and support for growth of agri-tech industry and startups. An agriculture accelerator fund. An agriculture accelerator fund will be set up to encourage agri-startups by young entrepreneurs in rural areas. The fund will aim at bringing innovative and affordable solutions for challenges faced by farmers. It will also bring in modern technologies to transform agricultural practices, increase productivity and profitability. To enhance the productivity of extra long staple cotton, we will adopt a cluster-based and value chain approach through public-private partnerships. This will mean collaboration between farmers, state, and industry for input supplies, extension services, and market linkages. We will launch an Atmanirbhar Clean Plant program to boost availability of disease-free, quality planting material for high-value horticultural crops at an outlay of 2,200 crores. Global hub for millets, which are Sri Anna. India is the forefront. India's at the forefront of popularizing millets, whose consumption furthers nutrition, food security, and welfare of farmers, said the Honorable Prime Minister. We are the largest producer and second largest exporter of Sri Anna in the world. We grow several types of Sri Anna, such as Sri Anna Jowar, Sri Anna Ragi, Sri Anna Bajra, Sri Anna Kutu, Ramdana, Kangni, Kutni, Kutki, Kodo, China, and Sama. These have a number of health benefits and have been an integral part of our food for centuries. I acknowledge with pride the huge service done by small farmers in contributing to the health of fellow citizens by growing these Shri Anna. Now, to make India a global hub for Shri Anna, the Indian Institute of Millet Research, ideally Indian Institute of the Shri Anna Research, Hyderabad, will be supported as the center of excellence for sharing best practices, research and technologies at the international level. The agricultural credit target will be increased to 20 lakh crores with focus on animal husbandry, dairy and fisheries. We will launch a new sub-scheme of PM Matsya Sampada Yojana, which is an existing scheme, but we'll launch a new sub-scheme with targeted investment of 6,000 crores to further enable activities of fishermen, fish vendors and micro and small entrepreneurs, improve value chain efficiencies and expand the market. For farmers, especially small and marginal farmers and other marginalized sections, the government is promoting cooperative-based economic development model. A new Ministry of Cooperation was formed with a mandate to realize the vision of Sahakar Se Samriddhi. To realize this vision, the government has already initiated computerization of 63,000 primary agricultural credit societies with an investment of 2,516 crores. In consultation with all the stakeholders and the states, model bylaws for PACS were formulated, enabling them to become multi-purpose PACS. A national cooperative database is being prepared for countrywide mapping of cooperative societies. With this backdrop, we will implement a plan to set up massive decentralized storage capacity. This will help farmers store their produce and realize remunerative prices through sale at appropriate times. The government will also facilitate setting up of a large number of multi-purpose cooperative societies, primary fisheries societies, and dairy cooperative societies in uncovered panchayat and villages in the next 5 years. Health, education and skilling. 157 new nursing colleges will be established in co-location with the existing 157 medical colleges established since 2014. A mission to eliminate sickle cell anemia by 2047 will be launched. It will entail awareness creation, universal screening of 7 crore people in the age group of 0 to 40 years in affected tribal areas and counseling through collaborative efforts of central ministries and state governments. Facilities in select ICMR labs, Indian Council for Medical Research Labs, will be made available for research by public and private medical college faculty and private sector R&D teams for encouraging collaborative research and innovation. A new program to promote research and innovation in pharmaceuticals will be taken up through centers of excellence. We shall also encourage industry to invest in research and development in specific priority areas. Dedicated multidisciplinary courses for medical devices will be supported in existing institutions to ensure availability of skilled manpower for futuristic medical technologies, high-end manufacturing and research. Teachers' training. Teachers' training will be re-envisioned through innovative pedagogy, curriculum transaction, continuous professional development, dipstick surveys, and ICT implementation. The District Institute of Education and Training will be developed as vibrant institutes of excellence for this purpose. National Digital Library for Children and Adolescents. A National Digital Library for Children and Adolescents will be set up for facilitating availability of quality books across geographies, languages, genres, and levels, and device-agnostic accessibility. States will be encouraged to set up physical libraries for them at panchayat and ward levels and provide infrastructure for accessing the national digital library resources. Additionally, to build a culture of reading and to make up for pandemic time learning loss, the National Book Trust, the Children's Book Trust, and other sources will be encouraged to provide and replenish non-curricular titles in regional languages and in English to these physical libraries. Collaboration with NGOs that work in literacy will also be a part of this initiative to inculcate financial literacy. Financial sector regulators and organizations will be encouraged to provide age-appropriate reading material to these libraries. I move to priority 2, reaching the last mile. Prime Minister Vajpayee's government had formed the Ministry of Tribal Affairs and the Department of Development of Northeast Region to provide a sharper focus to the objective of reaching the last mile. Our government has formed the Ministries of Ayush, Fisheries, Animal Husbandry and Dairying, Skill Development, Jal Shakti and Cooperation. Building on the success of the Aspirational Districts program, the government has recently launched the Aspirational Blocks program, covering 500 blocks for saturation of essential government services across multiple domains such as health, nutrition, education, agriculture, water resources, financial inclusion, skill development, and basic infrastructure. Manya Speaker, sir, Pradhan Mantri PBTG, which is Primitive Vulnerable Tribal Groups Development Mission, is being launched. To improve socio-economic conditions of the particularly vulnerable tribal groups, the PBTGs as we refer them to, Pradhan Mantri PBTG Development Mission will be launched. This will saturate PBTG families and habitations with basic facilities such as safe housing, clean drinking water and sanitation, improved access to education, health, nutrition, road and telecom connectivity, and sustainable livelihood opportunities. An amount of 15,000 crores will be made available to implement the mission in the next 3 years under the Development Action Plan for the Scheduled Tribes. Ekalavya Model Residential Schools. In the next 3 years, Center will recruit 38,800 teachers and support staff for the 740 Ekalavya Model Residential Schools which is serving 3.5 lakh tribal students. In the drought-prone central regions of Karnataka, central assistance of 5,300 crore will be given to Upper Bhadra project to provide sustainable micro-irrigation and filling up of surface tanks for drinking water. PM Awas Yojana. The outlay for PM Awas Yojana is being enhanced by 66% to over 79,000 crores. Bharat Shared Repository of Inscriptions will be set up in a digital epigraphy museum with digitization of 1 lakh ancient inscriptions in the first stage. Support for poor prisoners. For poor persons who are in prisons and unable to afford the penalty or the bail amount, required financial support will be provided. Priority number 3, infrastructure and investment. Investments in infrastructure and productive capacity have a large multiplier impact on growth and employment. After the subdued period of the pandemic, private investments are growing again. The budget takes the lead once again to ramp up the virtuous cycle of investment and job creation. Honorable Speaker, sir, the capital investment outlay is being increased steeply for the 3rd year in a row by 33% to 10 lakh crores, which would be which would be 3.3% of GDP. This will almost be 3 times the outlay made in 2019-20. This substantial increase in recent years is central to the government's efforts to enhance growth potential and job creation, crowd in private investments, and provide a cushion against global headwinds. The direct capital investment by the centre is complemented by the provision made for creation of capital assets through grants and aids to state. The effective capital expenditure of the centre is budgeted at 13.7 lakh crore rupees, which will be 4.5% of GDP. Support to state governments for capital investment. I have decided to continue the 50-year interest-free loan to state governments for 1 more year to spur investment in infrastructure and to incentivize them for complementary policies actions with a significantly enhanced outlay of 1.3 lakh crores. The newly established Infrastructure Finance Secretariat will assist all stakeholders for more private investment in infrastructure, including railways, roads, urban infrastructure and power, which are predominantly depend on public resources. The harmonized master list of infrastructure will be reviewed by an expert committee for recommending the classification and financing framework suitable for Amrit Kal. A capital outlay, I'm talking about railways now, sir, Honorable Speaker, railways. A capital outlay of 2.40 lakh crores has been provided for the railways. This is the highest ever outlay this highest ever outlay is about 9 times the outlay made in 2013-14. 100 critical transport infrastructure projects for last and first mile connectivity for ports, coal, steel, fertilizer and food grain sectors have been identified. They will be taken up on priority with investment of 75,000 crores, including 15,000 crore from private sources. 50 additional airports, heliports, water aerodromes, and advanced landing grounds will be revived for improving regional air connectivity. Sustainable cities for tomorrow. States and cities will be encouraged to undertake urban planning reforms and actions to transform our cities into sustainable cities of tomorrow. This means efficient use of land resources, adequate resources for urban infrastructure, transit-oriented development, enhanced availability and affordability of urban land and opportunities for all. Through property tax governance reforms and ring-fencing user charges on urban infrastructure, cities will be incentivized to improve their creditworthiness for municipal bonds. Like the RIDF, an urban infrastructure development fund will be established through use of priority sector lending shortfall. This will be managed by the National Housing Bank and will be used by public agencies to create urban infrastructure in Tier 2 and Tier 3 cities. States will be encouraged to leverage resources from the grants of the 15th Finance Commission as well as existing schemes to adopt appropriate user charges while accessing the UIDF. We expect to make available 10,000 crore rupees per annum for this purpose. All cities and towns will be enabled for 100% mechanical desludging of septic tanks and sewers to transition from manhole to machine hole mode. Enhanced focus will be provided for scientific management of dry and wet waste. Honorable Speaker, sir, our Prime Minister had said, good governance is the key to a nation's progress. Our government is committed to providing a transparent and accountable administration which works for the betterment and welfare of common citizens. Mission Karma Yogi. Under Mission Karma Yogi, Centre, states and the Union territories are making and implementing capacity building plans for civil servants. The government has also launched an integrated online training platform, I Got Karma Yogi, to provide continuous learning opportunities for lakhs of government employees to upgrade their skills and facilitate people-centric approach. Sir, for enhancing ease of doing business, more than 39,000 compliances have been reduced and more than 3,400 legal provisions have been decriminalized. For furthering the trust-based governance, we have introduced the Jan Vishwas Bill to amend 42 central acts. This budget proposes a series of measures to unleash the potential of our economy. Centers of Excellence for Artificial Intelligence. For realizing the vision of Make AI in India and Make AI Work for India 3 centers of excellence for artificial intelligence will be set up in top educational institutions. Leading industry players will partner in conducting interdisciplinary research, develop cutting-edge applications, and scalable problem solutions in the areas of agriculture, health, and sustainable cities. This will galvanize an effective AI ecosystem and nurture quality human resources in the field. National Data Governance Policy. To unleash innovation and research by startups and academia, a national data governance policy will be brought out. This will enable access to anonymized data. The KYC process will be simplified, adopting a risk-based instead of one-size-fits-all approach. The financial sector regulators will also be encouraged to have a KYC system fully amenable to meet the needs of digital India. One-stop solution for identity and address updating. A one-stop solution for reconciliation and updating of identity and address of individuals maintained by various government agencies, regulators, and regulated entities will be established using DigiLocker service and Aadhaar as foundational identity. Speaker, sir, common business identifier. For the business establishments required to have a permanent account number, the PAN will be used as the common identifier for all digital systems of specified government agencies. This will bring ease of doing business, and it will be facilitated through a legal mandate. For obviating the need for separate submission of same information to different government agencies, a system of unified filing process will be set up. Such filing of information or return in simplified forms on a common portal will be shared with other agencies as per the filer's choice. Vivad se Vishwas 1. Relief for MSMEs. In cases of failure by MSMEs to execute contracts during the COVID period, 95% of the forfeited amount relating to the bid or performance security will be returned to them by government and government undertakings. This will provide relief to the MSMEs. Vivad se Vishwas 2. Settling contractual disputes. To settle contractual disputes of government and government undertakings, wherein arbitral award is under challenge in a court, a voluntary settlement scheme with standardized terms will be introduced. This will be done by offering graded settlement terms depending on pendency level of the dispute. The state support mission of Niti Aayog will be continued for 3 years for our collective efforts towards national priorities. Result-based financing. To better allocate scarce resources for competing development needs, the financing of select schemes will be changed on a pilot basis from input-based to result-based. E-courts. For efficient administration of justice, Phase 3 of the e-courts project will be launched with an outlay of 7,000 crores. Fintech services in India have been facilitated by our digital public infrastructure, including Aadhaar, PM Jan Dhan Yojana, Video, KYC, India Stack, and UPI. To enable more fintech innovative services, the scope of documents available in DigiLocker for individuals will be expanded. An entity, DigiLocker, will be set up for the use by MSMEs, large businesses, and also charitable trusts. This will be towards storing and sharing documents online securely whenever needed with various authorities, regulators, banks, and other business entities. 5G services. 100 labs for developing applications using 5G services will be set up in engineering institutions. To realize a new range of opportunities, business models, and employment potential. The labs will cover, among others, applications such as smart classrooms, precision farming, intelligent transport systems, and healthcare applications. Lab-grown diamonds. Lab-grown diamonds is a technology and innovation-driven emerging sector with high employment potential. These environment-friendly diamonds, which have optically and chemically the same properties as natural diamonds. To encourage indigenous production of LGD, lab-grown diamond seeds and machines, and to reduce import dependency, a research and development grant will be provided to one of the IITs for 5 years. To reduce the cost of production, a proposal to review the custom duty on LGD seeds will be indicated in Part B of the speech. I come to the fifth priority, Honorable Speaker, sir, green growth. Honorable Prime Minister has given a vision for life or lifestyle for environment to spur a movement of environmentally conscious lifestyle. India is moving forward firmly for the Panchamrit, the net zero carbon emission by 2070 to usher in green industrial and economic transition. This budget builds on our focus on green growth. The recently launched National Green Hydrogen Mission, with an outlay of 19,700 crores, will facilitate transition of the economy to low carbon intensity, reduce dependence on fossil fuel imports, and make the country assume technology and market leadership in this sunrise sector. Our target is to reach an annual production of 5 MMT by 2030. Energy transition. This budget provides for 35,000 crores for priority capital investment towards energy transition and net zero objectives and energy security by Ministry of Petroleum and Natural Gas. To steer the economy on sustainable development path, battery energy storage systems with capacity of 4,000 MWH will be supported with viability gap funding. A detailed framework for pumped storage projects will also be formulated. Renewable energy evacuation. The interstate transmission system for evacuation and grid integration of 13 gigawatt renewable energy from Ladakh will be constructed with investment of 20,700 crore, including central support of 8,300 crores. Green credit program. For encouraging behavioral change, a green credit program will be notified under the Environment Protection Act. This will incentivize environmentally sustainable and responsive actions by companies, individuals, and local bodies, and help mobilize additional resources for such activities. PM Program for Restoration, Awareness, Nourishment and Amelioration of Mother Earth, PM Pranam, will be launched to incentivize states and union territories to promote alternative fertilizers and balanced use of chemical fertilizers. Go Bardhan Scheme, 500 new waste-to-wealth plants under Go Bardhan, galvanizing organic bio-agro resources done. Go Bardhan scheme will be established for promoting circular economy. These will include 200 compressed biogas plants, including 75 plants in urban areas, and 300 community or cluster-based plants at a total investment of 10,000 crores. I will refer to this in Part B also. In due course, a 5% CBG mandate will be introduced for all organizations marketing natural and biogas. For collection of biomass and distribution of biomanure, appropriate fiscal support will also be provided. Bharatiya Prakritik Kheti Bio-Input Resource Centers. Over the next 3 years, we will facilitate 1 crore farmers to adopt natural farming. For this, Honorable Speaker, 10,000 bio-input resource centers will be set up, creating a national-level distributed micro-fertilizer and pesticide manufacturing network. Mishti. Building on India's success in afforestation, mangrove initiative for shoreline habitats and tangible incomes, Mishti, will be taken up for mangrove plantation along the coastline and on salt pan lands wherever feasible through convergence between Manrega, Campa, Fund and other sources. Amrit Dharohar. Wetlands are vital ecosystems which sustain biological diversity. In his latest Mann Ki Baat, the Prime Minister said, now, I quote, now the total number of Ramsar sites in our country has increased to 75, whereas before 2014, there were only 26, unquote. Local communities have always been at the forefront of conservation efforts. The government will promote their unique conservation values through Amrit Dharohar, a scheme that will be implemented over the next 3 years to encourage optimal use of wetlands and enhance biodiversity, carbon stock, ecotourism opportunities, and income generation for local communities. Coastal shipping. Coastal shipping will be promoted as the energy efficient and lower cost mode of transport, both for passengers and freight, through PPP mode with viability gap funding. Vehicle replacement. Vehicle replacement is an important continuing policy, replacing the old political, replacing, absolutely, thank you. Replacing old polluting vehicles may be applicable, right? Replacing old polluting vehicles is an important part of greening our economy. In furtherance of the vehicle scrapping policy mentioned in Budget 21-22, I have allocated adequate funds to scrap old vehicles of the central government. States will also be supported in replacing old vehicles and old state ambulances. Honorable Speaker, sir, I move to priority 6, youth power. To empower our youth and help the Amrit PD realize their dreams, we have formulated the National Education Policy, which is very wide in its scope, but one of the things is also to focus on skilling, adopted economic policies that facilitate job creation at scale and have supported business opportunities. Pradhan Mantri Kaushal Vikas Yojana. Pradhan Mantri Kaushal Vikas Yojana 4.0 will be launched to skill lakhs of youth within the next 3 years. On-job training, industry partnership, and alignment of courses with needs of industry will be emphasized. The scheme will also cover new age courses for Industry 4.0 like coding, AI, robotics, mechatronics, IoT, 3D printing, drones, and other soft skills. To skill youth for international opportunities, 30 Skill India International Centers will be set up across different states. The digital ecosystem for skilling will be further expanded with the launch of a unified Skill India digital platform for enabling demand-based formal skilling, linking with employers including MSMEs, and facilitating access to entrepreneurship schemes. To provide stipend support to 47 lakh youths in 3 years, direct benefit transfer under a pan-India national apprenticeship promotion scheme will be rolled out. Tourism. Honorable Speaker, sir, with an integrated and innovative approach, at least 50 destinations will be selected through challenge mode. In addition to aspects such as physical connectivity, virtual connectivity, tourist guides, high standards for food streets, and tourist security, all the relevant aspects would be made available on an app to enhance tourist experience. Every destination would be developed as a complete package. The focus of development of tourism would be on domestic as well as foreign tourists. Sector-specific skilling and entrepreneurship development will be dovetailed to achieve the objectives of Dekho Apna Desh initiative. This was launched as an appeal by the Honorable Prime Minister to the middle class to prefer domestic tourism over international tourism. The integrated development of theme-based tourist circuits, the Swadesh Darshan scheme, was also launched. Under the Vibrant Villages program, tourism infrastructure and amenities will be facilitated in border villages. Unity Mall. States will be encouraged to set up a Unity Mall in their state capital or most prominent tourism center or the financial capital for promotion and sale of their one district, one product and GI products and other handicraft products, and for providing space for such products of all other states as well. Sir, priority number 7, financial sector. Our reforms in the financial sector and innovative use of technology have led to financial inclusion at scale, better and faster service delivery, ease of access to credit, and participation in financial markets. This budget proposes to further these measures. Credit guarantee for MSMEs. Last year, I proposed revamping of the credit guarantee scheme for the MSMEs. I am happy to announce that the revamped scheme will take effect from 1st April 2023 through infusion of 9,000 crores in the corpus. This will enable additional collateral-free guaranteed credit of 2 lakh crores of rupees. Further, the cost of credit will be reduced by about 1%. A national financial information registry will be set up to serve as the central repository of financial and ancillary information. This will facilitate efficient flow of credit, promote financial inclusion, and foster financial stability. A new legislative framework will govern this credit public infrastructure and will be designed in consultation with the RBI. To meet the needs of Amrit Kal and to facilitate optimum regulation in the financial sector, public consultation, as necessary and feasible, will be brought to the process of regulation making and issuing subsidiary directions. To simplify, to ease, and to reduce cost of compliance, financial sector regulators will be requested to carry out a comprehensive review of existing regulations. For this, they will consider suggestions from public and regulated entities. Time limits to decide the application under various regulations will also be laid down. Honorable Speaker, sir, to enhance business activities in GIFT IFSC, the following measures will be taken. Delegating powers under the SEZ Act to the IFSCA to avoid dual regulation. Setting up a single window IT system for registration and approval of IFSCA, SEZ authorities, GSTN, RBI, SEBI, and IRDAI. Permitting acquisition financing by IFSC banking units of foreign banks. Establishing a subsidiary of Exim Bank for trade refinancing. Amending IFSCA Act for statutory provisions for arbitration, ancillary services, and avoiding dual regulation under the SEZ Act, and recognizing offshore derivative instruments as valid contracts. Honorable Speaker, sir, data embassy. For countries looking for digital continuity solutions, we will facilitate setting up of their data embassies in GIFT IFSC. Improving governance and investor protection in banking sector. To improve bank governance and enhance investors' protection, certain amendments to the Banking Regulation Act, the Banking Companies Act, and the Reserve Bank of India Act are being proposed. Capacity building in securities market. Honorable Speaker, sir, to build capacity of functionaries and professionals in the securities market, SEBI will be empowered to develop, regulate, maintain, and enforce norms and standards for education in the National Institute of Securities Markets and to recognize award of degrees, diplomas, and certificates. A central processing center will be set up for faster response to companies through centralized handling of various forms filed with field officers under the Companies Act. Reclaiming of shares and dividends. For investors to reclaim unclaimed shares and unpaid dividends from the Investor Education and Protection Fund Authority with ease, from the Investor Education and Protection Fund Authority with ease, an integrated IT portal will be established. Digital payments continue to find wide acceptance. In 2022, they show an increase of 76% in transaction and 91% in value. Fiscal support for this digital public infrastructure will continue in 2023-2024. आजादी का अमृत महोत्सव, महिला सम्मान बचत पत्र. For commemorating Azadi Ka Amrit Mahotsav, a one-time new small savings scheme, Mahila Samman Savings Patra or Savings Certificate, Mahila Samman Savings Certificate will be made available for a 2-year period up to March 2025. This will offer deposit facility up to 2 lakh in the name of a woman or girls for a tenure of 2 years at fixed interest rate of 7.5% with partial withdrawal option. Senior citizens. The maximum deposit limit for senior citizens savings scheme will be enhanced from 15 lakh to 30 lakhs of rupees. The maximum deposit limit for monthly income account scheme will be enhanced from 4.5 lakh to 9 lakh for single account and from 9 lakh to 15 lakh for joint account. Honorable Speaker, sir, fiscal management. 50 years interest-free loan to states. The entire 50-year loan to states has to be spent on capital expenditure within 2023-24. Most of this will be at the discretion of the states, but a part will be conditional on states increasing their actual capital expenditure. Parts of the outlay will also be linked to or allocated for the following purposes: scrapping old government vehicles, urban planning reforms and actions, financing reforms in urban local bodies to make them creditworthy for municipal bonds, housing for police personnel above or as part of the police station, constructing unity malls, children and adolescent libraries and digital infrastructure, and state share of capital expenditure of central schemes. Honorable Speaker, sir, fiscal deficit of states. States will be allowed a fiscal deficit of 3.5% of GSDP, of which 0.5% will be tied to power sector reforms. Revised estimates 2022 to 2023. The revised estimate, Honorable Speaker, sir, of the total receipts other than borrowing is 24.3 lakh crores, of which the net tax receipts are 20.9 lakh crores. The revised estimate of the total expenditure is 41.9 lakh crores of rupees, of which the capital expenditure is about 7.3 lakh crores. The revised estimate of the fiscal deficit is 6.4% of GDP, adhering to the budget estimate. So budget estimates of 2023-24. Coming to 2023-24, the total receipts other than borrowings and the total expenditure are estimated at 27.2 lakh crores and 45 lakh crores respectively. The net tax receipts are estimated at 23.3 lakh crores. The fiscal deficit is estimated to be 5.9% of the GDP. In my budget speech for 21-22, I had announced that we plan to continue the path of fiscal consolidation, reaching a fiscal deficit of below 4.5% by 2025-26, with a fairly steady decline over the period. We have adhered to this path, and I reiterate my intention to bring the fiscal deficit below 4.5% of GDP by 2025-26. To finance the fiscal deficit in 2023-24, the net market borrowings from dated securities are estimated at 11.8 lakh crores. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 15.43 lakh crores of rupees. Honorable Speaker, sir, I now move to Part B. Indirect taxes. My indirect tax proposals will aim to promote exports, boost domestic manufacturing, enhance domestic value addition, encourage green energy and mobility. A simplified tax structure with fewer tax rates helps in reducing compliance burden and improving tax administration. I propose to reduce the number of basic customs duty rates on goods other than textiles and agriculture from 21 to 13. As a result, there are minor changes in the basic custom duties, cesses and surcharges on some items including toys, bicycle, automobiles and naphtha. Green mobility. To avoid cascading of taxes on blended compressed natural gas, I propose to exempt excise duty on GST paid compressed biogas contained in it. To further provide impetus to green mobility, customs duty exemptions is being extended to import of capital goods and machinery required for manufacture of lithium-ion cells for batteries used in electrical vehicles as well. Electronics. As a result of various initiatives of the government, including phased manufacturing program, mobile phone production in India has increased from 5.8 crore units valued at about 18,900 crore in 2014-15 to 31 crore units valued at 2,75,000 crore in the last financial year. To further deepen domestic value addition in manufacturing of mobile phones, I propose to provide relief to customs duty. I propose to provide relief in customs duty on import of certain parts and inputs like camera lens and continue the concessional duty on lithium-ion cells for batteries for another year. Similarly, to promote value addition in manufacture of televisions, I propose to reduce the basic customs duty on parts of open cells of TV panels to 2.5%. Electrical. To rectify inversion of duty structure and encourage manufacturing of electric kitchen chimneys, the basic custom duty on electric kitchen chimney is being increased from 7.5% to 15%, and that on heat coils for these is proposed to be reduced from 20% to 15%. Chemicals and petrochemicals. Denatured ethyl alcohol is used in chemical industry. I propose to exempt basic customs duty on it. This will also support the ethanol blending program and facilitate an endeavor for energy transition. Basic customs duty is also being reduced on acid-grade fluorospar from 5% to 2.5% to make the domestic fluorochemicals industry competitive. Further, the basic customs duty on crude glycerin for use in manufacture of epichlorohydrin is proposed to be reduced from 7.5% to 2.5%. Marine products. In the last financial year, marine products recorded the highest export growth, benefiting farmers in the coastal states of the country. To further enhance the export competitiveness of marine products, particularly shrimps, duty is being reduced on key inputs for domestic manufacture of shrimp feed. India is a global leader, as I said in Part A, in cutting and polishing of natural diamonds, contributing about 3/4 of the global turnover by value. With the depletion of deposits of natural diamonds, the industry is moving towards lab-grown diamonds, and it holds huge promise. To seize this opportunity, I propose to reduce the basic customs duty on seeds used in their manufacture. Custom duties on door or dore and bars of gold and platinum were increased earlier this fiscal. I propose to increase the duties on articles made therefrom to enhance the duty differential. I also propose to increase the import duty on silver doors, bars and articles to align them with that on gold and platinum. To facilitate availability of raw materials for the steel sector, exemptions from basic custom duty on raw materials for manufacture of CRGO steel, ferrous scrap and nickel cathode is being continued. Similarly, the concessional BCD of 2.5% on copper scrap is also being continued to ensure the availability of raw materials for secondary copper producers who are mainly in the MSME sectors. Compounded rubber. The basic custom duty rate on compounded rubber is being increased from 10% to 25% or 30 kg, whichever is lower, at par with that of natural rubber other than latex, to curb circumvention of duty. Cigarettes. National calamity contingent duty on specified cigarettes was last revised 3 years ago. This is proposed to be revised upwards by about 16%. Direct taxes. I now come to my direct tax proposals. Honourable Speaker, these proposals aim to maintain continuity and stability of taxation, further simplify and rationalize various provisions to reduce the compliance burden, promote the entrepreneurial spirit and provide tax relief to citizens. It has been constant endeavour of the Income Tax Department to improve taxpayer services by making compliance easy and smooth. Our taxpayers portal received a maximum of 72 lakh returns in a day, processed more than 6.5 crore returns this year. Average processing period reduced from 93 days in financial year 13-14 to 16 days only now. And 45% of the returns were processed within 24 hours. We intend to further improve this, roll out the next generation common IT return form for taxpayer convenience, and also plan to strengthen the grievance redressal mechanism. MSMEs and professionals. MSMEs are growth engines of our economy. Micro enterprises with turnover up to 2 crore of rupees and certain professionals with turnover of up to 50 lakh rupees can avail the benefit of presumptive taxation. I propose to provide enhanced limits of 3 crore and 75 lakh respectively to the taxpayers whose cash receipts are no more than 5%. Whose cash receipts are no more than 5%. Moreover, to support MSMEs in timely receipt of payments, I propose to allow deduction for expenditure incurred on payments made to them only when payment is actually made. Cooperation. Cooperation is a value to be cherished. In realizing our Prime Minister's goal for Sahkar Se Samriddhi and his resolve to connect the spirit of cooperation with the spirit of Amrit Kal, in addition to the measures proposed in Part A, I have a slew of proposals for the cooperation sector. First, new cooperatives that commence manufacturing activities till 2024, 31st March, shall get the benefit of a lower tax rate of 15%, as is presently available to new manufacturing companies. Secondly, I propose to provide an opportunity to sugar cooperatives to claim payments made to sugarcane farmers for the period prior to the assessment year 2016-17 as expenditure. This is expected to provide them a relief of almost 10,000 crores. Thirdly, I am providing a higher limit of 2 lakh per member for cash deposits to loans in cash by primary agricultural cooperative societies and primary cooperative agriculture and rural development banks. I repeat that. Thirdly, I am providing a higher limit of 2 lakh per member for cash deposits to and loans in cash by primary agricultural cooperative societies and primary cooperative agricultural and rural development banks. Similarly, a higher limit of 3 crore for TDS on cash withdrawal is being provided to cooperative societies. Startups. Entrepreneurship is vital for a country's economic development. We have taken a number of measures for startups and they have borne results. India is now the 3rd largest ecosystem for startups globally and ranks 2nd in innovation quality among middle-income countries. I propose to extend the date of incorporation for income tax benefits to startups from 31/3/2023 to 31/3/2024. I further propose to provide the benefit of carry forward of losses on change of shareholding of startups from 7 years of incorporation to 10 years. To reduce the pendency of appeals at commissioner level, I propose to deploy about 100 joint commissioners for disposal of small appeals. We shall also be more selective in taking up cases for scrutiny of returns already received this year. Better targeting of tax concessions. For better targeting of tax concessions and exemptions, I propose to cap deduction from capital gains on investment in residential house under Section 54 and Section 54F to 10 crores. Another proposal with similar intent is to limit income tax exemption from proceeds of insurance policies with very high value. Rationalization. Honorable Speaker, sir, there are a number of proposals relating to rationalization and simplification. Income of authorities, boards, and commissions set up by statutes of union or state for the purpose of housing, development of cities, towns, and villages, and regulating and developing an activity or matter is proposed to be exempted from income tax. Other major measures in this direction are removing the minimum threshold of 10,000 for TDS and clarifying taxability relating to online gaming, not treating conversion of gold into electronic gold receipts and vice versa as capital gains, reducing the TDS rate from 30% to 20% on taxable portion of EPF withdrawals in non-PAN cases, and taxation on income for market-linked debentures. Other major proposals in the finance bill relate to the following: extension of period of tax benefits to funds relocating to IFSC, GIFT City till 31/3/2025, decriminalization under Section 276A of the Income Tax Act, allowing carry forward of losses on strategic disinvestment, including that of IDBI Bank, and providing EEE status to Agnivir Fund. Personal income tax. Now I come to what everyone is waiting for. Personal income tax. I have 5 major announcements to make in this regard. These primarily benefit our hard-working middle class. The first one concerns rebate. Currently, those with income up to 5 lakh do not pay any income tax in both old and new regimes. I propose to increase the rebate limit to 7 lakhs in the I propose to increase the rebate limit to 7 lakh in the new tax regime. Thus, persons in the new tax regime with income up to 7 lakhs will not have to pay any tax at all. The second proposal relates to middle-class individuals. I had introduced in the year 2020 the new personal income tax regime with 6 income slabs starting from 2.5 lakh. I propose to change the tax structure in this regime by reducing the number of slabs to 5 and increasing the tax exemption limit to 3 lakhs. The new tax rates are 0 to 3 lakh, nil. 3 to 6 lakhs, 5%. 6 to 9 lakhs, 10%. 9 to 12 lakh, 15%. 12 to 15 lakhs, 20%. And above 15 lakhs, 30%. This will provide major relief to all taxpayers in the new regime. An individual with an annual income of 9 lakhs will be required to pay only 45,000 rupees. This is only 5% of his or her income. It is a reduction of 25% on what he or she is required to pay now. That is 60,000. So in the place of 60,000, it is now only 45,000. Similarly, an individual with an income of 15 lakh rupees would be required to pay only 1.5 lakh or 10% of his income or her income, a reduction of 20% from the existing liability of 1,87,500 rupees. My third proposal is for the salaried class and the pensioners, including family pensioners, for whom I propose to extend the benefit of standard deduction to the new tax regime. Each salaried person with an income of 15.5 lakh rupees or more will thus stand to benefit by 52,500 rupees. My fourth announcement in personal income tax is regarding the highest tax rate, which in our country is 42.74%. This is among the highest in the world. I propose to reduce the highest surcharge. I propose to reduce the highest surcharge rate from 37% to 25% in the new tax regime. This would result in reduction of the maximum rate. This would result in the reduction of the maximum tax rate to 39%. Lastly, the limit of 3 lakh rupees for tax exemption on leave encashment on retirement of non-government salaried employees was last fixed in the year 2002, when the highest basic pay in the government was only 30,000 rupees per month. In line with the increase in the government salaries, I am proposing to increase this limit to 25 lakh rupees. We are also making the new income tax regime as the default tax regime. However, citizens will continue to have the option to avail the benefit of the old tax regime. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 38,000 crore to 37,000 crore in direct taxes, and rupees 1,000 crore in indirect taxes will be foregone, while revenue of about 3,000 crore will be additionally mobilized. Thus, the total revenue foregone is about 35,000 crores annually. Honorable Speaker, sir, with these words, I commend the budget to this August House.
Item number 1, माननीय item number 2, श्रीमती निर्मला सीतारमण जी.
Sir, with your permission, I lay on the table of the following statements. Under Section 3(1) of the Fiscal Responsibility Budget Management Act 2003, 1. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
माननीय सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई गई है. आप
has been tabled, and growth seems to be the priority of the finance minister. It's a pro-poor, pro-middle class and a strong budget which will ensure that India indeed will take the leap forward. The first C, the finance minister has walked on the path of fiscal consolidation with the assumption of a fiscal deficit below 6%. Second, massive increase in capital expenditure, which will create the multiplier effect for the economy. Third, tax rates, big relief for middle class and every taxpayer in the country. Fourth, no changes in the capital tax regime. LTCG and STCG remains firm. So this budget is an extension of the template what the finance minister has maintained. It is about taking the economy on a differently. Markets, I'm going to mark the markets for you. Let's take it out. Let's look at Nifty, the Sensex, the Bank Nifty. No new tax and a tax rebate. Indian taxpayers will have more money in their hands. And Aisha, this is exactly what everybody thought. The tax rate cut is a surprise. The consolidation on the revenue is brilliant. The whole assumption that
Nikunj, there you go. I think this graph says it all. It's a almost 200-point move that you're seeing in the Nifty. No mention of capital gains, and the markets are clearly breathing a sigh of relief. And like you said, it's a pro-growth budget, right? More money in the hands of consumers, and that's exactly what the markets wanted.
Everything.
And a very, very big capex outlay.
Yeah, everything is more, which is more tax cuts, more fiscal consolidation, very conservative revenue, and a very strong outlay in terms of capital expenditure, which is really creating a multiplier effect.
Absolutely. It's an 800-point move that you're seeing on the Sensex right now, 200 points up on the Nifty. In fact, I just want to quickly look at some of the gainers as well. What an L&T, what an ICICI Bank, what a Maruti, the entire auto pack, and ITC. We will talk about that stock in just a bit, what these stocks are up to and what's really contributing to the Nifty move right now. There you go. ICICI Bank, although it was strong, Nikunj, going into the budget as well. So that has looked strong. Maruti Suzuki, not as much of a move coming in on the stock. But let's just bring up all the gainers in today's trading session and tell you what's really powering the Nifty right now. Nikunj?
You know, Aisha, you have to look at the context here, which is what is important. Budget is also about the continuity, which is the first, the continued consolidation. Second is the productive capital outlay, which is great. And every taxpayer will have more money in their hand. Nobody expected the peak surcharge rate actually should come down, and that actually has happened. Shashank Srivastav is ready, Nilesha is getting ready, Vijay Kedia is about to get ready. Whom can we go across to? Okay, Prashant Jain, so nice to have you back. Prashant, how would you greet this budget? 8 on 10, 10 on 10, or 11 on 10? 11 on 10.
You know, I have never seen Prashant smile ever.
Exactly. 20
This
years. 20
this
years.
is our first.
20 years. Aisha is saying that even when your NAVs were in the top quartile, you never laughed so much with HDFC Mutual Fund. You're smiling after the budget. It's a photo op moment for us, Prashant. You indeed like the budget. I can see that. No, I think it's a great budget, Nikunj, because capex is up sharply, which was very good, and fiscal consolidation has been reiterated, which again I think is extremely good because India's common debt to GDP has moved up sharply post-COVID. So I think we should be able to moderate that. There is stability and further simplicity in taxation, which is liked by everyone, individuals, businesses. And a lot has been done to further promote domestic value addition, manufacturing, tweaking in custom duty rates, I think is supportive of that. And I also think the assumptions behind the budget are quite reasonable. The tax growth, the revenue growth is reasonable. I think what is probably helping this year a bit is the likely sharp fall in subsidies on fertilizers. So net, I think it's a very good budget to my mind. Once again, remember, in the run-up to the market, in the run-up to the budget, the markets were nervous. The markets were puffy-duffy. Lot has changed in last 24 hours. Adani FPO has sailed through, but now the center stage of the market will go back to one, relief, nothing on the capital gains tax. Second, see, capex outlay very strong. Third, the revenue growth assumptions are very conservative and realistic, looking at the bent of the economy. And number 4, I guess, is the path of fiscal consolidation. Shifali is ready, Vijay Kedia is ready, Nilesh is ready. Who wants to go first? Let the lady go first. Yes, ma'am.
All smiles. I think much more than what we were expecting in the budget, especially on the personal tax side.
What is that much more?
I'm sorry?
What is that much more?
The much more, of course, in terms of the relaxation of the slab rates and the surcharge. You know, getting it down to this level was not expected in the current budget. So definitely a big plus. And overall, not tinkering with the rest of the changes, right? I mean, the corporate rates left untouched. Relaxation for the startups was also hugely positive. And lots of good stuff for the gift city as well. So I think all in all, they've taken care of all the soft points and done what they could in this last full-fledged budget. So,
yeah, absolutely.
Finally breathing a sigh of relief.
This is massive. This is massive.
Yeah.
I think this is a super budget. It's a lot more than what we could have bargained
Just super or super duper?
It's a super duper.
A super duper.
In my words, tod-ford budget. Okay. I think it's a very responsible, progressive budget. Okay. Lowering taxes for all sections, I think, is a big move. I think this is a big move in terms of taking India forward. The initiatives on technology, digital, setting up centers of excellence for artificial intelligence. I mean, look at the whole narrative of the budget. A budget 10 years back, a budget now, and a budget which is now really looking ahead. Setting up physical and digital libraries for children in villages. I think this is massive. This is not about setting up physical infrastructure. This is about setting up intellectual infrastructure for the future. This is making India a much more stronger and a modern economy. And this, I think, is the big takeaway of this budget.
Vijay Kedia, dhamakedar budget?
Yeah, I think it is 10 out of 5. It is not 5 out of 5. Because I was expecting that actually they are going to tinker with capital gain tax. So the tenure has not been increased and tax rate has also not been increased. So of course it's a Diwali, it's a bumper Diwali budget kind of budget.
For the first time, in the longest time you and me have tracked budget, you've seen the aggregate tax rate for HNI and ultra HNI go down. Normally it's always that, you know, the rich are earning more, tax them more because you need fiscal, you need more revenue.
More money, yeah.
So this time around, even though this is about 1.5 years away from the election cycle, the first time the aggregate tax rate has come down. Just shows the mindset of the government in terms of how confident they are about the bent of the economy and about revenue buoyancy. Because fiscal deficit, if it comes down and if assumptions are normal, that means the government is very optimistic about where they feel the tax collections are moving. Would you agree with me, all three of you? Is that the main crux of this budget?
Oh, absolutely. I mean, absolutely. I think it clearly shows a lot of conviction and a boldness on the part of the government to assume that clearly taxes are going to keep rising and the ability to lower taxes and still have higher taxes, which means that the government seems to be very confident on growth, which I think is a huge message to investors and to markets and to business and enterprises.
In fact, Prashant, I think what stood out for me from a market perspective was the capex outlay, Prashant, which has been outlined, right? I mean, a mammoth 10 lakh crore rupees, effective capex at 13.7 lakh crores, railway capex at almost 2.5 lakh crores, and this is something that the market would like.
No, absolutely. I mean, if you see last 5 years, the capex is up almost 3 times. It was 3 lakh crores in March 19 and 10.5. So I think this is extremely good because private capex is still sluggish. I think it will pick up, all stars align, but still it is sluggish. So I think government capex, I think, is the need of the hour.
So Prashant, can you identify now the clear set of winners based on this year's budget? One, the relief on the capital gain tax. B, the complete intention of the government there, where they want to spend and how they want to spend. Given that this market has been volatile, do you think this budget now, the clear set of outperformers will emerge clearly?
Positive for all sectors because it gives more money to consumers, which means more consumption. Capex is clearly good. And higher GDP growth is very positive for banks as well. And of course, it does not impact the IT sector. I mean, that's the very nature of it. I think broadly this budget is positive for all. I think banks are also offering reasonable value compared to the consumption-oriented sectors. So I feel that could probably lead this market.
And Nilesh, Vijay, is if you're spending more, and if you are giving more money in the hand of taxpayer, that means there is a word which we always fear will come back. Guess that word. Inflation. You will stroke inflation because of this. You will stroke inflation because of this when the world is struggling with inflation. Indirectly, this in a sense could stroke inflation?
No, I don't think so. This will not stroke inflation. I think inflation is more dependent on global factors. It's going to be the prices of crude, commodities, coal. Those are some of the things which are going to drive inflation. I don't think lowering taxes and leaving more money in the hands of consumers is in any way going to stroke inflation. I think the bigger issue to address is essentially demand, to revive demand. Demand which was turning a little subdued. I think these initiatives of the budget will revive consumer demand, and I think that is going to be the big takeaway of this budget. It's not going to be inflation.
I must admit, the big takeaway is, guys, the Nifty futures are now almost 250 points higher. We're sitting at the top of the day. If we can just bring up the intraday graph of the Nifty here, we're up almost 1.5%. We're back at 18,000. 18,041 is where the Nifty futures are right now. The Nifty 50, there you go. The spot Nifty is higher by about 271 points. And it's a breakout on ICICI Bank. That's the one which is really leading the Nifty moves right now. 3.7% up on ICICI Bank futures. Tata Steel is holding higher by 3%. L&T has shot up almost 3%. Eicher Motors up 2.5%. HDFC up 2.5%. And Kotak Bank as well higher by 2.25%. So this is literally, Nikunja, salute for from the markets to the finance minister.
Aisha, markets are all about expectation management. The point we were discussing that in the run-up to the budget, markets were
so light.
It was fair. It was more than the positioning. It was light. Positioning could be a function of the mood. But because of what happened to Adani group of stocks and PSU stocks, the market were in a grip of fear. And when you have a market which is in grip of fear, and when you get a blockbuster budget like this, that is going to, force the bears to run between their tails. So for me, the punchline is, post the budget, the bears are running with tail between their legs. Kedia Saab, short seller dum dabakar bhag raha hai.
Dum dabake bhag raha hai.
शॉर्ट सेलर भागे वो कोई बात नहीं है, ये समझने का कि FIIs अभी क्या करती है अभी वो दैट इज द मोस्ट इम्पोर्टेंट फैक्टर.
वापस आएंगे और कहाँ जाएंगे, यहाँ नहीं आएंगे तो
अभी वो मेरा एक ट्वीट था ना कि माल किससे लेने आएंगे, ये अभी मालूम पड़ेगा कल आपको कभी उनको माल मिलेगा कहाँ से बाजार के अंदर.
Anything in the fine print, Shefali, which stood out for you? The tax on ITC, anything else which is in the fine print?
Tax changes, I think largely even the focus on the dispute resolution, adding 100 more joint commissioners. I think this is again, path breaking. And that would really reduce the backlog of cases which are pending. So generally, the focus on ease of doing business, making it easier for the taxpayers, the grievance redressal system. I think all of that is hugely positive.
Puri is ready. We are going to cut across to the chairman of ITC, and there is one clarification which everybody wants, Nayantara, is on that new tax which has come on ITC. Nayantara, please ask a question before a budget reaction, the net impact of, he's not ready?
He's ready.
Okay, Nayantara, before a budget reaction, a reaction on ITC earnings because of the tax. Nayantara, please ask that question.
Of course I will, Nikunj. I have the man of the hour with me, Mr. Sanjeev Puri, the Vice President of CI, the Chairman Managing Director of ITC. Mr. Puri, I have my boss's instructions. I can't do anything about it. After a 3-year-long gap, the hike that we've seen, you're still smiling. Have you seen your stock price?
So, first of all, let me say that, I would like to stay away from a company discussion because we have limited time and I rather focus on, broader issues. And secondly is we've not seen fine print to actually tell you anything. I've just been hearing this and come. So I'll be happy to, discuss this maybe separately after some time, but let's not mix it up here.
Of course, sir.
I think let's stick with the broader
But if you look
agenda.
at it, the sin tax, as it's popularly called, if it's going up, it's part of that balancing act. If you're going to hike capital expenditure by 33%, you've got to raise money from somewhere.
Well, let's leave it for another. And generally, there is data to suggest what happens in case of stability. But I don't want to open this chapter. It will take away all the time. I know that's what's going to engage you more. You will ask me follow-up questions.
Okay, Mr. Puri, you're not going to comment on this at the moment. So let's begin with the another part that is going to impact you a lot. A lot has been said about agriculture. I'll get to all that in a bit. But the very fact that you've got a capex hike of 33%, 10 lakh crore rupees is what is being announced at the moment. This is exactly what you folks at CI were asking for, and being balanced also by relief of personal income tax.
So I think that's terrific. I think it's a phenomenal budget, and it continues the path that the last two budgets were on to, really about inclusive and sustainable growth. It deals with the issue of strengthening competitiveness of the economy through making infrastructure world-class, reducing logistics cost. And at the same time, with so much of capex, public capex coming in, is going to spur economic activity, is going to spur consumption. Already capacity utilizations are 70 plus. So once consumption picks up, I think more and more private investment should come in. We are already seeing silver linings of the private capex kicking in. So both together over a period of time can have a multiplier effect on the economy. So we are really very delighted to hear that. We are delighted to also hear that the common man is going to get some relief. I think that will also spur consumption, and he requires it also because the cost of whatever he purchases has actually gone up over a period of time. So I think it's an extremely good and proactive steps have been taken. It augurs well for the economy.
So this is going to always be a growth-oriented budget. Has the finance minister delivered for you?
Absolutely. I think in multiple dimensions, the budget has really been very progressive. Not merely, physical infrastructure. There's a lot of focus on digital infrastructure, social infrastructure, inclusive growth, a lot of focus on energy transition. Now, energy transition is one is, of course, it's required for reducing emissions. I think it will also strengthen the economy, enhance the competitiveness of the economy, because import dependence will go down. Our businesses can become more competitive as far as energy cost is concerned. So it's a very, very fine development. I think the focus on agriculture.
Mr. Puri, good afternoon. Really nice of you to join us for a first reaction on ET now. Mr. Puri, the budget is growth oriented, but it also is making few assumptions about growth, about revenue collection. And we've seen in 2022 a lot could change simply because of global geopolitical crisis, what happened to subsidies, what happened to energy crisis. So what is looking great right now, sir, looking at the environment we are in, could realistically get challenged. Is the finance minister taking a lot of risk, is my point.
So, Nikunj, I'm just going to take a moment to complete the 2 points on agri, which I think are very important. We've been talking about suggesting cluster-based approach for value chains to aggregate at scale. And I think that has come about for cotton this time, so that's a very, very positive step. And I think the continued focus on bringing technology to agriculture is very much required, and the support to agri-tech and the ecosystem, I think, is phenomenal. They will really transform agriculture over a period of time. And, nearly half the Indian workforce is there. Now, coming to revenue, I think the assumption of going from 20 to 23, I think it's a reasonable assumption, given the fact that we are experiencing revenue buoyancy, we are experiencing greater formalization, and we can see the impact particularly on GST collections. We had over 1.5 lakh crores recently announced. And of course, all this, it's the net outcome of what growth the economy delivers. I think it's the net result of that. And as I said earlier, the focus on public works is going to spur jobs, consumption, and therefore will also lead to revenue. I think these are certainly enablers are very much in place. Yes, it does not take away the risk of the global headwinds, and that is why I think the steps that are being taken to strengthen domestic consumption are what are going to.
And the word inflation, I think, was not used even once. I kept looking for it and looking out for it. I don't think she used it even once.
Yeah, and inflation.
Now, you got to, this time around, Diwali in India is celebrated in October, November, and Christmas in December. But looks like we got a Diwali before Holi this time. That is what markets are telling us, Asha. Look at the surge in the market, 266 points, from the day's low. I think the market, in a sense, been talking about this breakout. Has the breakout realistically happened? Prashant Jain, will anything change in the way you have approached your portfolio? Looking at the budget now, which is pro-poor, pro-middle class, great for HNI investors, HNI taxpayers, and a clear focus on moving away from freebies to multiplier effect by spending capital expenditure. Will anything change in the way you manage money and the stocks you will choose from here? Prashant Jain.
No, Nikunj, I think to my mind nothing changes. This is supportive of capital expenditure, supportive of consumption, supportive of growth, supportive of local manufacturing, no tinkering taxes, and as Mr. Puri was saying, it focuses on improving ease of doing business, simplifying taxation, reducing logistics costs. So I think, to be honest, nothing much changes to my mind.
One point that Vijay Kedia has well raised, that FIIs have clearly left our markets in the month of January, right? Of course, many factors at play, point being a lot of emerging markets, a lot of beaten down markets like China, Hong Kong are giving you much higher in alpha. But what would it take for FIIs to return back to India?
While no one knows exactly, but I mean, the point is that India is offering a very compelling proposition. This should be the fastest growing economy this decade. Our political stability, improving business conditions, improving ease of doing business, stability in taxation, promise of growth, transparency, I think all of these are supportive, and FIIs should come back at one point of time, though I think we should disregard this monthly, quarterly flows, because if some other market has become a lot cheaper, India has outperformed massively, some money could go out. I think one final point here, if you look at between last September to June 22, FII sold close to 30 billion US and markets stood extremely firm. So I think the impact of FII flows is probably going to moderate, and therefore the volatility of Indian markets going forward should be lower to that extent. It should not swing too much to FII flows, and that I think is a structural positive.
ITC, and that's the power when markets reverse. ITC, where the tax has not gone by but up to, that's the clarification which is important. The tax has gone up to, it's not by. So it's not a 16%.
Minuscule tax.
Exactly.
Our FMCG analyst was telling me that it's only 40 paise on every cigarette pack.
That's manageable. So that's the reason why the stock has gone up. The other aspect which I want to bring out is that while we're talking about capital expenditure, let's also talk about the fact that there is going to be a substantial saving for taxpayers. Now we can argue about the quantum, but when typically small tax savings are done, it tends to have an impact on small ticket items, autos as a cluster. So where is Maruti, where is Hero MotoCorp, where are some of the FMCG stocks? We're talking about investment banks, but Maruti ko bhi benefit hoga.
Hotels and aviation stocks are the ones which are actually on fire. I was just looking at Indian hotels. I mean, yes, more money in the hands of consumers and at lower income tax slabs rate, but who's spending? It's actually urban India, Nikunj. We've seen that in the last year as well. Look at Indian hotels. Of course, a lot of it has got to do with the kind of blowout earnings that they had, but it's at the day's highs. It's an 8.25% move that you're seeing on IHCL. Look at some of the aviation stocks, namely, of course, only Interglobe Aviation. I'm going to come to you on that. I know you're smiling.
I saw you typing something
Those
during the budget
stocks,
speech.
a trend.
Yeah. No, that's Interglobe for you. Okay.
No, Chalo, that's not done as much, but a trend, or for that matter, most of these niche consumption names, urban consumption names.
Sunil Singhania is also ready. Let's say hello to Sunil Singhania. Sunil Singhania, we are getting everybody to rate the budget. The most optimistic number I've got is from Prashant Jain. There you go, you can see him. He's given this budget 11 on 10. What is your rating? He's making maths look slightly different this time with this budget, let me tell you.
I'll have to, go above Prashant. I will say 20 out of 10. But jokes apart, I think this is a budget which I call the 4S. It is simple, it is short. We didn't have a 2-hour speech. It was very crisp and short. It is focusing more on the structural bit, which we talked about in the morning. And fourth is it has brought smiles all over. So I think I would say it's a 4S budget going in from your 3 C's which you're talking about in the morning. And I think it couldn't have been better. And it's allayed a lot of concerns. It has been very, very thoughtful. Obviously, we still have to read the fine prints. But the way it was presented, first on fiscal prudence, second on the corporate side, third on the structural side, and then on the personal taxation side, I think, you couldn't have asked for more.
He sees into 3 Gs. Do you want to guess? Great, grand growth. So this budget, in a sense, is the 3 Gs which are going to be important. So Sunil Singhania, if I make your 4S and I'll add 2S on that, which makes it 6, and my 2S are Sunil Singhania stocks post the budget. How about that?
He promised us that, Sunil. We remember that, and now it's a good budget, so let's have the list.
No. So I'm constrained, whatever way you ask, and you have a lovely smile, but I still resist not going into stocks. But Nikunj, I think we always get into this thing about looking at stocks and this and that. I think, as I said earlier, the biggest stock to buy has been India, and if you look at good funds, they have grown like 100, 200x. So obviously there will be some sectors which will do well, some sectors which will not do well from time to time. You mentioned about a cigarette company, it was down 6% and now it's up to 3%. So let us not go into a very knee-jerk kind of reaction based on what has been announced today or tomorrow. Ultimately, when an investor invests in stocks, it is from a 3-4 years perspective. So look at the structural side. I think the full focus has been, a massive $120 billion plus on infrastructure, which is like 10 trillion rupees. It's up by 33%. Almost 40% of that is going into the railways. A lot of focus on road building, a lot of focus on other infrastructure building. There has been an increase or an extension of low tax rate of 15% for new manufacturing companies. So I think the thought process is very clear. And, if you believe that this government is going to continue for another term, I think we should be just extrapolating this from the next 5-6 years perspective. And I think the road from 3 to 6 is now looking very, very near. And I think that should be the focus.
Prashant Jain, I go back to that same point which I think I alluded to Nilesh and to Vijay Bhai, that the challenge in the world, Prashant, is inflation. And it is a global challenge. You've discussed in the past that the era of low inflation is over. This budget will stoke consumption, it will revive investment, and it will kickstart a new growth momentum.
don't you think at some point in time, whatever has been done in this budget could also stroke local inflation? And that, in a sense, could be the biggest challenge for the market, not this quarter, next quarter, but second half of this year?
So, Nikunj, it is, possible, but it is extremely hard to forecast inflation. I think the challenge in the West around inflation is coming from slightly different sources. One is the fiscal stimulus, the monetary stimulus in the West was a lot more. And what the households got in US particularly, I think was close to 15% of GDP. So India did not create that kind of excess at all. And that's why in US the consumption expenditure is extremely strong, where it is more muted in India. So to that extent, I don't think it is, you can extrapolate what is happening in US out here. And second is, I think in US, the demographics is quite adverse. The working age population is not growing, and therefore the wage inflation is quite strong, which is clearly not the case in India, because we add a lot of youngsters to our workforce every year. In fact, we need to create more jobs. So I don't think this is an inflationary budget. And if you also recall what she said, the FM said that about 40,000 crores roughly is the loss of revenue by these tax proposals. That's about 5 billion US. 5 billion US on a 3 trillion economy is nothing very significant to move the needle. So I don't think, inflation may come back, but I don't think it should be a result of the proposals in the budget.
Okay, I'm just going to mark the markets. The rise in the market post-budget continues. The rise in the market post-budget continues. I want to mark Bajaj Finance here and some NBFCs. Logic is simple. More money in your hand, NBFCs will give you more money. More consumption, you will borrow more. More corporate capex, that means private corporate facing banks will do a cartwheel. So ICICI Bank is moving higher, but along with ICICI Bank, Bajaj Finance is also climbing gradually at the highest point of the day. So Nayantara, I think it's a perfect cue perhaps to take it over and ask Mr. Bajaj, more money in the hands of taxpayer means more ability for NBFCs to lend loans.
And with that, I'll introduce Sanjeev Bajaj, the CII President and the top boss of Bajaj Finance and Bajaj Finserv. I felt like what we were chatting before the speech, all of it came through. So I don't know what kind of a hotline you have with North Block, Mr. Bajaj, or what CII does. But the point that Nikunj was making, this is a budget which is growth-oriented, which is going to give a big fillip to consumption.
Very much so, Nayantara. And not only is it a strong growth-oriented budget, but one that has also balanced the Fiscal Prudence Act. And some of the key recommendations that we just discussed earlier this morning, as you were saying, one was to take public capex to 10 lakh crore. That's exactly what has been announced. Second was to spur consumer spending by rationalizing taxes, especially at the middle class segment. That has again been announced. In addition, the focus on improving productivity and efficiency in the entire agri supply chain, that's a welcome move as well. We've also seen increased allocation for various elements of the green sector as we move on the energy transition side, and the support overall to the masses. So this is a budget that is growth oriented, that is positive, and that is what a number of those recommendations were as suggested by us at CII.
So India will leap ahead with this budget, seems to be the verdict that is coming in from India Inc. and all the market experts. It's early days, but that seems to be the verdict that's coming in.
Very much so. We have to, of course, see strong execution of that. For example, if you see the focus even on urban infra and the support being given, whether to MSMEs, whether to state governments with the additional 50-year interest-free loan, which has to be consumed in the next 12 months. Yeah. So there are timelines towards achieving that as well. And we think each of these enables create a better India, better place to live, a better place to work, and a more efficient place to work.
Do you predict a significant jump in credit offtake across NBFCs and banks after what all has been announced today? Because we all are going to have more in our hands, hopefully.
Keeping in mind that we expect, say, a stable external environment, very much so. You will start to see the, I would say, the force multiplier effect of these positive moves in the coming quarters.
Because it's not just a lot of announcements that were made around banks as well, but it's also being backed by cuts in customs duty. You've seen changes in indirect tax. And if you look at all of the items, these are all household, high consumption items.
And there are items where India is focusing on manufacturing that for India and the world, which is what they've done, the rationalizing of customs duty structure in number of items, removing the inverted structure that existed in certain products or sectors. Each of these will go a long way in helping make India the manufacturing base for itself and for the world.
Mr. Bajaj, correct me if I've got the analysis correct, and this is just my personal analysis. The announcements that have been made, whether it is to do with PAN, the single KYC, isn't that going to help financial services players like yourselves to onboard new customers, or maybe rival firms as well? Isn't this going to really help the financial services industry?
Quite significantly.
And the penetration?
Quite significantly, because it improves access, penetration, as you're saying. It improves by reducing friction in repeatability. When a customer comes back for a second financial transaction, a third financial transaction, it will make life much easier by ensuring that a common simplified KYC across regulators ensured. It will also make life much easier, whether for provider or for those that are accessing financial products and services across different asset classes and different regulators. So these are all again steps for easing business, easing life for the consumer.
I have to ask you one about the super rich tax, right? Time and time, every year we were waiting for that one. But today the finance minister is saying it was the highest surcharge in tax on this planet, being brought down now below 40%. What can the HNI and ultra HNI do to boost consumption and give a fillip to the economy?
You know, more than anything else...
Will it also prevent immigration?
Well, more than anything else, it's a welcome surprise. It's not about the money that is being saved. What it says very clearly is that this government is benchmarking our competitiveness across other major economies to ensure that we stay competitive at all segments of the economy. And that's a very welcome thing to see.
I started the interview by saying the CII have a hotline with the finance minister. CII predicted a lot of PLI schemes. That did not happen.
You know, we will continue doing that. And I believe that a number of these moves don't have to wait for the budget. If it's not come in the budget, if the rationale is right, the government is always open to evaluating these.
Okay, now before I also let you go, I asked you to rate how cautiously optimistic you were. That was before Ms. Sitharaman's speech. After the Madam Finance Minister's speech, how optimistic are you? You were 7 on 10 before.
I was cautiously optimistic earlier. I am very much enthused in being very optimistic now.
10 on 10?
I won't rate. I think numbers end up vitiating what one is trying to do. But a great set of announcements, a very strong budget, strong execution is what we need.
And with that, Mr. Bajaj, I'd like to thank you for giving us the time. The first reaction, I know you have many, many more interviews to do after this.
Thank you.
Coming in from Sanjeev Bajaj, I just want to quickly revisit what the markets have been up to, because what a thumbs up markets have given the budget, which has been extremely balanced and a pro-growth budget. There you go. The Nifty right now almost chasing a 300-point run. On the futures, by the way, we are already above the 18K mark, 17,955 on the Nifty spot, and the futures now almost touching that 18,050 mark. And you know what's contributing to this move? Look at the Nifty Bank. Look at the intraday graph of the Nifty Bank, because that's single-handedly giving the Nifty a much desired leg up. The Nifty Bank currently holding up 3.25% higher. It's a 1,200-point move on the Nifty Bank, no less than that. I'm going to get back to our market experts and get in their quick reactions as well. That's of course the Nifty Bank. I just want to quickly see what the Nifty contributors at this juncture as well are, because top of the stack currently is ICICI Bank. That stock is holding up in excess of 3%. Oh, I stand corrected. It's a 5% move on ICICI Bank. 872 is where that stock is right now. You've got an L&T which is holding out very strong. Some of the metal stocks are holding very strong. Beaten down names like Asian Paints are back in the green, and that's the contribution right now. L&T, HDFC Bank, IndusInd Bank, ICICI Bank, Kotak Bank. Nilesh, all about banks. I know you're also like just looking at the list, all about banks, isn't it?
It's actually one of the most easiest way to kind of participate. I mean, if you really like the budget, you want to go positive, you are a trader, the best way is just hop on to the bank Nifty and try and ride this up move. But more medium to long term, banks obviously are a reflection of the economy. I think what this budget does is in a way fires up the economy again. It actually lifts it. And so to that extent, over the medium to long term, banks will benefit out of that. So undoubtedly, I think a great budget and a great reaction from the market.
Singhania, would you agree with Nilesh Shah over here that banks are the best proxy play on the economy and perhaps the best way to participate in this bull run as well?
This is for me, Aisha.
You. Yes, Sunil, go ahead. The question is for you.
Yeah, okay. No, so I think, see, you have to understand in the run-up to the budget, because of the recent correction in the market, banks were the worst hit. You know, despite fabulous results, I think all-time best results in terms of profits, in terms of operating profits, in terms of asset quality, almost all banks fell by 10 to 15% because of reasons which were not exactly related to their, fundamentals. And I think we can expect at least that catch-up to happen. And that is one reason why banks are participating. Second is they're very, very liquid in terms of, stocks. And therefore, if someone wants to add positions in the market, banks are the best way of doing it. 40%, weightage in Nifty, and obviously you would like to participate in the economy-related sectors. And therefore, if you just look at that, I think banks automatically become the first choice. So it's very, very normal.
Sunil, if I could pin it down, banks are a very bifurcated sector right now, right? There are the fancied PSU ones, the bottom-up stories that were, of course, playing out along with the top favorite, which continues to be SBI. And then there are actually the beaten-down private sector banks as well, which, as you can see on your screens, are making a higher comeback right now. What do? Do you have a basket of PSBs and private sector names, or do you have any concentrated approach to either or?
So I think we have focused on banks with good franchisees. So obviously the only exception the PSU we have made is the two banks. And I think from our perspective, we are focusing on the larger banks because the valuations are, after the smaller banks have gone up, are not too different from that. One other reason why maybe banks and NBFCs are doing well is the borrowings are below the expected levels, and we have seen some strength in the yields in the sense that bond yields have come off from their day highs. And maybe, the market is also believing that going forward, because the borrowing program is lower than what was expected, the pressure on yields going up is now allayed. And to that extent, they will not have too much pressure on their borrowings. So I think it's a combination of these two. The other thing is, because it's a growth-oriented budget, obviously, with this capex happening both on the government side, on infrastructure, as well as on the private side, there will be demand for credit. So I think all in all, it's pretty good for someone who's in the financial services side. And I think that is also one reason why banks are doing well.
Right. S. Narain as well is getting ready along with his laptop, and he's still busy and he's managed to squeeze out some time for us. But before I go to Narain, in just a second, Narain, you can continue on your laptop for one more minute. I give you that much leeway. Mr. Kedia, you've never looked at themes in the market. You've always been a stock picker. You talked about Indigo earlier. Does it become only more dearer? Does it now from a short-term play become a medium-term or a long-term hold perhaps for you?
Indigo.
Interglobe Aviation.
No, of course, as I said in the earlier interview, that you look at the airport has become like fish market, and aircraft has become like omnibuses. Okay, so of course and nobody has ever made money so far airlines shares are concerned. So my view is this: now since 50 new airports has been declared, that 50 new airports will be built. So and focus is on the tourism and all. So I think all these things will add up, and and the demand for airlines and hospitality sector will be created. So I think from at least for medium term, I'm bullish in this sector.
Absolutely. Let's take it across to S. Naren now. Naren, your time on your laptop is up, unfortunately. Just wanted to come to you for your first reaction, Naren. How do you rate the budget? I can see all smiles, not just because of the laptop, but a pro-growth budget. I don't think the markets could have asked for anything better. Naren?
Absolutely. I think over the last many years, the macro has been handled very, very well. And there was no other expectations from the budget. We were very clear that there wasn't much scope for the government to do much, except that you can bring down the fiscal deficit by 0.5% and give fillip to growth. And that is what the budget has done at this point of time. The real problem in the market has always been that India has been a costly market. Over the last 3 to 4 months, India has been underperforming the world, and if that continues for a few more months, maybe the market overvaluation problem will get over, and that is the only challenge, and it has not been the budget. Budget has been well thought of, as has been over the last 3 years, which is the reason we have not had an inflation problem or a forex crisis or anything like that, because the government has handled the macro very well, including the budget.
Naren, you can get back to your laptop. I'm going to give you 2 odd minutes more to do your studies. We're getting reactions thick and fast. In fact, the Revenue Secretary is speaking to my colleague currently. Let's just cut across to that conversation.
Tax relief for the middle class has been announced, but it is only in the new tax regime, the major relief that has come. Is it basically to incentivize people to choose the new tax regime?
You are aware that the government has been following a policy of getting away from exemptions, because exemptions, if one gives them, they are not, it's difficult to target them well. And so that's why we are moving away from the regime of exemptions. There are some other exemptions also, you will note in the budget, which we have removed this year, which were removed earlier. And so going with that trend, the new regime has been made the default regime.
So when you say that it has been made the default tax regime, what do you mean by that? Because till now also people had the option to choose between the new and the old tax regime.
You are right, actually. I mean, one can go between the two schemes from 1 year to another year. So it's not as if, if you choose a scheme this year, you are stuck with it. You can choose to go back insofar as personal income tax for individuals and HUFs are concerned, not for those having business income. Those who are having a business income, even earlier, they were given only one time choice to choose, either the old regime and the new regime. But for individuals, earlier also, they had a choice to either switch into and opt out of the old scheme and switch into the new scheme. Now we are saying that everyone is now in the new scheme. Those who want to switch to the older scheme, they can do so.
So there will definitely be a tax impact also because of the relaxations.
Yeah, the overall revenue, which we have estimated, which will be foregone as a result of the direct taxes proposals, is about 37,000 crore rupees.
So last question on the online gaming, the threshold, the TDS threshold that is there currently rupees 10,000.
Okay, that's the Revenue Secretary with his first reaction right here on ET Now. But the markets, that's where the first reaction has actually come in. We're sitting at the day's highs. It's a mammoth move that you are seeing on the Nifty Bank. In fact, all sectors are charged up. We're still in conversation with Vijay Kedia, and I also have with me S. Naren. Naren, if I could just get back to you, your style has always been of a contra investor. I'm wondering, what are the contra opportunities that you're finding in the current market, given what the budget has announced in terms of a thrust on capex, railways and even defense?
See, I think basically the way, the last few days gave us the opportunity to look at banks, but then today the banks have been in a completely different camp at this point of time. And we don't think that the budget is bad for pharma or something like that. And we think that, we continue to think, over the last 4-5 months, we have been telling people that debt is a great asset class for some more time. And therefore, debt has continued to be a great contrarian asset class, at least for some more time. And that remains a contrarian asset class at this point of time. And we continue to think that the market should be volatile for some more time, till the time the relative valuation of India becomes more comfortable. Part of it has already happened over the last 4 months. If you look at the way India has underperformed the other parts of the world over the last 4 months, has been significant. And once that happens, I think India goes back to that structural good story, and from that point of time it will be good. But currently debt represents still a good contrarian opportunity at this point of time.
Naren, you made a very, very pertinent point. Is that relative valuation the only reason why we've seen an FII exodus from the India equities of late?
Actually, yes. Actually, when we talk to all the foreign brokers who service many of these customers who look at India and other parts of the world, people are not selling India because India has a problem. They are selling India because the other markets are too cheap. And if you look at the level of underperformance of those markets against India, it has been stupendous. There was not, they have not been selling India because of anything. They have been buying the other markets because the other markets have become cheap. So I think it's important to recognize that it is not that, there is a problem in India or something like that. That is not the reason. And that is the reason why, over a period of time, we've been telling people that it has to be India has to be systematically invested through SIPs because of this reason, because the problem is not in India. The problem has come out of relative valuation of India versus the world. And this budget was not something that could have dramatically, completely changed sentiment, because frankly, the government has to do fiscal consolidation. They have to stimulate growth, and both they have done, and that's the reason why the immediate reaction has been positive. But the budget cannot change market valuations.
Absolutely. I just want to quickly get into one nitty-gritty and one detail. As they say, the devil is always in the detail, which is coming in the budget fine print, because insurance proceeds of higher value are going to be taxed now. The article says that it is proposed to provide that where aggregate of premium for life insurance policies, which is other than ULIP, issued on or after 1st April 2023 is above 5 lakh rupees, income from only those policies with aggregate premium up to 5 lakh shall be exempt. So basically, for all non-ULIP policies where premium size is greater than 5 lakh annually, par and non-par, the income is going to be taxed. And this is turning out to be sharply negative for all life insurance companies, because most of these stocks are getting very, very badly axed. But we were talking about FIIs. Naren, glad that you could take time out, and thank you so much for doing it as always with ET Now. Good to have you on the show. But Mr. Kedia, before I take it across to our chartists and get back to the bull ring, because that's where we belong right now, why are FIIs eluding us? Wapas kab aane wale hain?
Thank you. I remember, and I will recite a song I had written some 2 or 3 months back, which I am going to recite about FIIs only.
Now look at the market. Now you have to sing.
आप लोगों ने खाना नहीं खिलाया, अभी मेरे को भूख है.
तो अब तो you have to
अभी मैं ऐसे कर देता हूँ कि वो ताकि FIIs के चक्कर में बेचने देना माल तुम्हारा, ये जब लेने को आएंगे शेयर होंगे 9-2-11, फोकट में ये माल फूकते, इनके बाप का क्या है जाता, जो भी इनको फॉलो करता वो ये 2 लाइन दोहराता, मैं तो मर गया मम्मा, मैं तो मर गया मम्मा.
Okay. Well, when we have Vijay Kedia in the house, putting all of those lovely rhymes together.
Great to have you today. Thank you so much for sparing your entire day and joining us. And Aman, what a befitting move from the market after the budget. I think we need to take it across to the bull ring, right?
We do, and there's so much news on the startup world as well. We've got Vinita Singh as well, the CEO and the co-founder at Sugar Cosmetics, who is joining us. So if she's ready, maybe we'll take it across to her right now. You know, Vinita, thanks so much for taking time out and joining in. And you know, you've got the finance minister who alluded to the fact that we're the third largest startup ecosystem. The prime minister saying not long ago that startups really are the backbone of the country, and it's really fueling the overall ecosystem and giving wings to it. How have you read some of the key budget announcements this time around, Vinita?
So much for having me. I am quite optimistic about the budget. I think 2-3 items from my wish list from this budget have been covered. Definitely one of the biggest is we need a spur in consumer demand across the board, and the income tax slab going up to 7 lakhs and definitely is going to aid that. I really feel that there has, you know, the fact that the finance minister addressed startups separately and spoke about the ease of doing business. I think that's another item that was in our wish list, which is basically talking about 39,000 compliances getting reduced. Still have to get into the details of whether that's going to make a material difference or not. But that combined with decriminalizing some of the legal provisions is very important because as entrepreneurs, we spend a lot of time just dealing with the regulations. And I think while India is ranked 3 in startups, we're probably ranked 37 still in ease of doing business. So I'm happy about those. I do feel that you know, there have been initiatives around special schemes for women, and you know, the fact that the government has introduced credit guarantee schemes for MSME, that's going to help the ecosystem a lot. My regrets are that even after so many years, there has been nothing done to address one of the largest problems that startups face, which is the taxation on ESOPs being absolutely off market. India is the only market in the world where ESOPs, which is the employee stock option plans, are taxed both at exercising as well as at the sale. Which makes it very hard for us to grow this ecosystem. And we've all been talking about, you know, the new economy, which is currently 3% of the GDP, growing to about 4 to 5% over the next couple of years. But for this, we need support from the government on better taxation, which means 2 things. One is better norms for taxing employee stock option policies. And secondly, treating unlisted shares also at par as far as the whole capital gain tax structure is concerned. So I think those were the 2 items, which is why I would rate probably the budget for startups at about a 7 or 8 or 10. I do wish that you know, they're addressed in the next year's budget, because we have to look at startups driving employment as well as GDP growth over the next 2 to 3 years.
Yeah, indeed. So you're giving a 7 on 10, so that's not bad, at least for the budget. And you're seeing the markets as well react quite smartly to the announcements that have been doled out. But in specific, Vinita, just wanted to get in your outlook, because we've seen about 100 plus unicorns in the country, and a lot of the companies that have listed have really, you know, we've seen the fate as well for a lot of shareholders, as a lot of them have eroded market value. But just want to understand, maybe from a spurring investment standpoint, could some more have been done in the budget this time?
Whole startup India movement, you know, there was a mention in the previous budgets about the allocation of the fund of funds, etc. And this year there was no mention around that. Now, if you look at the entire funding environment, you know, the whole race to 100 unicorns happened because, you know, last year there was a lot of, in 2021, we saw a lot of USD flowing into India. And if you look at like the last 12 months, the funding overall is down at about 33%. So we're seeing, you know, a much lower funding environment over the last 12 months. This combined by the fact that, because the markets are right now only giving preference to profitability and not so much to growth as they were about more than 12 months back, I feel that both of these are going to lead to a major crisis among startups as far as access to capital is concerned. So I wish that could have been addressed as well. But having said that, I think this is going to force a lot of startups to start looking at profitability early on, and they may have to sacrifice growth for profitability due to a lack of access to capital. So yes, I wish that there could have been something that could have helped internal allocation of funds to startups in a bigger way. Having said that, I think, in India, even when there is an allocation of capital, because of the number of hoops you have to jump to get access to it, I think many companies are not able to meaningfully utilize those capital allocations. So I don't feel it will have a huge impact. I feel that driving consumption, which the government is doing through, the income tax cuts, some of those duty cuts as well, which will help more manufacturing come up in India. I think that will have a much bigger impact than the downside of the lack of additional capital being allocated.
Right, Vinita, I really appreciate your time. It's the first time at least we've had you on ET now. So thank you so very much. Avan was telling me you've got a packed day ahead and you've managed to accommodate this request. Thank you so very much.
Thank you.
Shashank joins us now, and in the morning when we were talking to Shashank, he was rather confident that this budget is going to be taking care of everyone. Poor, middle class, the taxpayer. So should I ask Shashank Srivastav, the taxpayer, is he happy, or should I ask Shashank, the senior executive of Maruti, for his first reaction? How should I start the interaction, Shashank? The taxpayer in you is happy, or the executive in you is delighted?
I think a bit of both, actually a lot of both, because I think in the budget the finance minister has ticked almost all the boxes. In fact, all the 7 boxes are Saptarishi of Amrit Kal, as she mentioned, and particularly, very delighting is the fact that the expenditure on capital, capex has really gone up. The 33% is now about 3.5% of the GDP. That's great. Actually, that was better than what was expected. So that always is good, because capex helps building those capacity on the supply side in the medium and the long term, and also in the short term it helps in the demand situation also. Secondly, the extension of that this 1.2 trillion rupee state loans for long-term investment, that has been extended, so that's great as well. Railways 2.4 lakh crore investment, that's also excellent, as also the target for agri credit going up beyond the 20 lakh crore mark. So all that is actually very helpful, and yes, on the disposable income side also, because of the some of the very good measures taken in the income tax with a higher standard deduction or the exemption up to the limit of 7 lakh, and actually a reduction in interest taxes overall across all categories, including the richer people, would mean that there would be a greater disposable income, and hence the propensity.
I think we've lost Shashank there, but Avan, let's mark the markets for a minute right now. We were discussing that how markets were almost in a fear grip because of the sell of what happened in Adani group of stocks and other stocks. But now this entire event risk is behind us, and the technical FP overhang is behind us. Quite ironical on a day when markets are doing cartwheels. The bears are running with tail between their legs. Adani stocks are not really, doing anything special. Let's look at Adani stocks, guys. It's ironical that it's a mighty relief for that stock that FPO has gone through, but some of the Adani group of stocks, they will just come up on your wall, guys. The wall also takes time. Please understand. There you go. Adani Enterprises, the FPO has gone through, stock is down. Adani Transmission, no large relief there, whatsoever. And even in Adani Transmission, there is no large relief whatsoever. Meanwhile, Sensex and the Nifty are no longer at the highest point of the day. So you would argue and say, Avan, that the 3 C's we were discussing. consolidation on the right path, capex, big bump up, capital gains, no change.
So yeah, indeed, that's a spot of bother maybe for the markets, and even some of those defense stocks. You aren't quite seeing maybe that allocation to the defense sector as was expected. So that's a sector maybe that's been ignored. Yes, that was
one sector where change has been done. You know, incrementally over the years in insurance, the freebies, the tax benefits, all of them have started actually, you know, coming down. Shashank is there with us. Shashank, let me understand a question purely from the market standpoint. Now that there is going to be a jump in the taxpayer's, you know, kitty, do you see that really having an impact on auto sales, tourism? Like last time Mr. Bhargav said that the rural economy was under stress and the butter from the bread was missing. So do you think post this budget, now the disposable income will go higher and the multiplier effect of investment cycle will start? For Maruti, the butter could come back and this time the bread would also be toasted?
Yeah, I think when I was mentioning we lost the sound. Actually, I was saying that the higher disposable income across all categories of taxpayers, including the richer people, should help the auto sales, because the propensity for spending would go up. And as you know, auto buying is actually a discretionary buying requiring the disposable incomes to go up. So in that sense, I think it's a very positive thing for the auto. Also, the scrappage of vehicles, which was mentioned, that should also bring in a lot of demand of replacement, as also some of the measures for biofuels, which should spur Maruti Suzuki's the efforts which we are making in that direction as well. So I think overall it should be very good for the auto sales. As regards the rural demand, as you were mentioning, the rural demand with the Rabi crop showing about 6% up so far, and Kharif being bumper at around 152 million ton, I think we should have a continued uptick in the rural demand. Actually, rural demand this year so far has been slightly higher than urban demand. The growth in retail and rural is about 24% compared to a 22% for the urban areas. So it's still better, and I think going forward with these measures, that should pull up Maruti Suzuki sale in the rural areas. It's already 44% of our portfolio.
But Shashank, just wanted to understand that, do you think that now with consumption being spurred, the fear of inflation looming its head large again is likely to recur, and that could present itself as a problem, although the word inflation, by the way, was not mentioned at all in the budget speech?
Yeah, so as I had said in the morning, actually one of the big factors we have to watch for is the inflation rate. And should there be also, because of the geopolitical situation, an uptick in fuel, in crude oil prices or the commodity prices, that can be actually a dampener for the auto industry. Inflation definitely is a worry, and I think when I said that most of the boxes have been ticked, that Saptarishi of the Amrit Kal, there was one point which I thought could have been also ticked, which was while the fiscal consolidation from about 6.3 to 5.8 is taking place, but the target of 4.5 for 25-26, the trajectory seems to be rather conservative. And that is one factor we have to look for, because if the inflation gets fueled, it will have a negative effect on the sentiment as also the disposable income, especially at the lower end of the auto buying segments.
Shashank, if you have to summarize our today's interaction, one thing is clear: the budget has ticked all the right boxes in the true spirit and in the true objective of stroking the economy. It is a budget like never before. But if you have to talk about the real picture is that budgets have been decent in last 2 years, growth has been decent, but the economy has been under stress, at least in the rural end. Will this year be different? Whether it is because of budget or interest rates or other factors, will this year be different for the rural sector per se?
Yeah, I think so. I just mentioned I think there's a lot of positives going on for the rural areas this year, including the expectation of actually a lower inflation, although it wasn't mentioned in the budget, but the expectation is a lower inflation going forward, even though it's at a slightly elevated levels. The water reservoirs are over the long-term average are 7% higher. I just mentioned Rabi sowing up 6%, Kharif being great, MSPs being higher. So I think there's a lot going for the rural sector. Only on the inflationary front, where if the global recession happens and the export dips, probably the CAD will be under pressure. That can also fuel the inflation, as the interest rate should go up in that case. Therefore, I think that the 8th box which did.
Shashank, really appreciate your time. I sincerely hope that this time around, for Maruti, the butter from the bread comes back, and this time not just plain bread, the butter should be toasted. Really appreciate your time. But
garlic butter.
Garlic butter.
Seasoned
Is that?
butter.
I don't like garlic butter. I'm more like a.
I love it.
Yeah, I thought margarine is what you would prefer. Low fat. Low fat.
Okay, but Aman, bullring, and I can see all smiles.
Absolutely, all smiles, rightly so. We're talking about bread, butter, so we'll also go and fill our stomachs after we do this. But guys, budget has delivered, markets are rallying. Your top budget trader.
I would go with M&M Finance. That is one stock which has broken out. It's a rural play. The stock has been doing well for the last few days, as well as shaping up for a longer term breakout, and it's a outperforming stock after a really long time. It's been an underperformer for long, and now for the last few months it has been an outperformer stock. Expected to go towards 260 to 280 in the short term and much more higher in the medium term.
Okay, how would you rate the budget on 10 from a market standpoint?
So from the market standpoint, if I would to look at it, it is neutral to positive.
Okay.
The market reaction tells you it is up
But it
100
gave us
to...
everything we wanted to hear.
Absolutely. The markets are waiting for... So I would look at it in perspective of how much does the market pump up.
7 on 10?
Would be closer to 8 on 10.
8 on 10, Kunal, you?
Yeah, I think very similar, 8 on 10. It's neutral, so nothing on the capital gains tax, STT, etc. So that was positive.
We are ready to pop the bubbly and you guys are saying neutral.
So I think it's been a good, the reaction for the market itself tells you that the markets have taken this with a very positive stride.
And your budget trade?
So I'll go with the banking trade over here, and I think ICICI Bank is something which is popping up quite strongly. So it's the leadership quality which is coming back for ICICI Bank. That's the standout feature. So that's a buy. I would probably place a target of 920 and stop loss of 820.
What more could we have asked for, Sanjeev Bhasin? Your views on the budget, how would you rate it on 10?
11 on 10.
11 on 10.
And all this pessimism where the profit taking is because of the Fed and the pivot, you couldn't have asked for more. I mean, let's not be greedy. We were just asking for small mercies. You got everything on a platter. As far as capital gains, as far as spending for the middle end. Awan, the last budget was for the high end when it was PLI. You had food insurance for the lower end. This is all about MSME. MSME means banking, growth and consumption. You got a relief for all types of tax brackets. You couldn't have asked. And no tinkering, capex push. 7.5 has become 10. Yeah. So I think markets are going to take a day or so. Next week onwards, 18,500 is on the card.
Yes.
18,500 के ऊपर.
Yeah, 18,000 now looks to be a...
We're already at almost 18,000.
No, we are 17,700 now back.
Oh, we're back at 17,000.
Looking at 18,000, 18,200.
18,500, 18,000, 200, 18,200, 18,000, 18,500 plus.
But the range has moved higher.
Range has moved higher. Okay. Sanjeev Mehta is ready and Dr. Anisha is also ready. Good afternoon. Good afternoon, sir. It's turning out to be a great afternoon, Mr. Mehta and Dr. Shah, isn't it? I want to capture the smiles on your face. Please smile like never before. It's a budget like never before, sir.
It's a fabulous budget. Yeah, it's not a populist budget. It's a budget which has balanced the short-term need with the long-term. It is a budget which has very clearly sown the seeds for bringing in technology on the agri sector. It is a budget which is very clearly focusing on reducing the carbon emissions. But I think the headline number of 10 lakh crores on capex, that has been a very pleasant surprise. I was expecting the capex to go up, but not to this extent. and I'm very pleased that this has happened. And at the same time, the managing the books very well. The fiscal deficit is targeted to go below 6%. And the good bit is that the deficit is happening not just because the government is spending more on revenue side, but it's spending more on the capital side, which augurs so well for the economy. So yes, it has been a very good budget.
Mr. Panda, I've been told Dr. Shah would be joining us in a second from now, so I failed to capture your smile. Before I go to you, Mr. Panda, let's get a smile going from you as well. Okay. Now, there is reason to smile post this budget, but if I could just pour cold water, you know, we are journalists at the end of the day, we have to be the devil's advocate. Mr. Panda, the challenge with this budget is inflation. We are fighting inflation. If the budget is pro-growth, pro-poor, pro-middle class, pro-taxpayer, more money in the hand of taxpayer means that spending will increase, and it will increase at a time when the economy globally and locally is fighting with inflation. World over, that is a challenge, and in India also, that potentially could become a challenge. Your comments on that?
Well, first and foremost, what we have to keep in mind that in as much as inflation is concerned, India has done a very good job of addressing it with both fiscal and monetary policy working in tandem. And after what 18 or 20 months, the retail inflation is now within the central bank's tolerance band. And if you take a look at the forecasts contained in the economic survey as well as what RBI has talked about, I believe for Q1 FY24 the inflation expectation is 5%, and for Q2 FY24 it is 5.4%. So inflation is it's something that we certainly have to keep an eye on. It would not be wise to preemptively declare victory on inflation. But at the same time, I think what is absolutely imperative from India's point of view is to prioritize growth. And it's a sort of a bifocal approach where you have one eye focused on how inflation is panning out, but not to take your eye off the medium to long-term prospects, which is what we are also enthusiastic about. But in as much as, the other point I wanted to make about inflation is that do keep in mind that that 1/3 of the world's economy is world's economies are likely to face recession in the time ahead, and the fact that that is on the anvil will certainly put a little bit of dampener in terms of commodity prices, which is what matters most for India, given that our inflation is by and large imported. So I wouldn't declare victory over inflation, but I wouldn't worry too much about it, and while prioritizing and focusing on growth, which is what this budget does.
Oh, absolutely. In fact, we have Dr. Anish Shah, Senior Vice President, FICCI and MD Director and CEO of Mahindra & Mahindra as well, joining in on the show. Mr. Shah, hi, good afternoon. Your other two contemporaries were all smiles looking at the budget, and I'm sure it's no different for you. I mean, fiscal deficit down, capex up equals growth.
I think this is an outstanding budget, and we should be all smiles today. It's always difficult to come up with a budget because it's often a tightrope walk, but I think this has been done very well this time. And I do want to emphasize on capital expenditure that Sanjeev talked about. While at the headline we are at 10,000 crores, up 33%, the first question is, why is this important? Capital expenditure results in much greater growth. Every rupee spent has a multiplier effect of at least 3x. Second, capital expenditure has gone up from 1.67% of GDP just 4 years ago to 3.3%. And this is the longest uninterrupted period of growth in India's fiscal history. So from that perspective, it really shows that an economy is poised for growth, that the budget is really setting up the economy for further growth at a time when India is ready to take leadership in the world.
So my next question, Dr. Shah, should I ask the happy taxpayer today because the peak tax rate has come out, or I should ask the happy executive today who's excited about demand getting generated? How should I phrase my next question, Dr. Shah?
I think, Nikunj, it's more about the economy right now. It's not about individuals. It's really about, first, why was this possible? Because the economy has done well, because the tax collection has been very high. If you look at GST growth, that's been at record highs. So all of that is combining, and I think we are in a good phase where that's being translated back into driving further economic growth, which will have an impact on the entire economy. The important part is inclusive growth, and there were a number of factors in the budget, a number of proposals that really address the inclusive growth part as well, and I think that's a very positive step.
Mr. Mehta, now if I look at FY23, there are a lot of unprecedented things which have happened. War in Ukraine, big uptick in the subsidy bill, inflation globally like never before. So while planning this budget, the assumptions are conservative and realistic. But there is a huge risk and nobody can predict that risk. So while planning this budget, do you think the government has also taken a lot of risk, because growth would need stability at a global macro level, and last year has taught us that never take things for granted?
That the finance minister is coming from a position of strength. If you look at the state of the economy today, we are growing at about 7%, and as Subrakant rightly said, slowly but steadily you are seeing the wholesale price inflation converging towards the consumer price inflation. We have robust forex reserves. The fiscal deficit, we would be meeting the target, and we would be meeting the target not by cutting back on capex. That's again a very good sign, because you can skin the cat in many ways. You could have still met the fiscal deficit, but you could have reduced capital expenditure. So that has not happened. Now this indicates the resilience, the strength of the economy, and very importantly, the confidence with which the government has gone about preparing the budget. There will always be variables which you can't predict. Last year when the budget was made, the Ukraine-Russian war was not predicted. So there could be many variables which cannot be predicted, but based on the circumstances as they exist, it's a confident budget, it's a growth-oriented budget, it's a budget which balances the short term with the long term. And very importantly, we should not forget that it is both inclusive and sustainable. Look at the emphasis that the government has paid on reducing the carbon emissions. Look at what the government is doing for MSMEs. Look how technology will be playing good for the agri sector. So if you put all this together, and budget is both a science and an art, and I think kudos to Madam Finance Minister for the way she has ended up crafting this budget.
Absolutely right. And, I must take a pause and tell you what the market reaction has been, because slightly volatile. While post-budget, you did see a big spike up. Right now, we're barely 26 points up in the green. So the markets have completely given up all of their gains, and you are seeing a massive profit taking coming in. Why? Because you've got another big event. That's the FOMC meet outcome later tonight as well. I mean, talk about hectic days for us, Nikunj. It never ends, does it? But yes, there are still names from the metals pack, from the banking names, from autos, and of course the big one, L&T, which continues to hold up. Anisha, if I could just ask you, a theme which is close to your heart as well, right? Manufacturing. I wanted to understand, out of the capex outlay that the government has announced this time around in the budget, how much of it could actually translate into manufacturing per se, and what really on ground needs to be done to try and absorb this entire expenditure?
So a lot of it will translate into manufacturing because that frankly is the very nature of capex. And at this point, I think if I were to look at private sector participation, that's one that needs to increase. And that needs to really be in lockstep with the government, because it has to work together. It can't just be the government propelling the economy. I think it's time for the private sector to come out and take bold steps, put in the investments, also look at R&D in a bigger way, create better products, and start going on the world stage in a bigger way.
Okay. Mr. Panda, I'm going to get closing comments from you. The sector which you represent, essentially the commodity stroke the metal sector. What is in for the sector which is a global linked sector? Individually, you have to really look at specifically for your sector.
So, I mean, commodities commodity sector in general have had a very good run over the past couple of years, and then of course with with all that has happened, there has been practically across the board commodities have taken a knock. But in a way, I suppose that is good for India in the sense that with our inflation being largely imported, as I said, commodity sector cooling off is something which will be which will aid our fiscal position. But specifically, if you were to look at the outlook going ahead, I also have a view that there has not been significant capacity addition in commodity sector because of the uncertainties, because of the vicissitudes of the last 2 or 3 years. So it's going to be an interesting sort of a run going ahead in the sense that with advanced economies looking at recession or slowing growth for sure, there is a bit of stress on the demand side. But equally, supply is not something which is abundant, and therefore I think it's going to be a bit of a balanced situation going ahead. In the immediate short term, I think China's reopening is something which is having a significant impact. If you look at particularly metal-related commodities like chrome, which is my line of business, or something like nickel, which has gone up 30% in the last month and a half. So there is a lot of expectation that with China opening up and moving away from its zero COVID policy and opening up, as well as a sort of a boost to consumption that they are expected to provide to shelter their economy to some extent, that there will be a short to medium term sort of a boost to commodities.
Shah, Mr. Panda, Mr. Mehta, gentlemen, really appreciate your time and thank you for initial reaction on the budget. We are calling it ET now, this budget, a budget like never before. It was all about the 3 C's, path of fiscal consolidation, no capital gains tax, and focus on capex and consumption. All the tick boxes have been, all the boxes have been ticked. Nilesh Shah, Kotak AMC joins us now. Nilesh bhai, thank you for joining us. Everyone on the budget has rated this budget as budget like never before. But my question to you is that if this is a budget like never before and there is no big incremental devil in the detail, why markets are not excited? I mean, markets are hardly in the green. The initial euphoria has faded away.
Nikunj, our markets were already expecting a fantastic budget from the finance minister. There were expectations built into the market, and hence markets are not going to respond in a hurry. This is like a Bahubali budget. With one arrow, finance minister has shot multiple targets. There is path of fiscal prudence with lower deficit this year, end target of 4.5% for FY26. There is growth multiplier through enhanced allocation to infrastructure investments. In fact, it is higher than what was expected by the street. There is small support to consumption through tax cuts. And more importantly, there are several steps to revive private sector investment. Put together, this budget achieves all the 3 C's which you mentioned. And because market was expecting such a budget, such a performance, probably the reaction looks a little bit muted. Don't forget that we are trading at a considerable premium to our peer group's valuation, as well as our historical averages.
Right. Nilesh, Pankaj also joining into the conversation. Nilesh, if you could just talk to us about how things are moving as far as the overall fiscal consolidation that you just mentioned. The numbers much realistic in terms of growth. Can you just talk to us about the quality of the budget, the way it was presented, a short speech and a short document?
Definitely, Pankaj. The most important thing is the credibility of the budget. All the off-budget items to a great extent has been accommodated into the budget. Second thing, the estimates are fairly conservative. 6.5% real GDP growth, some amount of inflation and tax buoyancy, 11.5% revenue estimates looks fairly conservative, just like last year. The divestment targets which are set can easily be achieved in a market like this, and there is proposal of a strategic divestment of IDBI Bank. If your revenue numbers are looking reasonable, so are the expenditure numbers. Despite increasing infrastructure investment by almost 3 lakh crore, the overall numbers have remained static on the non-infrastructure spending. that is primarily driven by reduction in subsidy burden. Subsidy drops from about 5.6 lakh crore to 4 lakh crore. So the credibility of numbers gives confidence that the budget which is being presented is reliable, is steady, is growth oriented, it achieves multiple objects at the same time.
We are taking a break, coming back quickly, leaving you with Nifty up 50 points, taking a break at this point of time.
Co-presented by SPZ. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
Welcome back. Well, a lot of positives when it comes to the budget, but the market doesn't seem to be factoring that in because as of now, we are at the lowest point of the trading session. The Nifty has actually dipped into the red, down about 14 points as we speak, and the mid-cap and the small-cap index too has lost all of the gains. In fact, the mid-cap index now down about 160 points and 40 points lower for the small-cap index. Quickly, let me wrap some of the key sectors which are in focus. On the gaining side, you have hotel stocks which are doing well. Indian hotels, partly on account of the earnings reaction, plus the likes of Lemon Tree Hotel, etc. are reacting positively. There was a lot of announcement when it comes to tourism. 50 new cities will be identified and developed, and that's the reason all of these stocks are advancing in the trading session. Fast-moving electrical goods is another space. The income tax slabs have been revised upwards, and that leaves more purchasing power in the hand of consumers, and that's why the likes of Bajaj Electricals, Dixon Tech, all of these stocks are rallying as we speak. On the losing side, however, the outlay for defense was a tad bit lower than what the street expected. There was an uptick of just around 6%. That's why the likes of Hindustan Aeronautics, BDL, etc. are coming under pressure, and insurance seemed to be the biggest loser. There is some confusion regarding that 5 lakh exemption limit and what impact it could have on the companies, and that's the reason the likes of HDFC Life, SBI Life, ICICI Pru are coming under pressure. But from the moment I started speaking, there has been a rebound as well. So let's see where the market really heads. We have with us Manish Jange joining in to talk to us about what should we make of the market momentum as well as the budget outcome. Manish, hi, thank you so much for making time and speaking with us. Well, what do you make of the reaction coming in from the market? We thought the bad news is out of system. The Adani FPO got subscribed. There was a lot of positive announcements specifically with respect to capex and fiscal deficit, but market is not buying that at the moment.
The only answer to that is flows. For the last few days, you would have observed how ferocious selling has been from foreigners, and they would pivot to what's happening to not just the Adani group, but also incrementally how results have been. And as such, they're using this opportunity, even the bounce that we saw, perhaps is what I'm picking up. There is a relentless selling continuing even right now. Or to top it up, I think the sentiments of retail is also soured for whatever has happened over the last couple of days. And to that extent, in India's sort of local micro setup, not macro, which is more to do with flows as well as sentiment, is actually a little bit on the downtick, and which perhaps is the reason, despite a reasonably strong sort of budget for all sort of audiences. You can look at even bond markets. They're down 6-7 basis points. So the primary task of a budget is not to spook bond market, and that is 10 on 10 right now. And to that extent, the surprise is coming in more from the micro, not from the budget.
Coming on the micros, but then how should one play now, play the markets at the moment? The big event is out of the way. You have the FOMC meeting coming in overnight. But in terms of sectorally and theme-wise, what are the top bets?
No, so again, to take a step back, last month also sort of in a conversation with Nikunj made this point that relative to India, US looks cheaper. Relative to equities, bonds look cheaper. So purely from an asset allocation point of view, investors should pivot to sort of more bond allocation as well as sort of US equity if they can. But within sort of Indian setup, it's likely that China proxies would do better, and which is, of course, commodities would likely do better, energy would do better, and to a certain extent, IT would continue to actually surprise on the positive side from a market action point of view across the world, including in India.
Just hang on with us. Digant is now with us. Digant Haria is with us. Digant, what do you make of the fall in the insurance stocks? Can you just explain what has happened?
See, insurance selling in India, it was never purely on investment considerations. So, these large policies of insurance, 10 lakh rupees a premium, these are very popular amongst the HNIs because they could earn 6.5 to 7% of IRRs for 20%, completely tax-free. Now, in this in this budget, they have removed that provision that, such large policies, your gains will not be tax-free. So that attractiveness to the HNI or, the affluent class for these insurance products, even the traditional plans, they really go down. And I think that will, lead to maybe, say 10-15% erosion in the kind of premiums that these companies can write. So that was the first thing that happened. And second thing is that the finance minister alluded that they are going to use the new tax regime as a default regime, which means the old tax regime will slowly and steadily fade away. And in that old tax regime, we had a 1.5 lakh tax exemption limit where we could park our money in insurance products as well. So I think there's a double whammy for these insurance, the life insurance sector. It was due someday, someday was today, and I think the reactions that we are seeing is completely justified, given that that can lead to a 10 to 20% kind of a slowdown in the revenue, the premiums that they collect.
Point taken, but just also wanted to understand, you did point out that almost 10% of the premium for some of these companies might get eroded, but is the quantum really that large? Because our understanding and what we were hearing from the ground was the fact that this is only for ultra HNIs and very large quantum of premiums. Do you see that big an impact on the earnings?
See, the insurance market is all about the rich people. Okay, in India, only the top 4 or 5% of the rich people really, have insurance or use insurance products. So I think insurance is all about the rich people. And, when the creamiest or the largest customers of yours are not going to invest because of taking away the tax considerations, I think it's a worry for everyone. See, so for LIC, the worry would be slightly lower because LIC does not have these very, very large premium paying policies, but someone like say an HDFC Life or a Bajaj Finserv or an ICICI Pru Life, these three companies in specific have very good proportion of their premiums coming from the large policies. So I think for these three stocks, they'll definitely have to rework their strategy. It's not as simple as the premiums will just go down. They'll come up with new products. They'll launch some new strategies. But yeah, on the face of it, it's definitely going to be a tough 12 months for these companies to come up with new products and new strategies to counter this thing.
Just for the benefit of understanding it for users now, given the fact that the finance minister, as you said, announced that the new income tax regime now will be the default tax regime, will citizens still now have the option to avail the benefits of the old tax regime?
Yeah, I think she categorically mentioned that you can opt for the old tax regime. So I am assuming that the old tax regime is still available. But I think, by default, whatever we'll see on the government income tax websites and everything, it will all cater to the new tax regime. You'll have to take effort to, file your taxes in the old tax regime. I think that is what the finance minister meant. Both the regimes would be available, but I think more and more benefits will now, pour to the new tax regime because the government wants that to be the tax regime. And then that ATC investments which we used to get in insurance and mutual funds and ULIPs, a lot of these things actually will fade away over time.
All right, thanks very much, Digant, for putting that into perspective. Clearly, that insurance sector is reeling under pressure on the back of those announcements. Manish, just taking it right back then to our discussion on the overall budget, and it clearly seems that there was a lot of focus on capex and in particular the efficiency for the agri-supply chain. This is something as well that was much awaited. How have you read into the steps that have been taken in this vein, and do you believe that now we are, given the fact that we are such an agri-heavy economy as well, that this part of the market as well is only going to cheer these new announcements?
The question is for me, right? Yes. I really couldn't hear the full of it, but purely from a big picture standpoint, in a typical last year of a government, government tends to be a lot more political leaning, so to say, and therefore in the debate of road versus Revdi tends to win. And to that extent, there is a new sort of political macro that Modi is redefining, so to say, and still favoring building road.
विकसित भारत के विराट संकल्प को पूरा करने के लिए एक मजबूत नींव का निर्माण करेगा। ये बजट वंचितों को वरीयता देता है। ये बजट आज की एस्पिरेशनल सोसाइटी, गांव, गरीब, किसान, मध्यम वर्ग, सभी के सपनों को पूरा करेगा। मैं वित्त मंत्री निर्मला जी और उनकी टीम को इस ऐतिहासिक बजट के लिए बधाई देता हूं। साथियों, परंपरागत रूप से अपने हाथ से औजारों और टूल्स से कड़ी मेहनत कर कुछ न कुछ सृजन करने वाले करोड़ों विश्वकर्मा इस देश के निर्माता है। लोहार, सुनार, कुम्हार, सुथार, मूर्तिकार, कारीगर, मिस्त्री, अनगिनत लोगों की बहुत बड़ी लंबी लिस्ट है। इन सभी विश्वकर्माओं की मेहनत और सृजन को देश इस बजट में पहली बार अनेक प्रोत्साहन योजना लेकर के आया है। ऐसे लोगों के लिए ट्रेनिंग, टेक्नोलॉजी, क्रेडिट और मार्केट सपोर्ट की व्यवस्था की गई है। पीएम विश्वकर्मा कौशल सम्मान यानी पीएम विकास करोड़ों विश्वकर्माओं के जीवन में बहुत बड़ा बदलाव लाएगा। साथियों, शहरी महिलाओं से लेकर गांव में रहने वाली महिलाएं हो, कारोबार, रोजगार में व्यस्त महिलाएं हो या घर काम में व्यस्त महिलाएं हो, उनके जीवन को आसान बनाने के लिए बीते वर्षों में सरकार ने अनेकविध कदम उठाए हैं। जल जीवन मिशन हो, उज्ज्वला योजना हो, पीएम आवास योजना हो, ऐसे अनेक कदम, इन सबको बहुत बड़ी ताकत के साथ आगे बढ़ाया जाएगा। उसके साथ साथ महिला सेल्फ हेल्प ग्रुप एक बहुत बड़ा सामर्थ्यवान क्षेत्र आज भारत में बहुत बड़ी जगह अपने आप एक्वायर कर चुका है। उनको अगर थोड़ा सा बल मिल जाए तो मिरेकल कर सकते हैं। और इसलिए विमेन सेल्फ हेल्प ग्रुप उनके सर्वांगीण के विकास के लिए नई पहल इस बजट में एक नया आयाम जोड़ेगी। महिलाओं के लिए एक विशेष बचत योजना भी शुरू की जा रही है और जनधन अकाउंट के बाद ये विशेष बचत योजना सामान्य परिवार की गृहिणी माताओं बहनों को बहुत बड़ी ताकत देने वाली है। ये बजट सहकारिता को ग्रामीण अर्थव्यवस्था के विकास की दूरी बनाएगा। सरकार ने कोऑपरेटिव सेक्टर में दुनिया की सबसे बड़ी अन्न भंडारण योजना बनाई है, स्टोरेज कैपेसिटी। बजट में नए प्राइमरी कोऑपरेटिव्स बनाने के लिए एक महत्वाकांक्षी योजना का भी ऐलान हुआ है। इससे खेती के साथ साथ दूध और मछली उत्पादन के क्षेत्र का विस्तार होगा। किसानों, पशुपालकों और मछुआरों को अपने उत्पाद की बेहतर कीमत मिलेगी। साथियों, अब हमें डिजिटल पेमेंट्स की सफलता को एग्रीकल्चर सेक्टर में दोहराना है। इसलिए इस बजट में हम डिजिटल एग्रीकल्चर इंफ्रास्ट्रक्चर की एक बहुत बड़ी योजना लेकर आए हैं। आज दुनिया इंटरनेशनल मिलेट ईयर मना रही है। भारत में मिलेट्स के अनेक प्रकार हैं, अनेक नाम है। आज जब मिलेट्स घर घर में पहुंच रहा है, पूरी दुनिया में पॉपुलर हो रहा है, तो उसका सर्वाधिक लाभ भारत के छोटे किसानों के नसीब में है। और इसलिए आवश्यक है कि नए तरीके से उसको आगे ले जाया जाए। इसकी एक नई पहचान, विशेष पहचान आवश्यक है। इसलिए अब इस सुपर फूड को श्री अन्न की नई पहचान दी गई है। उसके प्रोत्साहन के लिए भी अनेकविध योजनाएं बनाई गई हैं। श्री अन्न को दी गई प्राथमिकता से देश के छोटे किसानों, हमारे आदिवासी भाई बहन जो किसानी करते हैं, उनको आर्थिक संबल मिलेगा और देशवासियों को एक स्वस्थ जीवन मिलेगा। साथियों, ये बजट सस्टेनेबल फ्यूचर के लिए ग्रीन ग्रोथ, ग्रीन इकोनॉमी, ग्रीन एनर्जी, ग्रीन इंफ्रास्ट्रक्चर और ग्रीन जॉब्स को एक अभूतपूर्व विस्तार देगा। बजट में हमने टेक्नोलॉजी और न्यू इकोनॉमी पर बहुत अधिक बल दिया है। एस्पिरेशनल भारत आज रोड, रेल, मेट्रो, पोर्ट, वाटरवेज, हर क्षेत्र में आधुनिक इंफ्रास्ट्रक्चर चाहता है। नेक्स्ट जनरेशन इंफ्रास्ट्रक्चर चाहिए। 2014 की तुलना में इंफ्रास्ट्रक्चर में निवेश पर 400% से ज्यादा की वृद्धि की गई है। इस बार इंफ्रास्ट्रक्चर पर 10 लाख करोड़ रुपए का अभूतपूर्व इन्वेस्टमेंट भारत के विकास को नई ऊर्जा और तेज गति देगा। ये निवेश युवाओं के लिए रोजगार के नए अवसर पैदा करेगा, एक बहुत बड़ी आबादी को आय के नए अवसर उपलब्ध कराएगा। इस बजट में ईज ऑफ डूइंग बिजनेस के साथ साथ हमारे उद्योगों के लिए क्रेडिट सपोर्ट और रिफॉर्म्स के अभियान को आगे बढ़ाया गया है। एमएसएमई के लिए 2 लाख करोड़ रुपए के अतिरिक्त ऋण की गारंटी की व्यवस्था की गई है। अब प्रिजम्पटिव टैक्स की लिमिट बढ़ने से एमएसएमई को ग्रो करने में मदद मिलेगी। बड़ी कंपनियां द्वारा एमएसएमई को समय पर पेमेंट मिले, इसके लिए नई व्यवस्था बनाई गई है। साथियों, बहुत तेजी से बदलते भारत में मध्यम वर्ग, विकास हो या व्यवस्था हो, साहस हो या संकल्प लेने का सामर्थ्य हो, जीवन के हर क्षेत्र में आज भारत का मध्यम वर्ग एक प्रमुख धारा बना हुआ है। समृद्ध और विकसित भारत के सपनों को पूरा करने के लिए मध्यम वर्ग एक बहुत बड़ी ताकत है। जैसे भारत की युवा शक्ति ये भारत का विशेष सामर्थ्य है, वैसे ही बढ़ता हुआ भारत का मध्यम वर्ग भी एक बहुत बड़ी शक्ति है। मध्यम वर्ग को सशक्त बनाने के लिए हमारी सरकार ने बीते वर्षों में अनेकों निर्णय लिए और ईज ऑफ लिविंग को सुनिश्चित किया है। हमने टैक्स रेट को कम किया है, साथ ही प्रोसेस को सिंप्लीफाई, ट्रांसपेरेंट और फास्ट किया है। हमेशा मध्यम वर्ग के साथ खड़ी रहने वाली हमारी सरकार ने मध्यम वर्ग को टैक्स में बड़ी राहत दी है। इस सर्वस्पर्शी और विकसित भारत के निर्माण को गति देने वाले बजट के लिए मैं फिर एक बार निर्मला जी और उनकी पूरी टीम को बहुत बहुत बधाई देता हूं और देशवासियों को भी बहुत बधाई के साथ साथ मैं आह्वान करता हूं, आइए अब नया बजट आपके सामने है, नए संकल्पों को लेकर के चल पड़े। 2047 में समृद्ध भारत, समर्थ भारत, हर प्रकार से संपन्न भारत हम बना के रहेंगे। आइए इस यात्रा को हम आगे बढ़ाएं। बहुत बहुत धन्यवाद।
Okay, so that was the Prime Minister talking about the budget as well, saying that it was a growth-oriented budget, something that is focusing on rural growth, women empowerment, as well as giving a fillip to the entire agri-economy as well. Overall, the markets are not taking it that well after that big jump that we saw. We have seen a bit of a correction coming in. We are now at 17,638. We'll take a short break on the show and be right back.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, सब साथ बढ़े. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
Well, the market is not taking the, too well as far as the budget is concerned. 17,600 has been broken at the moment, the lowest point of the trading session, and the stocks which are taking it on the chin include the Adani group of companies. So Adani Enterprises, for instance, is down about 15%. You are seeing deeper cuts when it comes to Ambuja Cement, 10% lower, Adani Gas, Adani Ports. They're all seeing sharp cuts, and even Adani Green and Adani Power and Transmission, all the stocks as far as the Adani group is concerned are down anywhere between 5 to 15%, and that's one of the pressure points for the markets as well. Let's try and understand where the value lies when it comes to Adani group of stocks, if at all, with Mr. Sanjeev Bhasin. Mr. Bhasin, we have seen that the FPO has got fully subscribed, and the worry that the market had with respect to that seems to be over. But that's not reflecting in the stock price, because Adani Enterprises stock now is trading at 2,500 versus the FPO price of around 3,200.
Anisha, you'll have to excuse me. We are one of the merchant bankers, so I will not be able to comment on the Adani group. Right. So I can understand, but when such a big group actually really sees such amount of derating, I mean, it was the poster boy of the rally, it saw a re-rating, market saw a derating. So how concerned are you about the derating that we are seeing?
There's not a matter of concern, it is just a matter of creating fear. Now, you tell me that the best money is now gone to China, it's gone to Taiwan. In the end, I think corporate governance, I think the budget have been trendsetters. You couldn't have asked for more in this budget. So I think this fear is misplaced. I can vouch for it that by next week we'll be stable and we'll be moving upwards. So X or Y doesn't matter. It's the budget which matters, and the budget has delivered on all counts. I am extremely positive on the market, and I would say this is the best time to put your money where your mouth is on both the indices, Nifty and Bank Nifty.
Last time around, there was also talks that, credit cost is lower, Adani Group has so much debt. Do you think, overall banking space after correction would be a buy for you, or you would wait for these things to settle down?
Well, if you are looking at a capex which is expanding from 7.5 to 10 lakh crore, you're giving money in the hands of the middle class. It also all has to correlate to consumption spending, and banks are the only conduit which have that. So I think it's a no-brainer to buy the banks on the Bank Nifty and the PSU banks. I would be very, very bullish on banks and, like I said, infrastructure and the index.
Let's connect that back with our charters then. And, do you agree with Sanjeev's assessment, Kunal, that perhaps the fear right now is misplaced? We're looking at the small cap index down in excess of 1%, ditto with the mid caps, PSU banks, metals, energy. All those sectors have come off quite heftily.
I think so. That's what we were expecting, that the budget day would be very volatile. So it's not a surprise that the markets moved up 1,300 points on the Bank Nifty, and now we are almost flattish to negative on the Bank Nifty. So it's not a surprise as such for me. Yes, the concern for the markets are what's happening with the Adani group of stocks, and I think that's the overlying theme for the markets, because till the time there is a heavy amount of extent of selling pressure for the Adani group of stocks, the market would remain under pressure. The point over here is that whether we hold past about the major support points for the Nifty. I think last week or so we managed to test at 17,400 levels. We bounced off almost 500 points from those levels. So a retest of that 17,400 mark would be a real litmus test for the markets going forward. So I think traders can probably hold on to their long positions, but I think 17,400 is the critical support to watch out for.
Okay, fair enough. Meantime, Naresh, I just wanted to get your thoughts on some of those insurance stocks, because that really seems to be reacting negatively to the budget.
So, in terms of insurance stocks, we were seeing anyways a sideways to a downward trend in most of the names, apart from SBI Life. Most of these names have been in a sideways to a downward trend, and today's breakdown is with volumes, and the concerns are very clear because what has come out in the budget, and you don't want to be fighting it, because what we've seen is whenever there is a game changer move, you don't want to fight it. So let it stabilize first and then maybe look at it. You want to be a seller on rise in these names rather than a buyer on dips.
So that's the take as far as the insurance group is concerned. But Kunal, your word as far as the Adani group of stocks are concerned, would you hazard a buy on any of them?
No, not really. I think it's best to avoid the stock, avoid the space as of now. Too much of volatility, very difficult to try and gauge the kind of price action into these kind of names. We've seen a bounce in between, I think 2 or 3 days back, but looking at the today's correction and the extent of selling for the Adani group of stocks, I think one should try and just refrain from buying these stocks till the time there is stability which comes back into the space entirely.
Sanjeev, sir, one side, of course, is, the group that we just spoke about and the banking names. But there has been some amount of relief that's come in as far as, extra consumption or a little bit of savings in terms of taxation is concerned. FMCG has not done well. Would you look at any of the consumption names, Titan, FMCG, any other names?
Well, Godrej Consumer has been our top pick. It's the best play on the rural side, and we think their Indonesian business is doing brilliantly. They are talking of double-digit growth, so I would definitely put a buy on Godrej Consumer. Nestle would be another one which I am very, very bullish. The capex they have announced and the future which they are looking at, it makes the stock relatively very, very attractive at this price, around 19,000.
Okay, so those are the top bets coming in. Thank you, Mr. Vaseem, for joining us and talking to us about your top bets. But let's welcome on board Sumant Sinha, the managing director at Renew Power as well. Sumant, hi. Thank you so much for making time and speaking with us. There are a lot of announcements when it comes to the energy transition. There was that entire 20,000 crore allocation when it comes to the National Green Hydrogen Mission. There was the production target for green hydrogen, which was raised to 5 million metric ton by 2030. Plus a lot of priority capital investment for energy transition was announced to the tune of 35,000 crore rupees. Are you happy with the announcements that were made for green hydrogen specifically?
Yeah, actually that announcement had already been made earlier. The National Green Hydrogen Mission had been announced by the government. So we were actually aware of it. I think the FM chose the opportunity of the budget to reiterate the target and just re-emphasize the importance of it, and also continue to state that the government is very clear that India has to move towards energy independence. But I think beyond that, a number of the other things that the government announced, viability gap funding for batteries, the 13 gigawatt scheme for Ladakh transmission, the 35,000 crores of energy transition investments. All of those are very, very strong positives for essentially continue to make the Indian economy a green one and ensure that as we grow and grow rapidly, that sustainability is not left out. So I think it was very, very positive from that standpoint.
Hi there, good afternoon. How do you believe, the government is really looking at their initiative to spur green investment, the green credit program in particular? Do you think that it is likely to bring about a mammoth change here?
Well, I would hope so. I think, look, the underlying philosophy really is the Prime Minister's target or statement or philosophy of life, which is lifestyle for the environment, which is something that he's announced at international forums, and he's made that a centerpiece of India's sustainability efforts. And, that's not just looking at the clean energy transition, it's also looking at just how do you green the economy as a whole, including things like green farming, circularity economy, how to do more mangrove farming. A lot of those kinds of things are also part and parcel of greening the Indian economy. So I think he's looking at sustainability in a very holistic way, which of course the clean energy transition is an important part of that, but so are all of these other areas that are also very important.
Left wanting for more, because as you pointed out, some of the announcements made on green hydrogen were a reiteration. Plus, there is nothing that concrete when it comes to the traditional power sector, nothing to support the discoms in a big way or last mile connectivity. Plus, there seems to be a hike when it comes to the coal import, because the coal import duty has been increased to 2.5% versus 1%. Are you left wanting for more as when it comes to the power sector, or happy with it?
Well, look, we always want more. We would not be doing our jobs if we did not want or expect more. But look, I think seriously speaking, you have to look at what the government is doing more broadly, not just within the budget, but outside the budget as well. And there's a tremendous amount that the government has done. And so I'm not surprised that the government didn't announce anything very specific for the power sector over and above the 0.5% extra fiscal deficit that states are allowed to have for the power sector part only. But I think, look, there's a lot going on. The Electricity Conservation Act, the Energy Conservation Act was passed by Parliament. The Electricity Amendment Act is already in Parliament to get passed. And all of those actually, envisage a very substantial, almost a revolutionary change in the power sector in terms of the distribution side and so on. So some of those things are happening in parallel. And I think we just have to wait for those things to come through. In the budget, what is important is what is the overall macroeconomic architecture, what happens to interest rates, what happens to the fiscal deficit. I think to me, those are very important. Those also impact the power sector, and those are looking very positive. So I think from that standpoint, it will lead to further power demand growth, and it will lead to states continue to support reform of their discoms. And I think those are very important factors in the power sector in general.
So continuity of policy action, that's what you like, and the commitment towards a transition to a greener economy is also something which is a positive. Thank you, Sumant, for joining us today and talking to us about the key takeaways for the power sector. But time now to get you another reaction when it comes to the union budget. The Union Minister Nitin Gadkari spoke about it. Let's listen into his take.
भारत के वित्त मंत्री निर्मला सीतारमन जी ने इंफ्रास्ट्रक्चर को हाईएस्ट प्रायोरिटी दी है। हमारा बजट भी काफ़ी बड़ा हुआ है, जिसके कारण आने वाले समय में हिंदुस्तान के रोड इंफ्रास्ट्रक्चर में जो हमने निर्धार व्यक्त किया कि वर्ल्ड स्टैंडर्ड के रोड बनेंगे, वो उद्दिष्ट हम निश्चित रूप से पूरा कर सकेंगे। ग्रीन एनर्जी, ग्रीन पावर, हर जगह पर जो ग्रीन बात के उल्लेख किया गया, वो हमारी इकोलॉजी एंड एनवायरनमेंट को प्रोटेक्ट करने के दृष्टि से एक बहुत बड़ी पहल है। मैं मानता हूँ कि इस बजट की विशेषता ये है कि हमारे आम आदमी के जीवन में जो एयर पोल्यूशन, वाटर पोल्यूशन की जो समस्याएं गंभीर है, वो ग्रीन अप्रोच के कारण निश्चित रूप में हमारे क्वालिटी लाइफ में काफ़ी बड़ा सुधार होगा। मिडिल क्लास के बारे में सोचा नहीं जाता था, इस बार पहली बार मिडिल क्लास को भी काफ़ी राहत दी गई है। गांव, गरीब, मजदूर और किसान का कल्याण करने वाला और प्रधानमंत्री मोदी जी के नेतृत्व में आत्मनिर्भर भारत का सपना पूरा करने वाला और हिंदुस्तान को वर्ल्ड की इकोनॉमी में एक सुपर इकोनॉमिक पावर बनाने के लिए ले जाने वाला ऐसा ये बजट है। स्क्रैपिंग के लिए जो विशेष रूप से हमारी रिसाइकलिंग इंडस्ट्री थी, उसके बारे में राज्य सरकार और भारत सरकार दोनों जगह अब नई गाड़ी आएगी, जिससे प्रदूषण कम होगा और निश्चित रूप से स्क्रैपिंग के कार्य को भी काफ़ी बड़े इससे शुरुआत हो जाएगी। बहुत अच्छा बजट निर्मला जी ने दिया है, मैं उनका बहुत बहुत अभिनंदन करता हूं। और ये बजट प्रधानमंत्री मोदी जी के नेतृत्व में हिंदुस्तान को भविष्य में प्रगति और विकास की ओर ले जाएगा, ऐसा विश्वास व्यक्त करता हूं।
Well, that was, of course, Nitin Gadkari talking about the budget. But meanwhile, when we're just looking at the markets, about 75 points down for the Nifty, 78, and it's a complete U-turn. At a point of time, we were 300 points higher, so it's 400 points of the day's highest point. Mid-cap index, small-cap index, there was huge amount of breadth that was, seen on the positive side, and I think that's taken a complete U-turn. And just let's look at the Adani group of stocks once again. Whether it's Adani Port, which is down about 15 to 20%, whether it's Adani Enterprise, which is now down a full 20%, it's locked down in lower circuit, and you have all the other Adani group stocks. Let's also look at Ambuja. I think last I checked, it was also down about 15 to 16 odd percent. So that's also locked into lower circuit. All the Adani stocks locked into lower circuit, and that's really creating some amount of panic in the markets.
When it all began, I had...
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, सब साथ बढ़े. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Looking extremely weak for the market, 300 points down for the Nifty. In the last 10 minutes, you've seen a strong outflow coming in, a strong flow coming in, which has actually led to the markets going down. And that's the sharp downtick that you can actually see on the chart. It's almost down 265 points. We are at 17,400. In the morning, we were close to 18,000 levels when we were up 300. So there has already been a 250 odd points decline and about a 500 point decline from the day's highest point. Let's once again pull up the Adani names, but now it's not only Adani names. I think everything is just going down one way. So it's not, you cannot just blame on them, or maybe they started the downfall, but now it's just being followed by a sort of risk-off sentiment that one can see. Saurabh Mukherjee is now with us. Saurabh, despite a decent budget, no major negatives, no major positives, strong announcements, strong wills, why is the market reacting the way they are?
I think, look, the budget was transparently positive. I don't think the FM could have done more. I also know for a fact that the foreign investors for whom we manage money, they are very constructive in India. It is relatively clear, though, that the foreigners are selling the market, and it's also relatively clear, I think, why they're selling the market, given the scale of the Adani Hindenburg issue. I think we will need some sort of statement from our authorities to clear the air. Now, the sooner the statement comes, the better. But the global media has gone to town. I was reading the Financial Times a couple of hours ago, the Wall Street Journal last evening. Global media has gone to town on this issue, and I think we'll need a degree of clear the air statements from the Indian regulator for the FII to move ahead with investing in India.
Yes, and that impact has been seen in the banking stocks as well, because earlier as well we had seen that they were moving in tandem with the Adani Group stocks, and that's exactly how it's panning out. Right now you have Bank of Baroda, which is down a good 10%, PNB is down 8%, SBI, that heavyweight is off around 5.5%, IndusInd Bank, IDFC First Bank, some of the other private lenders are also taking it on the chin, and the Nifty Bank is now down almost 2,000 points from the highest point of the trading session that it was trading at. So quite a bit of deep cut when it comes to the Bank Nifty space as well. Before I come back to you, Saurabh, just wanted to take from the technical as well. Naresh, your take as far as the market is concerned, we have broken the crucial mark of 17,000. We'll go back to the technical experts in a bit, but Saurabh, your take then as far as the financial space is concerned, how are you approaching it now? PSU, private lenders, how should one look at that?
We don't invest in public sector lenders. We haven't invested in public sector companies, full stop, lenders or non-lenders. We have significant exposure. We have significant exposure to private sector lenders. We've had that in several of our products. There's an entirely private sector lender focused product called Kings of Capital. And if high quality private sector lenders come off further, we will use this opportunity to load up further on these names. So no public sector banks owned by any Marcellus fund, no public sector stocks owned by any Marcellus fund. But yes, we have several private sector lenders, banks and non-banks, large NBFCs, smaller NBFCs across our portfolios, and we'll carry on. If we see material correction, we'll load up further on those.
Correction, is this not material enough? We are seeing a slide.
From where I'm sitting, I can't see the stock price correction. Remember, if all private sector lenders go down, we'll just buy, we can rebalance some of our portfolios to capitalize on that within Kings of Capital, which is our financials focused portfolio, because that's largely made up of private sector banks and non-banks, some private sector NBFCs. We can't do material reallocations there. But given what we heard in the budget, private sector lenders are beautifully placed to benefit from an economic recovery and a budget which specifically gives breaks to middle class and encourages capex.
Okay, maybe I'll, refresh your screen for you, or just give you a better idea as to what the screen looks like right now, Saurabh, because Adani Enterprises, as we speak, is down 25%, Adani Ports, 20% shaved off, and then, like we said, it's not just restricted to those stocks. SBI Life is down 10.5%, HDFC Life is down 12%, Bajaj Finserv, Axis Bank, 3.5% knocked off, BPCL, Titan, Sun Pharma, and as we speak, the index is at about 17,447. Saurabh, I recall a few months ago you talking about the entire defense sector, saying that you're hoping that there would be companies that you could buy because we're seeing a lot of steps being taken by the government on the indigenization front. I'd say maybe it was a bit of a disappointment from the defense side, but do you think that glass half empty, that a lot of steps have already been taken in the year, and that maybe on budget day necessarily the fact that there were no announcements isn't that big a deal?
I mean, look, I think given that the FM has announced a 30% jump in capex, which is similar to the last couple of years, by the way, I suspect defense spending will also go up. But I think our search remains. Marcellus continues to search for defense companies which actually have an enduring competitive advantage and will get paid on time. So I'm afraid we haven't made that much headway in identifying attractive names in the defense sector for our client base.
At the moment, which are the pockets that you like the most, and given the fact that there is a correction, will you use it as a buying opportunity?
So let me answer that in two separate parts. The way we go about investing is we don't really lose that much sleep about whether it's the budget or this or that sector, the focus tends to remain on can we find clean, high-quality companies, well-governed, good accounting, sensible capital allocation, and strong comparative advantages. The pockets where we have found lots of joy in the last couple of years has been specialty chemicals, pharmaceutical, IT services, engineering R&D, and private sector consumption. So those remain, I would say 80% of Marcellus' investments will be in those themes: specialty chemicals, pharma, IT, engineering R&D, and private sector consumption. We'll stay invested on those. In terms of opportunity, the way we run the products, the way we run our funds is, if a stock corrects below what should be its, say, warranted position size, we will load up. So, for example, if I take, say, HDFC Life, in our typical Marcellus product, HDFC Life should be around 6% of the fund. If it drops from 6 to, say, below 4, we will take advantage of the correction in HDFC Life.
Have you seen, in terms of insurance, what has happened in this budget? Does it materially change your growth outlook, or just delays it by some years?
I'm not so sure it's that material. From what I understand, the FM has said is, if you're paying premium above 5 lakhs per annum, if you're paying premium above 5 lakhs, when you get the payout, you're going to pay tax on that, right? Yeah. So I'm not so sure that's as disastrous as the market is making it out to be. It certainly doesn't warrant a fifth of market cap coming up on HDFC Life. They will have a insurance premium above 5 lakhs and more will be a small part of any insurer's client base, including that of HDFC Life. Whilst I don't have the precise number, I'm not so sure it'll warrant 1/5 of HDFC Life's market cap coming off. Just a quick disclaimer, I own these stocks, my parents own it, and our 10,000 clients own it.
Denying that, you mentioned it before as well, you own it. Can you just, talk to us about the, entire personal tax changes as well? You think that is the concern? Because, they are making the other personal tax bracket attractive where you don't get that 1.5 lakh rupees for insurance. You think that is the concern of the market as well?
I think if you think about it, what the FM is trying to do is push people away from the current regime of ye exemption, wo rebate, right, into a more transparent tax regime. As she does that, the whole culture that we have developed in India, not just in insurance, but even in mutual funds, of having tax advantage products or tax sheltered products, that will gradually go away. But I'm not sure that going away should result in large life insurers losing 1/5 of their market cap.
At least, 10% has been shaved off as far as the prices are concerned, 15% on some of the counters. But having said that, there has been a decent recovery for the market from the lowest point of the trading session. And I say that because we're above the mark of 17,460. The Sensex is down 0.6%. It's the broader markets which are taking a lot more of beating. But coming back to the first point that we were talking about, Saurabh, and that was how the Adani group of companies have been coming under pressure. And we've seen the domino effect, and maybe some sort of clarification would be needed. In the interim period, would it be a good bet for the investors to maybe take positions in, let's say, Adani Ports, Ambuja, ACC, which are structurally strong, decent businesses?
Look, I won't be able to say much about those stocks because we don't own any of them. But yeah, the point I will make is, whether you're investing in a specific conglomerate or more generally in India, look for companies where the accounts make sense to you. Look for companies where the governance track record is solid, and look for companies where you can see tangible competitive advantages. Those might be in the infrastructure sector, but they're just as likely to be high quality lenders or private sector companies.
Okay, Saurabh, in the meantime, what about your outlook, when it comes to the entire consumption space, given that, yes, of course, now more money in the hands of more people, but do you believe that this could lead to a certain extent inflation concerns now being restoked, and is that going to rear its ugly head again?
I think the inflation concerns should be eased by the budget. Once the FM has set 5.9% fiscal deficit target, I don't think the RBI will have reason to hike further, nor should you and I lose that much sleep about inflation concerns. She's giving a GDP growth projection, a nominal GDP growth projection of, say, I think 10.5%, and a tax revenue growth proportionately. So inflation concerns, I think, are easing. Global commodity prices are coming off, and we end up in a decent place from a private sector consumption growth perspective.
That's the view coming in, and but can't ignore the market meltdown now that we're seeing. And like we said, it's across the board. In fact, our managing editor as well, Nikunj Dalmia, is back with us on the budget set. And before we take it across to him, I just want to mark some of the other big losers in trade. And like we said, it's not just the Adani group of stocks. You've got Max Financial Services, HDFC Life, BOB, BEML, HAL. Nikunj, the sell-off is pretty brutal.
Aman, frankly, you got to ask yourself why. There were two risks for this market. One, Adani FPO, from a market technical standpoint. And the second risk was that what happens in the budget. The concern in the budget, in a sense, was centered around the fact that what if there is a tax, what if the assumptions are wild, what if there is going to be a complete push towards, push towards populism, and it's going to be in complete breakdown in terms of the fiscal discipline. The markets have got much more than what they wanted. The budget has ticked all the boxes. Yet if markets have fallen down, that just exposes the hollowness of the market and just tells you that how the pent-up selling is. Now, whether it is Adani or the Nifty, whether it is panic or whether it is compulsion, whether it is technicals or valuations, whether it is China's comeback and India's decline, bottom line here is that markets have fallen apart. Now, this is not a small decline, guys. The issue is sale-through. Issue is sale-through at a premium at 3,000 plus, and yet the stock has plunged almost to 2,000. Adani Ports, a complete straight line fall. Now, Nifty is off by, you can see the teeny uptick coming in. But that is just consolation. That is consolation on a day when you are celebrating the budget. Numbers which everybody's told us, 9 on 10, 10 on 10, 11 on 10. On a day like this, market does not deserve to fall like this. The Bank Nifty. If the budget is talking about a huge impetus towards capex, stroke capital expenditure, banks will do cartwheels. Banks will get more opportunities to lend when the corporate balance sheet is light. But look at the complete reversal here. It's not the absolute change. It's from where you've fallen. From here to here, the change is about 5%. Look at ICICI Bank, the real poster boy in this market, because ICICI Bank has got a robust retail outlet, machinery, and a solid corporate balance sheet. And in that also, ICICI Bank just slipped into the green. It just slipped into the red, now seems to be bouncing back. Saurabh Mukherjee, while we can talk about long term, we can talk about the big picture. No arguments there. I'm completely with you. When you see a sell-off like this, on a day like this, it just exposes the hollowness of the market. That's my limited point. It's like, a sale on the budget day, which reminds me of a Flipkart or an Amazon sale.
Look, I think the way I would put it is, basis the discussions with both our foreign clients and with other prospective clients. In fact, we have two colleagues roadshowing in America as we speak. It is clear that the foreign investor is saying, I find India an attractive country to invest in, but you give me comfort. They're asking Marcellus, they're saying, Marcellus, you give me comfort on governance, on accounting quality. What do you have to say about that? And if people like us who've spent our whole lives focusing on governance and accounting quality, imagine people like us are having to give clients comfort on accounting quality and governance. Imagine what the perception of the foreign investor might be of. If you read the media story last 48 hours in the Western media, clearly they are going to town on a specific subject. And that's why I was telling your colleagues a few minutes back, if we want these corrections to be more limited, if we want the budget to be celebrated in the way it should be, we will need a degree of clearing the air statements from our regulator, because the point of view out there, on every foreign investor I've spoken to the last 7 days, the point of view has to be India has to stand up, and India's institutions have to stand up and give us comfort on governance.
It's happening on a day after when the Adani FPO sell through, after when corporate India came together and they in a sense helped the Adani FPO to sail through. Kunal and Naresh, guys, you ready? Let's understand. Aman, I'm going to come into your territory, which is the bull ring. Okay, Naresh, kya ho raha hai?
So this is what market does. It tends to surprise you out of nowhere.
Has it surprised you?
Absolutely. So after the budget, the event was over. We saw a good recovery, and the current correction is almost, we've gone down 500 points in less than 1 hour. We've recovered 200 points in the last 15 minutes. We've gone 200, 250 points lower in 15 minutes. So that's the kind of volatility which the market is not used to for quite some time now. But overall, nothing changes. The global markets are still at the same place. We have Adani stocks down 30%. So that is the contagion risk which has happened, and that is where you are seeing the connection point being banks. Banks have corrected the most. So if you see, the rest of the markets are not taking a hit. And then you have insurance, which is due to the budget.
Didn't we celebrate too early?
So major bottoms are actually formed in times of panics, extreme panics.
today is the day where we've seen extreme volatility, extreme panic. Now what matters over here, of course the Adani group of stocks is one of the major reasons why the markets took a complete U-turn. But then if the index manages to hold on the 17,400 levels, say we trade in a volatile fashion, but we net hold on to the 17,400 mark, say for the next 1 week, then there could be a strong case that we've formed a formidable bottom.
So you're not bearish?
So I'm not bearish over here.
You're not shorting?
No, not shorting. Not at all.
So the word from our technical experts is, guys, it's a turnaround. That's what markets are. They always don't go as what you think they should go. They don't react to events the way you want them to react. That's what markets are. Greed, fear, sentiment, technicals, a lot of factors come in the short term. But at least Kunal and Uresh are of the view that while you may want to cut your longs if you bought them after the budget, and you don't want to go short right now. There's a graph which we looked in the morning, and I'm just using this lovely set of ours to just capture it. My producer would just fire it. Now this is of course a graph which we made before the budget. What we've done, Saurabh, you may want to, I'm coming to you after this graph is loaded, the volatility or the swing on budget day. And from 2017 onwards, we looked at the swing on the budget day. Up, down, up, and that data point will just come up on a screen. It's a graphic which we've been using from the morning to establish that what has been the swing on the market on the budget day. But remember, today, from a market standpoint, the budget is a event which you've come on the wrong side, you've come on the right side. Yet the market volatility seems to be extreme because of other technical factors. The graphic is just taking some time to load up right now. Can we have that graphic, please? Okay, just I've been told that the market volatility is also forcing the machines to get slightly lazy. Happens, sort of. When the market volatility is so high, machines also get confused. After all, it's all about programming.
It's a great case in point, right? We are a free market economy. Yeah. And in a way, the free market now overshadows the budget, right? So even on budget day, the stock market is telling the whole world that focus on the free market, the old socialist era is largely behind us.
All I'm saying is my limited point, Anisha, I'm going to go back to my chair, just too much of standing from the morning, is that market did not deserve this kind of a treatment on a day when the budget has ticked all the boxes. That's my limited point. The volatility graphic, I'm afraid, folks, it's taking a lot of time. Pardon me for that, because the machines also take some time. Anisha, Avan?
No, well, yes, absolutely. And the volatility is something that we are seeing. We were talking about that deep correction in the market, and suddenly there's a huge spike is also what we are seeing at this point of time. 50-point lower. At one point of time, we had gone below the mark of 17,400. So a 200-point recovery in the last few minutes itself. Sensex, in fact, is in green already. 160 points higher when it comes to the Sensex. And yes, the graph is also there. You want to point out the volatility that we have been seeing?
It's very simple and sort of just such a lovely, capture here. Points on the budget day, specifically 17, 18, 19, two budgets that year. 21, 22, 23, the graph is not ready because markets are volatile. But there is one outlier. So what we are trying to say here is that budget, while we talked about it and we really, discuss it at detail, fine print, deep analysis, vision statement, from a market standpoint, it's a 2 to 3% swing event, maximum. But today, the market has sold off. It's largely because of other factors. Would you agree?
Absolutely. And I think, as I said, right, if you judge it by the last 6 years, right, today's swing would be the second highest, right? If you take a swing, it's the second highest amongst the last 6 years. And it just goes to show that we've become a $3.5 trillion free market economy, where on a given day, even the biggest union budget announcement gets overshadowed by free market factors. And I think that should be a lesson to all of us, right, who spend time sort of focusing on Sarkar ne kya bola. The lesson to all of us that focus on accounting, focus on corporate governance, focus on annual reports, rather than Sarkari Ghoshnaएं.
Mr. Mohanty of LIC joins us now, and let's get a sense from him on what his understanding of the impact of the insurance of the budget on the financials and business of LIC would be. Mr. Mohanty, it's been a busy day, but I'm sure by now you must have looked at the impact analysis for LIC and for the insurance sector, given that there is a change in the budget.
So, good afternoon, Nikhil.
Yes, Mr. Mohanty, go ahead.
So, good afternoon, Nikhil. Actually, this is a booster for economy. As you see, a lot of infra spending is there. Almost a 30% hike is there from 7.5 lakh to more than 10 lakhs crore. And it will push job creation and all those economy will boom. Coming to insurance particularly, you see there has been some modifications in 1010D. Now earlier 10 times premiums, 10 times sum assured, those were not taxable and exemption was there under 1010D. Now that has been changed, and any individual paying total aggregate premium in a year 5 lakhs or more than 5 lakhs, so that maturity proceeds will not get any exempt, which was earlier available under 1010D. So that is precisely the present change.
But will this have a big impact as far as the entire book is concerned, the premium collection, etc.? What percentage of your entire business is from those people who have premium of more than 5 lakh per year?
You see, the LIC's operation, we are a very large insurer having very high magnitude of operation. More than 2 crore policies we sell every year, and various ticket size. Average ticket size, if you see, it is not that very high as compared to our private peers. So my sense is that this will not affect LIC's operation or LIC's profitability in a very big way. And definitely there will be some impact, but it will not impact much for LIC.
To be specific, sir, what is the impact? And when you say not much impact, what could be the quantum in terms of the absolute earnings?
You see, exact figures are, because if you see big ticket size policy, high sum assured as compared to our average, it is very, very less. And if you see tax, because there is a myth that people take insurance only for tax saving, I want to remove that myth. Our policyholders, they come across from various strata of society, and the taxpayers are there, but their number will be very, very less. So LIC's operation as a whole, as I told, it will not be much impacted by this change in the budget proposal.
Mr. Mohanty, that point is taken, but also we were just talking to another guest earlier who was pointing out how insurance is not that a mass product in India at the moment, and that's why when the finance minister is trying to shift the focus away from the old policy or the old taxation regime to the new taxation regime, the entire insurance as a product might lose a tad bit of luster and the shine. Is that something you concur with?
No, I don't think so.
So when you said not much, I'm not putting words in your mouth, sir, but you'll appreciate the spirit of my question because the stock is down right now. Can I say that the total number of policies which are above 5 lakh rupees which are maturing every year is less than 5% of your total business, or it is less than even is less than 10%, or it is less than 5%?
We are actually exactly studying the exact impact that we are studying at present. But as I told you, looking to our magnitude of operation, it will have a very, very negligible impact on total operation and total profitability.
Sir, the Adani stocks have fallen a bit more. LIC came out with a statement saying that they are not worried about it, but they also indicate that they are looking at the concerns raised by a foreign research report very closely. What is the update that on LIC, on Adani group of companies? Are you worried about your investment there?
You see, all our investments are as per prudent norms, as per our SOP and regulatory norms are there. We totally comply with everything, and it is Adani stock is one of the stocks. And we have given our clarification. You might be knowing that today also whatever we invested, today that stock also has given us profit. If you see whatever we invested, almost nearly double that value, market value of that today stands. So what we are also watching, we are engaging with Adani, we will get the clarification, all those things are there. And if you see our operations, investment operations are so huge, so it is one of the stocks. And we monitor all stocks, any stock, any deviation, we call the company people, their CFO, we engage with them to know what is happening there. And as a whole, less than 1%, 0.97% investment is there in Adani.
Since LIC is always a contra market investor, you buy when others are selling, you sell when others are buying. Adani group of stocks have seen a massive sell-off. Are you a buyer in Adani group of stocks?
At present, you see, our next week, our quarterly result will be out. At this point of time, anything, it is not appropriate on my part to share all our future investment strategy.
But currently, you've not sold or reduced your exposure to Adani group of stocks in last 3 months. At least we can talk about current then, if not future.
They told we should not discuss that. And anything we do, any transaction that is available in public domain.
But also wanted to get a sense that earlier you had commented that on a M2M basis, you're still sitting on a gain when it comes to the Adani group of companies, and the fact that you would be discussing it with the management and the company and the credit rating agencies. Have you reached out to the credit rating agencies or the management at Adani and had a word with respect to what the issue is, what their clarification is? Are you convinced about it?
That will be in due course. As we have already informed the press, that will be in due course, yes.
At the moment, you haven't had a word with the management as of now.
Yes. Right.
We appreciate your time, the fact that you could join us and you could just, very patiently answered all our questions. Really appreciate that. Thank you on behalf from everybody from ITI now. Adani group of stocks. Let's mark them, Anisha.
So Adani group of stocks continue to take a beating, and that's the reason why you're seeing the market as well fall. So Adani Enterprises at one point of time was down about 25%. Adani Ports was also down, so you can see those reactions on the screen itself. All of those stocks now sitting at the lowest point of the trading session. Let's pull up the other group names as well. Ambuja Cement, ACC, these are the companies which have good structural businesses, at least that's what the experts have been telling us. Adani Power, Transmission, all of these counters are seeing quite a bit of drubbing at the moment, and Adani Enterprises is the biggest loser. 2,200 rupees at this point of time, Adani Enterprises. And remember, the FPO price was close to 3,200, so 1,000 point lower from the highest end of the FPO price. Let me go across again to our technical experts to just understand the Adani group of stocks. Kunal, massive drubbing as far as all group companies are concerned. Would you hazard a buy or completely stay away? Because this could be a big risk-reward play, right?
Yeah, it will be a big risk-reward play, but Anisha, it always makes a lot of sense to buy stocks, especially in times when there is stability rather than too much of volatility. Because even if, for example, you have a 10% kind of a risk-reward of 1:2 or less than 1:2, I mean, it's not an ideal risk-reward to try and initiate a trade. That's one of the only reasons why I believe traders should try and refrain from buying these stocks, even if the indicators are oversold, because the volatility has not subsided. The only factors which I mentioned last time around as well, that in extreme times of such panic reactions from the markets, major bottoms are formed. So I think what we need to now see is whether the indices show a mature reaction and whether we hold on to that 17,400 mark. We've won that battle at least so far right now.
My only reservation to that point, Kunal, is that market bottoms are made when there is extreme panic. Now panic happens because of bad news. Sell-off does not happen because of good news. My only point here is that the budget has been right. Adani FPO sailing through, correct, big relief. Global markets are strong and supportive. So the sell-off is happening on good news. And that's not bad news, that's horrible news. Because market bottoms are made when there is selling, extreme panic, but there has to be some, COVID was a bad news and market bottom happened. 2008 crisis was a bad news, market bottom happened. Right now, the selling is acute, excruciating, but the news is good.
No, that's exactly the point which I'm making, that it's more of a sentimental panic right now. It's because the Adani group of stocks are falling, so the assumption is that probably the banks will also start to fall. There would be a lot of XYZ chain reactions, domino effect which would happen. So this is more of a sentimental correction, which is why I'm trying to reiterate the point that if it's a more of a not a technical correction, but it's a correction which is based on flow of funds or shorting of index futures, then it's something to be cautious about. Now I'll give you a very simple data. Now at the peak when the markets were all at 17,900 today on the index futures, there was hardly any jump in open interest. Now at a point when the index fell below the 17,300 mark, the open interest rose by 5%. These are very small numbers which you are talking about. These are not numbers to try and take note of that there's a 20% jump or a fall in the open interest. And such kind of low volume sell-off, they generally tend to form major bottoms in place.
Okay, low volume sell-off, and at least that's what's happening with some of the Adani Group companies at the moment, because Adani Ports has recovered a good solid 7% in the last few minutes itself. Ambuja Cement, Adani Transmission, Adani Enterprises. While we were speaking, some of these counters have seen a V-shaped recovery, and V-shaped recovery is also underway when it comes to the market as a whole, because Nifty is almost in green.
Days, bad days, volatile days, choppy days.
What is today? What do you call a day like this?
Avan, give me a word.
I think we're using all of the words combined today.
So is it a good day, volatile day, tumultuous day, choppy?
Yeah.
What's a good word, Naresh?
So, khaya piya kuch nahi, glass thoda barana, because if you look at
That
it,
is what summarizes
the
it
Nifty
perfectly.
is at the same place, the Bank Nifty is at the same place. We've gone 1300 points higher, 1300 points
But
lower.
we've recovered also.
Exactly, so that is what I said.
Yeah.
We've gone
It's
nowhere.
Steven now, right? After
But
the
वो बात आगे बढ़ाते हैं, खाया पिया कुछ नहीं, glass थोड़ा बाराना, एक साल. 1 year chart of Nifty, please. It'll just load up on the big wall, and you'll be surprised that in 1 year we've seen one war, inflation, recession, FI selling. But where has Nifty gone? In last 1 year, Nifty is pretty much jumping in the same place. In the morning, just when it appeared that finally Nifty was going to be cruising along. This is the Nifty today's chart. A little bit of recovery is coming in. But if you look at Nifty in last 52 week, कोई change नहीं है. कोई change नहीं. Where is ITC now? Let's look at ITC. The stock fell when the tax came out. Then market said it's a small tax. That's what Vinny told us. I think it's a small tax. I think I want to mark ITC. I want to mark ICICI Bank, another pocket of strength in terms of where ICICI Bank is right now. For me, these are two poster boys. ITC because of the strength, and ITC because of the nature of the outperformance what it has had. I would throw in SBI numbers, I think tomorrow. Yeah, numbers tomorrow. So let's look at it this way. SBI, and I'm going to use the word with Anisha, uses a tad bit of recovery as seen.
Well, I actually stand corrected. It's not tomorrow, but it's later in the week. But yeah, nonetheless.
Yeah, nevertheless. So SBI, ICICI Bank, ITC for me are three stocks. Where is IT? In this all this sell-off which is associated with FI selling, corporate governance issue. Well, IT companies do not need cash. They don't have debt. So IT today is all set to close in the green. That's the point, ladies and gentlemen, I think which we are missing. IT is all set to close in the green. And that's how typically markets move. I will not be surprised today. I've not looked at the data. Anisha, maybe you want to refer to it. Look at HUL, Asian Paints, ITC, all the FMCG companies. I would imagine that cash-rich companies essentially today would have outperformed. Asian Paints, HUL, let's look at it. Thought as much. It's a very typical market reaction. Leverage and companies which have a debt, they are selling off. Capex owners are taking it on the chin, and companies which have a high, no debt, strong cash flow, great corporate governance, all of them are outperforming. That's the trend for me, Anisha, if you frankly ask me.
Oh, well, yes, and that's a trend that seems to be working out for the market. Let me just mark a few more stocks which are on the losing side. So Raymond, for instance, in the last few minutes has slipped quite a bit. Equitas Small Finance has also slipped. On the gaining side, however, Max Financial is now recovering. So maybe the street is now trying to digest the insurance, rejig that has happened, that it's not that big a knee-jerk reaction that we were supposed to see. Vedant Fashions has seen quite a bit of an uptick, as well as some of the defense names are trying to make a bit of a comeback. But Kunal, Naresh, if I had to ask you your top bet at the moment, what would that be in terms of any stock, any sector? Because tourism is one space, for instance, which is seeing quite a bit of positive reaction, plus the consumer durables, given the fact that there is going to be more income in the hands of the citizens, they are also seeing a bit of a move. Kunal, you go first.
So I'll go with one large cap and one mid cap. Of course, on the tourism front, I think Indian Hotels is something which I would believe looks very attractive. And I think what matters is after today's gap up opening, the build up of positions for the stock, the rise for the stock, it's not caved into the entire losses for most of the other stocks, where most of the stocks have probably retraced their gains. So that's the only positive part for Indian Hotels. And I think that's a stock which I believe traders can still look out for at current levels. 340 is the target which I would eye, and stop loss for this trade could be at around 315 mark.
That's Indian Hotels for you. Yeah, what a standout in an otherwise very tempered market. What about you, Naresh?
So I'll go with a defensive and an aggressive one. So first would be NTPC, which I continue to like as a stock which has low downside risk and can surprise on the upside. Even today the stock remains flat around that 170 mark. So that is a stock which could go to 200 but may not fall to 150, 160 as such. So a good risk reward. Second is a buy on Mahindra and Mahindra Financial Services. That is something which is breaking out on the longer term chart. Relative outperformance finally kicking in for the stock after a really long time. Today also the stock came back very close to that 244-45 resistance. So this is a stock which could surprise, go towards 300 in the medium term.
Let's also connect then with Christian D. Guzman, who is the Senior Vice President, Moody's Investors, now joining us on the show. Christian, thanks so much for taking time out. And really, you know, we were describing this budget as a responsible one that is fiscally prudent as well. I just wanted to get in your thoughts now. The FY24 fiscal deficit at 5.9%, with the FY23 fiscal deficit at 6.4%, pretty much comes in line with what the street was expecting. And do you think that this is going to be music to the markets and macros here?
Well, thanks for having me. Well, I think I would agree that it is indeed a responsible budget, but responsible not just in terms of fiscal sustainability. Indeed, it does prolong the sort of trend fiscal consolidation that we've had since the onset of the pandemic, but also responsible in the sense that it still acknowledges that the economy continues to need support in light of the challenging global economic conditions. So with regards to some of the revenue measures, that of course is going to be a big help to households and citizens. And with the ongoing emphasis on capital expenditure, that is going to be a positive for long-term growth.
Okay, Christian, that point is taken, but since we have you with us, apart from budget, the big spotlight in India at the moment is on the Adani group of stocks and what's happening with that conglomerate as well. I'm sure you've read the articles and the clarification that came from the company as well. With respect to the ratings of Adani group, what does it stand at? Are you in conversation with the company? Are you looking at revising them?
Well, I cover the sovereign ratings for India, and I'm afraid we can't. And as such, I can comment on how we see the ratings or the credit quality of the government, not necessarily for the Adani group. However, I can tell you that from a sovereign and macro perspective, what is happening with the Adani group perhaps has a limited bearing on that overall picture. Yes, Adani is a very large company, but the Indian economy is that much larger. The Indian financial system is that much larger. So we don't necessarily see this yet as a material risk to either.
Coming in that despite what's happening in the entire group, you don't see it as a big risk for India as a system as a whole. So let me shift focus to the financial services sector. We have seen that the growth has been strong there. What's your take with respect to how the strength is in the financial services and banking names, given the fact that they are also seeing a bit of a knee-jerk reaction?
Well, yes, indeed, there's a bit of a knee-jerk reaction. Having said that, we as a ratings agency focus on the fundamentals. And I think what I can say is that from a longer-term perspective, there has been quite a turnaround in the financial services industry. If you recall from a few years ago, one of the reasons we had downgraded India's rating from Baa2 previously to Baa3, where we are at today, were some of the fragilities in the financial system, both with the banks and the non-bank financial institutions. And over the course of the past few years, what we have seen is a turnaround in some of those fundamentals. And we do see that reflecting some of the deleveraging that we've seen in the private sector, there has been a cleanup in the balance sheets of the financial system, which is helping to enable the very good economic growth that we're seeing today.
We'll let you go on that note. Thank you so much for joining us for a quick take on the budget and how the economy is placed. But Nikunj, just last 2 to 3 minutes left for the trading action. It's been a rather volatile one. How are we ending the day?
You know, you're being charitable when you say the markets are volatile today. It's unpredictable. We are searching for that right word. Hopefully before the end of the day, we'll get that right word. Let's get a poll going. What is the right word to really describe an extraordinary day of market? When I say extraordinary, everything what the market wanted, they got. The reaction was immediate, and then everything that could go wrong in terms of a panic selling, that also came true. You've not seen days like this before. The breadth, it is not the absolute magnitude of closing change. It is the dent in the breadth which it is a reversal which frankly is quite puzzling. The back of the Nifty was broken in the mid-afternoon trade, then it really made a comeback. Now, these are some of the big gainers. If the budget is going to be more corporate focused, more capex focused, ICICI Bank, State Bank of India, across the board, some of the banks would see a uptick. And I think that is somewhere getting captured. Consumption got a boost, so Maruti, HUL, that got a boost. But for me, the standout gainer today was IT. Whether it is a technical sell-off or whether it is a sell-off towards companies which have a debt or which have a leverage balance sheet, IT will always stand out when rupee is weak and when markets in a sense are trying to readjust their portfolio from leverage companies to the non-leverage companies. And Aisha, you're looking for that right word which describes the market today: volatile, choppy, unpredictable. What's your word for the day?
A little shocking, I would say, frankly. And I think the devil really lies in the way some of the Adani Group stocks have actually crashed. And I think that sort of, triggered this market profit taking. If I can just start off with Adani Enterprises, that's of course Adani Ports, which Adani Enterprises fell 27% today. At the intraday lows, it's managed to hit a fresh all-time low for itself. And it's not just Adani Enterprises alone. Look at all the Adani Group names: Adani Wilmar, Adani Ports. Pick up any stock. Adani Ports down about almost 10% or so. Adani Wilmar down 5%. These are the stocks which have actually cracked. And I guess some amount of nervousness ahead of the Fed event as well later tonight, right?
I don't think it's anything that's got to do with Fed or budget.
Okay.
It's all about the way how the market positioning is changing. Look at IT. I'm just mentioning that today IT is up. HUL is outperforming. ITC, despite that extra tax, marginal though, but actually has managed to make a comeback. So that just tells you that where markets currently are getting nervous. Markets say that, okay, are we going through that phase where we need to take any of the leverage companies slightly easy? Look at HUL, it is almost flat. I think IT index, when I last saw, it was almost in the green. So that's a market which is typically looking at a turn and a churn. So are we at that churn where value, leverage, some of these corporate denominated businesses did rather well? Is there a turn happening there? So IT index on a day like this is actually in the green. FIs own some of these stocks. They've not decided to sell IT. They've decided to sell other stocks, largely banks and some of the corporate stocks. So I think there are technical factors which are at play here. This Adani Group sell-off today is leaving a lot of bitter aftertaste, so to speak, for traders who thought that the storm had come and gone. The storm clearly has not come and gone. In fact, what we saw yesterday was more like a lull before the storm, which really has happened today.
Absolutely. And I think, the way the Adani Group stocks have crashed today, that's clearly a sign of how the market actually panned out today. But anyway, that's aside, and I think at an index level as well, there was disappointment clearly. We started off with that 0.5% gain. The SGX Nifty was buoyant when we came into trade. Post-budget, you saw that massive green coming in and then closing in at the session lows, down about almost 0.5% or so. Post-adjustment, about 0.3% low. I think that is the most disappointing graph today.
Yeah, I mean, it just does not make you feel very happy on a day when just about everything was on your side. Global cues are not that bad. Budget has been more than satisfactory. We call it 10 on 10 or 11 on 10 or 20 on 10. Bottom line here is the budget has been well received by the market, by corporate India, and by in general, long-term investors. Yet, if you have to deal with a day like this, it just makes you worry that is the fabric of the market getting weak. Let's take a break. When we come back, we'll dissect budget. We'll talk about today's sell-off, stock idea for tomorrow morning, and I can promise you, we've got a packed evening ahead. Wallabh Bansali would join us. Hiren Vid would join us. We'll also dissect the budget for you in the filmy andaz little later.
Co-presented by SB.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is
Welcome back. This is Closing Trades right here on ET Now. We're done and dusted with the big budget event, and volatility was the name of the game, with the markets seeing quite a few jagged edges. By the time we wrapped up the trading day, it was absolutely flat, with that comeback being witnessed. But of course, we've got the contest that's ongoing on the channel. So for all of our viewers, here is the next question, and you stand a chance to win gold coins. Here's question number 7. Who among the following never held the charge of finance minister? You've got 3 options. A. Manmohan Singh. Option B. P. Chidambaram. Or option C. Mamata Banerjee. Do SMS your answer to 56161 and stand a chance to win big in the ET Now Budget Master Contest. There's your question. It's on the screen. Who among the following never held the charge of finance minister? You've got 3 options. Option A, Manmohan Singh, B, P. Chidambaram, and C, Mamata Banerjee. All right, let's take it then right across to the FICCI panel, where Sanjeev Mehta as well as Anisha are sharing their views on the budget.
It's a fabulous budget. Yeah, it's not a populist budget. It's a budget which has balanced the short-term need with the long-term. It is a budget which has very clearly sown the seeds for bringing in technology on the agri sector. It is a budget which is very clearly focusing on reducing the carbon emissions. But I think the headline number of 10 lakh crores on capex, that has been a very pleasant surprise. I was expecting the capex to go up, but not to this extent. And I'm very pleased that this has happened. And at the same time, the managing the books very well. The fiscal deficit is targeted to go below 6%. And the good bit is that the deficit is happening not just because the government is spending more on revenue side, but it's spending more on the capital side, which augurs so well for the economy. So yes, it has been a very good budget.
Challenge with this budget is inflation. We are fighting inflation. If the budget is pro-growth, pro-poor, pro-middle class, pro-taxpayer, more money in the hand of taxpayer means that spending will increase, and it will increase at a time when the economy globally and locally is fighting with inflation. World over, that is a challenge, and in India also that potentially could become a challenge. Your comments on that?
Well, first and foremost, what we have to keep in mind that in as much as inflation is concerned, India has done a very good job of addressing it with both fiscal and monetary policy working in tandem. And after 18 or 20 months, the retail inflation is now within the central bank's tolerance band. And if you take a look at the forecasts contained in the economic survey, as well as what RBI has talked about, I believe for Q1 FY24 the inflation expectation is 5%.
Also, we got a chance to speak to Baba Kalyani, Chairman and Managing Director at Bharat Forge and TV Narendra, and immediately after his post from CI and Chairman. Let's hear out what they told us about this budget and key takeaways.
This has been something we've been asking for every year. And to be fair to the finance minister, every year she's kind of increased the outlay very, very significantly. And I think it's good for the country, good for industry, because investment in infrastructure helps create demand for multiple industries, which includes commercial vehicles, which includes cement, which includes steel and many others. It creates employment across the country because infrastructure is built across the country. And it helps us because it reduces the cost of logistics, which in India is higher than it is in many other countries. So it has a multiple beneficial impact, and that's why we are happy.
Baba Kalyani, if I can come to you now. Let's first begin by the hike in the capital expenditure to 10 lakh crores. Railways, 2.4 lakh crores. However, the defense outlay seems to be lower than what many experts had been anticipating.
For me?
Yes, for you, Baba Kalyani.
Okay. The defense expenditure has gone up by about 13.5 or 14%. So it's not too bad. Most times, the defense budgets have been underspent. So the problem not lies so much with the budgetary allocation for defense expenditure. And if I'm right, I think the Honorable Finance Minister has said many times that if more money is needed for defense, she is quite happy to provide it. I think it's in the whole procurement cycle. And I think what we are beginning to see is a big improvement in that procurement cycle. So many of the companies that are engaged in defense, I think, will benefit from this. Second, the whole concept of Atmanirbhar in defense is coming to play. And if you saw the last Defense Expo in Ahmedabad that took place a few months ago, there was no foreign company in Ahmedabad. There's only Indian companies. And I think that is now beginning to play out.
Absolutely. So if you were to look at the, this outlay, like you said, it's higher by 13%. But Baba Kalyani, if I could stay with this theme with you. You're saying in the last Defense Expo, only one foreign company was there to be seen. This is a government that's talking about China Plus, a government that's talking about being Atmanirbhar, and also wants to make India a defense exports hub. What we've seen in the stock markets is a massive re-rating that has taken place for defense stocks. I wanted to get a sense from you, on ground, what is the execution like? The orders that are being won as well, the turnaround time that we're seeing, have the bureaucracy also improved? Or have the markets run ahead of themselves?
No, I think things are improving. If you expect the defense procurement procedure to change overnight, I don't think that's going to happen. It's a complex procedure, but I think changes are happening. Second, in terms of exports, I think we are more successful in the export markets with defense products and platforms. Our own company has got huge orders for exports, which we are now executing. So I think things from that perspective look quite good to me.
Okay, things are looking good. TV Narendran, if I could come to you, there's a lot that's going to happen. For example, privatization of 50 airports. There's a railway budget outlay for 2.4 lakh crore rupees as well. But having said all of that, this is also a budget that is focusing on going green. Look at the commentary that's come in for that, as far as hydrogen and electrolyzers also go. Therefore, is the pressure also going to be on companies like yourselves to reduce the carbon footprint? Of course, you're all working towards that. But I think this government has also made its intentions very, very clear.
Yeah, Nayantara, I think the intentions are clear. I think a lot of goals have been set. What the government has also said is it's ahead of some of those goals which they've committed to the international community. And I think this budget is putting the money where the mouth is in some sense. So I think directionally we're moving in the right direction, but it's a long journey. So if I look at hard to abate sectors like steel and cement, you certainly need to have green energy sources available, green hydrogen available. You need to have the policy framework to support investments in these areas as a user industry. Like in Europe, you need to have carbon border adjustment mechanisms to make sure that carbon inefficient products don't come into the country when you're investing in creating carbon efficient products. So it's a long journey, but I think we are taking some good steps towards it. I also saw that even something like pump storage is being encouraged because honestly, if you have the volatility in supply, which is inevitable with renewable sources, and the volatility in demand, which is inevitable when process industries like us shift to green energy sources, then you need storage options in between. And battery is just one option and may not be a good option for large industrial processes. So you need pump storage and other such solutions. So I think there is obviously a lot of thinking going on in this subject. And I think CII also be working with the government so that we take a more holistic view. So I think we're making the right steps. A lot more needs to be done, of course.
Oh yes, of course, a lot more needs to be done. Now, having said that, and for this one, I'd like to come to you, Baba Kalyani. Look at the way the government, every budget in the last few years, has done its bit to increase capital expenditure. One more steep hike to 10 lakh crore rupees. The big question is, the recent reforms that we've all been hearing about, coupled with today's Union budget speech, is it good enough to get you, your peers in India Inc., to step on the gas when it comes to capex? We've been hearing about the Mahakumbh for CapEx, as Kumar Mangalam Birla said, but tell us, Baba Kalyani, do you think now, finally, India Inc. will step on the gas and we will see that CapEx turnaround?
Nayantara, first of all, I want to tell you the way we see it in India Inc., we are already doing CapEx. It's just that we are doing CapEx with our own money rather than going to the banks and borrowing, like it used to happen in the old days. I don't think any one of us has stopped CapEx. Matter of fact, now with this budget and the kind of growth prospects that we see with the huge capital expenditure the government is going to do on infrastructure, which Narendran talked about, it's quite clear. Demand for commercial vehicles will go up, demand for construction equipment will go up. A lot of secondary and tertiary industries which are connected with this, the demand for them will go up, and you have to increase capacities. You have to incur capex. I mean, you can't. There is no escape from incurring capex. The difference is, this time around, many industries are very cautious in terms of incurring capex through borrowings. They would rather do it with their own money. And most of us have a lot of money on our balance sheets. And that is the difference. So I think we are incurring capex. The capex cycle is on. It is going to accelerate. And as you see government's capital expenditure coming, I think by a lag of a quarter or so, you will see private sector capex also coming in. If you want to build green energy complexes, electrolyzers, you want to build pump storage, as was just talked about, all this is huge capex. It doesn't happen without capex. And the private sector is supposed to do it. So we are all going to move in that direction. And, just talk about green energy. I just want to mention this. I don't want to embarrass Narendran on this, but we are the first steel company in India. We're a small steel company that has become green. We make green steel.
Yeah. No, and I remember your son, Amit Kalyani, was also in Delhi when that had to be launched. But Baba Kalyani, the other business of yours that I want to talk about was the auto space, and some announcements that have been made today which could give a fillip to the EV industry, concessions for lithium-ion batteries. However, for imports, the customs duty could be hiked. I want to get a sense from you. What is this budget going to mean for EVs?
I think, EV is a directional change that is going to happen in the automotive industry. That is very clear. That's a mega trend all over the world, and India cannot escape that. The question is, what is the timing of this? My own feel on EVs is that by 25, 26, almost 100% of the two-wheelers and three-wheelers will become electric. So that's going to be one industry that will change in the next, let's say, 4 years to electric. Now that is what is going to create the kind of ecosystem, because the numbers are like 30 million two-wheelers and three-wheelers we make per year. Now when you make that many electric vehicles, you will have an ecosystem of electronic components, the subsystems that go into EVs, etc. A whole industry will develop, a new industry will develop to scale and size, and therefore be cost competitive. And I think the policies that the government is putting in is to make that industry cost competitive. Now, once that ecosystem develops, then it will get translated in a much larger way to four-wheelers and commercial vehicles, etc. So I think the direction is set. As far as automotive industry is concerned, my own view is if you look at our four-wheeler business today, we are at about 4 million or a little more than 4 million. We tout ourselves as being the 5th largest manufacturer of automobiles, but we are far away from where we need to be. By 2047, we did this exercise 6 months ago with between automotive components and automobile manufacturers, part of a DPIIT program.
That's TV Narendran as well as Baba Kalyani sharing their final verdict on Budget 2023. And stay tuned to ET Now as we continue to decode the budget and its aftermath. On that note, we're wrapping it up right here on the show. Thanks for watching.
Nation first सब साथ बढ़े. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Fiscal deficit for the current financial year expected at 6.4%, but it could fall to 5.9% next year. The government hopes to achieve the fiscal deficit target of 4.5% by year FY26. New tax regime will be the go-to tax regime by default. It could also be an indication that the old regime could soon become a thing of the past. But in some good news, the rebate for taxpayers opting the new regime will be 7 lakh rupees annually. Surcharge also for the wealthy has been reduced to 25% from 37.5% earlier. Nirmala Sitharaman says that the world has recognized Indian economy as a bright star as the country is set to grow at 7% in FY23, says the economy is on the right track. And in a big boost for infrastructure, the capital expenditure outlay increased by 33% to 10 lakh crore rupees. The effective capex will be 13.7 lakh crore rupees, or 4.5% of the GDP. The volatile budget session in the red, dragged by Adani Enterprises and Adani Ports. All sectoral indices are in the red by the end of the trading session, barring IT and FMCG. ITC makes a spectacular comeback, recovering almost 10% from the day's low. Government removes tax exemption in traditional insurance policies with premium over rupees 5 lakhs. Shares of LIC and PB Fintech slump. LIC's MD Siddharth Mohanty tells ET Now that they are engaging with the Adani Group.
Honourable Speaker, I present the budget for 2023-2024. This is the first budget in Amrit Kaal. I propose to increase the rebate limit to 7 lakh in the new tax regime.
Well, that was simply the recap of the top highlights of 2023 budget, and if you had to recap it, it will be remembered for the government's effort to boost capital expenditure, with the effective capex now standing at 13.7 lakh crore rupees. It will also be remembered for the government's fiscal prudence, where the government has revised its fiscal deficit estimate for FY23 to 6.4% and pegged FY24 deficit at 5.9%. And last but not the least, the changes made in the personal tax regime is also something which will be grabbing everyone's attention today. We will look at each of these factors and how they will impact you and me. But before we do that, let's hear out the Finance Minister and what she had to say on the deficit as well as the GDP.
The revised estimate of the fiscal deficit is 6.4% of GDP, adhering to the budget estimate. The fiscal deficit is estimated to be 5.9% of the GDP. In my budget speech for 21-22, I had announced that we plan to continue the path of fiscal consolidation, reaching a fiscal deficit of below 4.5% by 2025-26, with a fairly steady decline over the period. We have adhered to this path.
Okay, so that was the Finance Minister talking about fiscal prudence, but there is a lot of buzz after Finance Minister Nirmala Sitharaman said that the new tax regime will become the default option if taxpayers don't opt for the old one. What taxpayers are also digesting is the new tax slabs under the new regime. Sitharaman proposed to raise the rebate limit from rupees 5 lakh earlier to 7 lakh rupees now in the new regime. Let's listen in to what the Finance Minister had to say when it comes to the personal income tax bit.
I propose to increase the rebate limit to 7 lakh in the new tax regime. Thus, persons in the new tax regime with income up to 7 lakhs will not have to pay any tax at all. The second proposal relates to middle-class individuals. I had introduced in the year 2020 the new personal income tax regime with 6 income slabs starting from 2.5 lakh. I propose to change the tax structure in this regime by reducing the number of slabs to 5 and increasing the tax exemption limit to 3 lakhs. The new tax rates are 0 to 3 lakh, nil. 3 to 6 lakhs, 5%. 6 to 9 lakhs, 10%. 9 to 12 lakh, 15%. 12 to 15 lakhs, 20%. And above 15 lakhs, 30%. I propose to reduce the highest surcharge. Rate from 37% to 25% in the new tax regime. We are also making the new income tax regime as the default tax regime. However, citizens will continue to have the option to avail the benefit of the old tax regime.
Okay, so that was the Finance Minister detailing out the budget speech, but for now she's addressing the media as well at the press conference. Let's cut across to that.
Before I request the Honourable Minister, I must request you all to please follow the norm of one organization, one person, one question, please. Don't club too many questions together. That will help us give opportunity to friends. Opening remarks. With this, I request Honourable Minister of Finance.
Thank you. Good evening, and thank you for being here now after the budget has been laid on the table of the House. As opening remark, I'll just give a few indications of what has been highlighted in the budget. Broadly, I think the 4 emphasis points are on empowering women, giving a lot more attention to the SHG groups which are in the rural areas, trying to scale them up, give them the opportunity to brand and produce and also market their products in a far more scaled up and professional manner. Emphasis on tourism and training of youth for readying themselves for tourism, specific action for 50 destinations where comprehensive tourism action plans will be introduced. Then what is being called as PM Vikas, looking at Vishwakarma, people who create things, make things out of their hands using tools. In some states they are called Vishwakarmas, in some other states some castes are referred to as Vishwakarma, but what we mean here is to cover all those artisans and craftspeople who do things with their hands using some tools, so not specifically only to some particular communities, but to all who create the soft power of India through their craftsmanship. Then the 4 is green growth, the 4th one, which is in every sphere of life, We have policy interventions and enabling provisions made so that India moves fast on the transition to renewable energy, the investments made for hydrogen mission, renewable energy transitional facilities which we need, natural gas, and also looking at biogas, also evacuation of power from renewable energy sources located in Ladakh to the rest of the country. So those are 4 highlights which I'd like you to go back to see the scale in which we are approaching these issues and the impact that it will have on large sections of India's population. Then, of course, I gave 7 priorities, which began with talking about inclusive growth, investments in infrastructure, also reaching the last mile so that those who are still left without a house or a sanitary facility or a road which is reaching them, and so on. So the last mile, reaching the last mile for those who desperately need that kind of a link are all being covered. Then we are also looking at a very futuristic fintech financial sector for which we have brought in some specific ideas. We are looking at also improving the industrialization of this country where people will be trained for Industrial Revolution 4.0, which means they're going to be trained for AI, IoT, using Web3 in other words. So training manpower to ready themselves for industries which are rapidly becoming industrialized in the Web3 context. Then digital economy, unleashing the digital power of India in various walks of life, setting up an artificial intelligence research center, Center for Excellence. So all these are in part A. There's a lot of increase in the agriculture credit availability, 20 lakhs being made available for agriculture credit. Also a sub-scheme under the PM Matsya Sampada Yojana, making sure that people living in the coastal areas are going to benefit from it, fishermen are going to benefit from it. Now, if largely the Part A has looked at these, Part B has aimed at rationalizing the customs duties, also making sure personal income tax, after a very long time, has had substantial changes which will benefit the middle class. And also because this country has been waiting for direct taxation to be simplified, also waiting for direct taxation to be a lot more easy in compliance, and therefore the new taxation regime that we brought in for direct taxation 2-3 years ago has now got greater incentives, greater attraction, so that people can unhesitatingly move from the old to the new. Of course, we are not compelling anybody. Those who want to remain in old can still remain there for enough justifications that they can have. But the new one, obviously, is now attractive because it gives greater rebate. It also provides for a simplified and smaller slabs, lower rates of taxation, and also slabs which are nicely broken down. So with all this, I think the budget, I've not gone into specifics, but I thought as an opening remark, this much will be sufficient to say this is a budget which is beautifully balanced, both growth considerations, because the capital investment has never before seen double-digit investment announcements. 10 lakh crore, which includes 1.3 lakh crores being given to states, is going to give a big leg up for capital investment from government. So balancing that I'm talking about is looking at public sector investments, continuing that good tradition of capital investment in infrastructure, and also attending to MSMEs, because they are the engine of growth. We've given them relief, we have also given them new access, we have extended and widened the emergency credit liquidity guarantee scheme. Also given them back their securities, 95% of it, even if they fail to deliver on contractual promises which were during the COVID pandemic. So the balancing is, one, we could sustain the capital infrastructure expenditure from the government. Simultaneously, in the private sector, give a lot of push and impetus for the MSME, and not forgetting the individuals, the middle class individuals who needed that kind of a tax breaks and relief through taxation. So the large macroeconomic considerations have also been kept in mind. The fiscal consolidation has not been kept in the back burner. We've attended to it. We are respecting the glide path we gave ourselves 2 budgets ago. 6.4 this year fiscal deficit, and the forthcoming year for which the budget is presented now, 5.9% fiscal deficit. So broadly, I leave it at this. I suppose when you ask questions, we can answer the rest. Thank you. Thank you for coming here today.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that when there is an announcement for 7 lakh rupees under new tax regime, that will no tax to be paid, and then you are talking about rejigging the new tax regime, does this mean that this is the end of exemptions for various incentives, exemptions for investment and savings?
Well, I've already addressed this, I think. We want to make the new tax regime, which is without exemptions, attractive enough for people to think that this will be the best option for them because it gives them better rates. It doesn't also make the compliance a burdensome exercise. If rates are so low, you're going to benefit net by paying lesser tax. Even those exemptions that you would have otherwise gained from would have resulted in probably net amount being the same. So we made this a lot more attractive. But if there are people who still think that being in the exemption regime, which is the old regime, benefits them, they're welcome to continue where they want. But yes, the ultimate interest is to make the simpler regime more attractive. And that is why we've come up with this.
Ma'am, firstly, many congratulations on that fiscal consolidation, because I keep asking you that question. But the issue today is about people in terms of, there is a big gamble in terms of capital expenditure. When you do that, does it actually trickle down to the people? Does it create jobs? I know you've been doing this for the last 2 years. Are you sure that this will really trigger off job creation, one, to, money in the hands of the poor people? The second, of course, is about inflation, which, again, you, like last year, you haven't really touched about it, but you have had the letter from RBI. Your chief economic advisor yesterday says we are in uncertain times, but we hope that it will be under the check of 4 to 6%, hopefully the lower band of RBI. What is your answer to both these points?
First of all, on the inflation, I think, yeah, you're right in saying RBI wrote a letter and what. But in the meanwhile, you've seen inflation come down, both the CPI and WPI. Action is being taken by the government. We take inflation-related steps as and when things develop in the ground and in response to it. And that has borne result. So inflation is not something which we are looking the other way while it is changing up and down. We have kept attending to it, and as a result, you find the result. On fiscal consolidation, you asked me the question, and I've already explained that we have attended to it with all earnestness, having respected the glide path we gave ourselves earlier. Jobs. Yeah. See, first of all, I find it a bit odd you may want to ask this question like this. Capital expenditure. I would have appreciated if you asked me, you said something in the BE, but you have not really exhausted what you put forth. You have not really used it in the ground. It is unfulfilled in the sense targets have not achieved. I would have been happy to answer if that were to be the case. But you're asking me a question about, in the sense you were implying that we have fully utilized what has been kept for capital investment. Therefore, it makes me feel odd that you're asking a question of actually have jobs been created or not. When projects are undertaken and money is utilized, and that it is utilized as coming through from the budget statement, how would the projects get completed without manpower, without jobs? Not all projects can be completed, even 1%, without human intervention. So obviously jobs are happening in the ground. So
Ma'am, I want to ask you, ma'am here. Ma'am, I want to ask you what percentage of taxpayers had moved to the new tax regime in the last assessment year? And is there a number that you expect, 50%, 60%, whatever? And number two, ma'am, there's a specific mention for expenditure towards MSMEs. Now, is there an estimate of how much, what was the dues that companies had claimed as expenditure and which has not actually been paid to the MSMEs?
Sanjay, you want to answer on?
On your second question, that is on the MSMEs, well, we don't have that data. Certainly, we don't have that data. And it's not, I mean, we don't take that data from the taxpayers in their returns, so that data we will not have. But certainly, you know, we are all aware of this huge problem of timely payments not being made to the MSMEs. So in that direction, you know, this is certainly a positive step. Coming to your first question on the exemption-less regime, let me say that for companies, the 22% tax regime that we got, 61% of our tax now, the corporate tax, more than 60% is actually coming from the exemption-free tax regime. Individuals' data we will not have, but we are very hopeful that this particular scheme for individual taxpayers, the PIT, I think the majority would prefer. I mean, all of you, if you all do your own calculations, I think majority here would be now wanting to shift irrespective of their incomes and the deductions and exemptions that they claim. They would be finding it more attractive to shift to the new tax regime, majority of them.
Ma'am, very good afternoon. Congratulations on a great budget. It's very clean, simple, nicely done. Ma'am, one quick question on CAPEX and one more on petroleum subsidy. Ma'am, your CAPEX for RE is lower actually in terms of the spend as of now. But the target is, you know, greatly stepped up for FY24. So what gives the confidence that it will be all utilized? That CAPEX RE is lower, ma'am. 7.28 versus slightly lower. And a big jump.
Okay, so that's the Finance Minister, Nirmala Sitharaman, answering the questions of media, clarifying that the new tax regime is the default option, but that does not mean that the old tax regime has been done away with. You can still opt for that action. Plus talking about how it's a growth-oriented budget, the focus is on CAPEX as well as job creation, and also detailing out various sectors like tourism, etc., which has got quite a bit of fillip in the budget gone by. So making it growth-oriented budget and talking about the CAPEX coming in, plus the push for women as well as youth as well. On that note, we'll slip into a very short break, but don't go anywhere. When we come back, we'll discuss more about the internals of the budget.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is now we are calling it a budget like never before. It has ticked all the boxes, which is working on the path of consolidation, ensuring that the economy moves from revive to thrive. It has taken care of individual taxpayers, and at the same time, the Finance Minister has really walked on the path of fiscal consolidation without compromising on the expenditure. So how should one really look at this budget, what it can do to the economy, and what it specifically has done for the banking sector? Let's discuss that with none other than Mr. Dinesh Kumar Khara, Chairman of State Bank of India. Mr. Khara, pleasure to have you on ET Now. Thank you for joining us. My first question, should it be to the individual taxpayer, Dinesh Kumar Khara, or to the Chairman of SBI? Because this budget has given something to both.
Thank you very much, Nikunj, for having me on your show. Well, as far as the individual taxpayers are concerned, it is, of course, a very welcome step, and the kind of relaxations which have been given. It's not only for the regular earners, but also for the pensioners. There is a definite relief which has been given, and including family pensioners. And apart from that, even for those who are going for LTCG has not been touched. So I think that will also take care of the investor sentiment. And also when it comes to the encashment of leave, that also has been adequately rationalized in terms of the average increase in salary over the years. So earlier that limit was almost like of no use for all those who were availing that kind of encashment. So they were all subject to paying tax. So I think to that extent this budget has actually addressed the concerns which are there for the individual taxpayers. So it's a very welcome budget, and it goes a long way in terms of making more purchasing power available with the customers, which will actually shore up the demand for the as far as the consumer segment is concerned.
This budget has clearly prioritized growth. There is a huge focus on fiscal consolidation, but at the same time the commitment to spend more to create multiplier effect on the economy, I think, is also visible. So do you think from an economy standpoint this is like a budget, this budget is like never before because it is ticking all the boxes?
Yeah, I fully agree with you, because actually if you really look at it, the borrowing targets have been kept within the limits, which will ensure that there is not undue pressure on the markets when it comes to the bond market. The second very important component is about 10 trillion is an amount allocated for the capital investment. And at the same time, even for the railways also it is 2.4 trillion. And there is a due emphasis for the states also to undertake the capital expansion. So actually this will go a long way in terms of pushing the growth agenda of the economy. And when this kind of a capital expenditure will happen, it will actually give enough focus or enough visibility for growth for the core sector of the industry, like the steel, the iron and steel, cement, and also it will also bring in the opportunities for the skilled labor, the execution of large value projects. So I think overall we have seen that this kind of a capex budget goes a long way in terms of ensuring that there should be adequate growth in the economy.
But at a time when the economy is dealing with the challenge of inflation globally, also that seems to be the problem. This kind of an demand growth driven budget, especially when the multiplier effect will get created because of investment and also now consumption will also get a boost. Could this really have impact on inflation, not this quarter but maybe towards the second half of this year?
To my mind, so long as there is enough capacity within the economy, and that is something which I feel that there is a adequate focus in terms of augmenting the capacity in the economy also. So I think so long as the capacity is there, so long as the supply side constraints are not there, perhaps we have already seen that inflation is now trending much better, and it is inching towards the tolerance levels of RBI. So I think, to my mind, perhaps the augmentation of capacity, which has also started happening, it will probably take care of the capacity constraints, and the supply chain constraints will also be addressed, which eventually will ensure that the supply side constraints should not be there, which will push the inflation. So I think, to my mind, so long as the capacity is optimally utilized and adequate additional capacity comes in the play in good time, it will address the inflationary concerns too.
Budget done enough, Mr. Khara, to stimulate the rural economy, because that's a weak part of the economy? Has the budget done enough to take care of that that weak link?
See, as far as the credit expansion in the rural sector is concerned, it's almost getting doubled. About 20 trillion is the amount which has been indicated for the agri sector. So I think there will be enough availability of credit in the rural sector also. And more importantly, the kind of investment which is happening into the agri-tax, which will actually boost the productivity of the rural economy, will also improve the earning capacity of the rural sector, which will eventually show up in their ability to sustain the economic activity at this level, and also withstand the risks which are inherent in the rural activity.
Mr. Khara, if India has to grow, it needs capital. Our savings, something which you flagged off in the past, are in fact contracting. Has this budget done enough to ensure that the availability of foreign capital actually increases into the entire banking system per se? Because right now growth is back. Growth is not a challenge. It is the low deposit growth and the availability of new capital which really could be a challenge going forward.
Well, as far as we have seen that a new scheme has been introduced, which is essentially for women. They can keep their money and into the deposit up to 2 years, and that will earn about 7% plus 7.75 kind of interest rate. So that will also go a long way in terms of bringing in the new source of deposits in the economy. And also the other issue relating to capital, I think the way there's a very clear focus on the development of the economy, it will actually augur very well for the corporate sector, and the huge demand for the corporate sector will also enable them to attract the capital from overseas. So I think these are all the enablers which are being created for attracting the capital from overseas, which will eventually help us in bridging the gap between the savings and the required investment for achieving the growth of the economy which is envisaged.
Mr. Khara, State Bank of India issued a press release last week that they are not worried about the exposure to Adani Group. The stocks have fallen more. Globally, we hear that there are challenges in terms of the bond market and global acceptance of the bond. What is State Bank of India's view on the exposure to Adani Group of companies, given what is happening to the stock prices and how bond markets have behaved?
Our exposure is to the assets, physical assets, and they are having adequate cash generation, and we have not experienced in the past any kind of a default from this entity, and we don't expect that we will have any challenge because the assets are having very robust cash flows. So as far as our lending is concerned, we don't envisage any problem on this particular account.
Here in the market, that lenders of exposure to
and
Adani...
also in terms of the exposure also?
Yes, sir.
No, even in terms of the exposure also, considering our overall balance sheet, it is a exposure. One, of course, it remains within the overall prudential exposure framework prescribed by RBI, and even there also, what we have observed is that the outstandings are much lower than what the exposure is. So I think we don't expect that any kind of pressure on the group companies as far as the liquidity is concerned, and as far as their ability to honor their commitments are concerned.
Flash out, sir, and please correct me if I'm wrong. We are putting a flash out saying that State Bank of India, India's biggest banker, which is also the biggest lender to the Adani Group, is not worried about their exposure to the Adani Group?
Yeah.
Mr. Khara. Now my question is, what gives you the confidence that you will not run into, your exposure will not run into some challenge going forward?
No, because we are the assets which we have financed, they are the cash generating assets, and we have adequate visibility of cash. And we, as far as the repayment obligations are concerned, the cash generation is much more than the obligations which they have. So that is one of the reasons why we are quite confident that we will not face any challenge as far as the quality of this exposure is concerned.
I'll go back to the budget point, Mr. Karan. You really appreciate the fact that you've clarified for the first time on SBI's exposure to the Adani Group of companies, and I also appreciate the fact that SBI in the past has not spoken about individual companies. So really, thank you for going out of the way for clarifying that. But going back to the budget, Mr. Khara, there seems to be a complete departure, Mr. Khara, in the way of budget policy making is being done now. There is focus on growth. It is simple. The tax regime is very, very stable, and the focus clearly seems to be on taking the economy from survive to revive to thrive. Do you think the budget has done enough to ensure that Indian economy now in this muddy global environment take a giant leap forward?
Yeah, I think it's going to be a giant leap in terms of what we have seen in the past. As far as the Indian economy is concerned, it's one of the silver spot across the globe, and this kind of budget will give it a further fillip and see to it that it continues to perform even better going forward.
From the budget which you were expecting or anticipating, clearly has not happened?
Sorry, I missed out.
No, anything specific? While the budget has something for everyone, we always say that dil mange more. So anything in the budget which specifically you thought would have got addressed has not got addressed?
No, I would say that it is a very finely balanced budget, and it has addressed the key concerns of all the sectors of the economy. And I think because in any case the budget has to be drawn in the overall boundary conditions, and also most importantly the fiscal is something which also is now we are seeing that from 6.4 it is expected to be 5.9, so a fiscal deficit, so which goes a long way in terms of giving the required strength to the economy. I would say that overall budget has addressed all the sections of the society and the requirements of the economy very well. So it's a very well balanced, very finely balanced budget, which will probably will go a long way in terms of supporting the growth journey of this economy.
So two final quick questions, Mr. Khara. The budget is always based on assumptions. What do you make of the assumptions for FY24? And if I may just throw in one more ingredient in the melting pot, sir. 2022 has taught us that geopolitical concerns, external factors can really shake up the government planning. So do you think this budget, even though it's growth dominated, there is a little bit of risk involved given the kind of macro environment we are in?
I think considering what we have gone through post 2022 and the kind of resilience which has been demonstrated in this particular period, it gives us all the more confidence that we should be in a position to navigate the challenges. But you rightly mentioned that globe is open to many challenges. But I would say that whatever we are seeing around the globe, probably they are moving from towards a better situation. So I think when the globe is moving towards a better situation, it should be all the more good for economy like us. and since we have already demonstrated our capability of reacting in a very resilient manner, so it will probably give us the required strength to even face any such headwinds which might be seen in the global economies.
Budget, sir, on a scale of 1 to 10, will it be 8, 9, 10 or maybe 11 on 10?
I would say it would be somewhere between 10 to 10 and a half.
Really appreciate your time, Mr. Khara. You've taken time out on a very busy day, and thank you for sharing your thoughts on budget, first on ET Now, and also sharing and assuring everyone that the State Bank of India, which is the biggest lender in India and also the biggest lender to the Adani Group, faces no challenges going forward in terms of the exposure to the Adani Group. Really means a lot to us, and thank you on behalf of everyone from ET Now.
Okay, a lot of measures have been announced by the Finance Minister when it comes to the personal finance bit as well. Of course, the tax slabs have been increased, and also the surcharge for high net worth individuals has been cut a tad bit as well. Let's go across to my colleague Kavita. She's standing by to tell us what the key internals of the entire rejig around income tax is like. Kavita, take it away.
Let's talk about what the taxpayer has finally got from this budget. So, new tax regime, exactly. So, this has been made more attractive, and a lot of people now might want to shift to the new tax system or the new tax regime. And why? Let me just explain this to you, whatever has been announced in the budget. So, first come first, the tax rebate that you get as per Section 87A has gone up to 7 lakh as per the new tax regime. Coming down to the tax slabs, now there have been changes in the tax slab to make it more attractive. As per the new tax regime, if you are earning up to 3 lakhs, there is no tax. 3 lakhs to 6 lakhs, 5% tax. 6 lakhs to 9 lakhs, 10% tax. 9 lakh to 12 lakhs, 15% tax. 12 lakh to 15 lakhs, 20%, and 15 lakh onwards, 30% would be your tax slab. Not only this, if you're an individual who comes into the high tax bracket, good news for you, the surcharge has been reduced to almost 25%. And talking about leave encashment, so now that has also been very attractive. You can from 3 lakh it has gone up to 25 lakh. So these are the changes as per the new tax regime. Also talking about standard deduction, a benefit that salary individuals and pensioners would get. The standard deduction would be around 52,500. So that is a new addition to make it more attractive. I'm talking about the new tax regime. But one thing that you need to keep in mind is now new tax regime will be your default setting or your default option of your tax regime. Up till now, what you had to do, if at all you had to shift to a new tax regime, you had to specifically mention it or specify it. Now, if you don't do it, that if you want to, for example, if you want to stay in an old tax regime, then you will have to clearly mention it, specify it, and then only you can stay back in the old tax regime. Otherwise, you will be included, or new tax regime will be your default tax regime or your default tax system. Going ahead, a pinch where there is no relief for taxpayer is insurance premium. So if your insurance premium is above 5 lakh, then you might have to pay tax as per your tax slabs. And the rebate that you used to get, the benefit that you used to get as per Section 54 and 54F under capital gains it has been capped till 10 crores, which was tax-free earlier. Now talking about gold, the government wants people to opt for electronic gold gold, which is why now if you convert to electronic gold, there is no capital gains tax. So these are the pointers for a taxpayer, and these are the tax-friendly announcement for a normal taxpayer.
Thanks, Kavita, for that. But let's shift focus and talk about the Adani group of stocks as well. We spoke with LIC MD, Mr. Siddharth Mohanty, on how could this impact the insurers, as well as the latest announcement that has come in with respect to the union budget of tax exemption being taken away from above the 5 lakh rupee mark as well. Let's try and understand that with the LIC MD as well.
There has been some modifications in 1010D. Now earlier 10 times premiums, 10 times sum assured, those were not taxable and the exemption was there under 1010D. Now that has been changed, and any individual paying total aggregate premium in a year 5 lakhs or more than 5 lakhs, so that maturity proceeds will not get any exemption, which was earlier available under 1010D. So that is precisely the present change.
Well, yes, that's the word coming in from the LIC MD, but insurance stocks surely were under pressure in the trading session today. So whether it was HDFC Life, SBI Life, LIC or any other insurance companies, the likes of GIC, etc., they were down anywhere between 10 to 15%, given that street is nervous that this would take away a lot with respect to companies' top lines, as well as there might be a change in consumer behavior as well. Not just the insurance companies, defense stocks were also taking it on the chin. So you had names like Bharat Dynamics, which was under pressure. Hindustan Aeronautics did not have a great day. Plus some of the other defense companies, the likes of BEL, etc., were under pressure because the allocation for defense has only increased by 6%. But let's talk about some of the winners as well. And winners clearly coming in from the tourism space. Indian Hotels was, of course, reacting to the earnings as well. But separately, there's a lot announced with respect to flipping the tourism going forward. And that's the reason the likes of Lemon Tree Hotels, etc., were also quite excited. Having said that, it was a very volatile trading action for the Indian markets today. Wild swings is what we saw. It was almost 17,000 or 18,000 actually on the upside and 17,400 on the downside, to a range of almost 600 points as far as Nifty is concerned, and Bank Nifty seeing even a bigger move of almost 2,000 points on an intraday basis. We spoke to a whole host of market veterans on to understand how are they viewing the budget and what it could mean for the market. Listen in.
No, I think it's a great budget, Nikunj, because capex is up sharply, which was very good, and fiscal consolidation has been reiterated, which again I think is extremely good because India's common debt to GDP has moved up sharply post-COVID. So I think we should be able to moderate that. There is stability and further simplicity in taxation, which is liked by everyone, individuals, businesses. And a lot has been done to further promote domestic value addition, manufacturing. The tweaking in custom duty rates, I think, is supportive of that. And I also think the assumptions behind the budget are quite reasonable. The tax growth, the revenue growth is reasonable. I think what is probably helping this year a bit is the likely sharp fall in subsidies on fertilizers. So net, I think it's a very good budget to my mind.
It's a budget which I call the 4S, it is simple, it is short, we didn't have a 2-hour speech, it was very crisp and short. It is focusing more on the structural bit, which we talked about in the morning, and fourth is it has brought smiles all over. So I think I would say it's a 4S budget going in from your 3 C's which you're talking about in the morning, and I think it couldn't have been better, and it's allayed a lot of concerns. It has been very, very thoughtful. Obviously we still have to read the fine prints. But the way it was presented, first on fiscal prudence, second on the corporate side, third on the structural side, and then on the personal taxation side, I think you couldn't have asked for more.
I think over the last many years, the macro has been handled very, very well, and there was no other expectations from the budget. We were very clear that there wasn't much scope for the government to do much, except that you can bring down the fiscal deficit by 0.5% and give fillip to growth. And that is what the budget has done at this point of time. The real problem in the market has always been that India has been a costly market. over the last 3 to 4 months, India has been underperforming the world, and if that continues for a few more months, maybe the market overvaluation problem will get over, and that is the only challenge. And it has not been the budget. Budget has been well thought of, as has been over the last 3 years, which is the reason we have not had an inflation problem or a forex crisis or anything like that, because the government has handled the macro very well, including the budget.
Okay, so those are the comments coming in from big market voices calling this the budget for growth and ranking it as high as 10 to 11, versus the figure of 10 as well. But with that, it's a wrap on this edition of the show. Thank you so much for joining us. We'll stay tuned to ET Now for more.
Becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, It's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
This is the first budget of Amrit Kal. With these words, Finance Minister Nirmala Sitharaman gave her last full-fledged budget of the Modi government. For the world economy, India is a bright spot. With 7% current fiscal growth, India is only headed to a brighter future. With these words, Nirmala Sitharaman presented the budget 2023, and welcome all of you. I'm Kavita Thaplia. You're watching the ET Money Show, and we are here at Deloitte Knowledge Center with a wonderful set of panelists and wonderful audience today to discuss not only what has come out from the budget, but also what investors and traders and overall financial portfolio is likely to turn out after this budget. Let me introduce my panelists with you, and then we will dive deep into the discussion. I have with me Dhirendra Kumar, CEO Value Research, Monica Halan, author, Let's Talk Money and analyst, Firoz Aziz, Deputy CEO, Anand Rathi Private Wealth, Saraswati Kasturi Rangan, partner Deloitte, Anna Pandya, CA tax expert, Dr. Vijay Page, founder BRF, Kushal Lodha, founder KARG.club. Welcome to all of you, and I also have a wonderful audience and faculty members from top B grade schools of India, top B schools of India, and thank you so much for joining in today for this special discussion, and we will be taking your questions later on in the show. So first question to you. I just want to know your rating on the overall budget. This question will be to all of you, okay? Let me start with Dhirendra sir. Out of 10, how much do you give to this budget?
No, I'm not very enthused about this rating business, but nevertheless, I think it's an okay budget. I would give it a 6, 7 out of 10.
7 out of 10, that is your number. Monica ma'am.
On the capex and the financial conservatism, I would do an 8 on 10. On rationalization of the taxes and capital gains, still a 6 on 10. We still have some distance to go.
All right, I would like to know your reasons on that, but later on, Firoz, what's your number?
I think 9 on 10.
9 on 10, that's aggressive, that's nice. Arnav sir?
I would say 8 on 10.
Kushal?
I would say 8 on 10 as well.
Ma'am?
9 on 10.
9 on 10. Okay, so that's really high set of numbers. And what about the students over here? You've been 9 on 10? How many of you all for 9 of 10?
All 9 on 10 here.
All 9 out of 10? And what about the remaining ones? You all are 7, 5? 8. Okay, so the average is 8 and 9. All right, so now let's get it on the nitty-gritties. And Dhirendra sir, I'm going to start with you. What is that one thing that you really expected and it happened? One thing that you expected and did not happen?
No, I did not expect, and I was pleasantly surprised by the increase in the senior citizen savings scheme limit for retirees, because that's a generation which is not used to market-linked investments. Whenever they have ventured, they have only been hurt. And fortunately, today, it is the highest yielding, safest fixed income alternative available to them. And temperamentally, they are just not configured to assume the risk, though they can actually optimize their return. So that was a pleasant surprise. And I think it's all pleasant in general, in a sense that, everybody was expecting something on capital gains tax. But I'm not very sure, whether it would have been a good news or a bad news by not doing anything. I think it just might be good news.
Monica ma'am, hits and misses.
I was happy to see that the fiscal consolidation road has not been abandoned for it being a pre-election year. I did not expect them to empty the treasury out, and glad to see that it has not happened. We still have 3.3% of GDP as the capital expenditure, which is excellent. I might have wanted to see a little bit more on the rationalization of capital gains rates and definitions across asset classes. So that, in my opinion, still is work to be done. And also, I think we need a better, the corporate marginal tax rate is 25.17. Even after the changes, the individual marginal tax rate in the new regime is still 39. So there is a big distance still left between the two rates. I'm not sure why that cannot be bridged in the next few budgets. So that's again work to be done.
Feroz, all that you needed is done in the budget or something left?
I think a lot has been done.
Okay.
If you break it down into smaller components,
Sure.
if you're looking at individuals, if you look at HNI, they've got a gift of 18 lakh rupees,
Yeah.
ultra HNI,
Ultra
5
HNI.
crore plus, 3.74% reduction in taxes, that's 18 lakhs. Switching to the new regime cost you 60,000. So net 17 lakhs into the pocket. The government has acknowledged that there were a lot of flight of family offices and individuals earning more than 5 crores. They were settling in Dubai and Singapore with our dual taxation treaty. That's one. Second, HNI, they didn't get inheritance tax. In the budget of 2014, Arun Jaitley Sahab, when he removed wealth tax, he had said that this is a precursor to bring back inheritance tax. That's still not come.
Okay.
Third, when you look at asset classes, equity is going to get a push with the capital expenditure. If you look at the improved tax collection from net tax collection of 19.13 odd lakh crores, that's up to 20.8, and I still think that that's a conservative estimate. So borrowings are going to be low, so there's nothing wrong for debt. There's great push for equity. Real estate, people were putting monies in cycles. Ek property becho, dusri kharido. That has been capped for large amounts. So you are pushing towards financialization. So asset class taken care. Every individual has something to take home. Even if you are earning 4-5 times the per capita income, you're paying 10% tax at 9 lakhs. She said in the same breath, she said my per capita income of India is at 1.92 lakh crore, and you're speaking about 9 lakhs, which is 4.5 times the per capita income, and you're getting away paying 10% tax. Now can't get smaller than this. And consistency, which was there, she didn't tinker around with the older regime, which is a big message. Everybody was expecting, and I personally believed I would be very disappointed if she tinkered with the old regime. Then there was no point having the new or the transition period. So that's why, and several more reasons why I think a 9 on 10. Very meticulously plugged two most important tax arbitrage, which Ultra HNI was using, both the MLD bit and the insurance, market-linked debenture, which is what it is an abbreviation to. Insurance also was got plugged. So UHNIs were using this. So she gives straight 17, 18 lakhs and plugs two others. So I think intelligent budget and consistent.
Arnav sir, nothing to disappoint?
No, lots of disappointments if you look at it on an overall scale.
Okay.
But the important thing is consistency in terms of what they have been doing.
Okay.
In terms of the capital expenditure, because if you look at it, it is mostly expected, or people think that government expenditure is wasteful expenditure. We are seeing a turnaround in terms that capital expenditure takes time to show results, and this has been consistently maintained even during tough times. If you are able to maintain this and increase this, it's a good thing for the economy. You don't see immediate benefits. Similarly, I see the whole push towards the new tax regime as a very clear message that the old one is going away. Because now you see the new tax regime is the default. Now when we say default, what it means is it taps into human psychology. Because you don't have to opt in for it. It's already there. If you don't do something, and most people don't do anything, then you are automatically in the new regime. But this is a signal for me that over the next few years, you will have to forget all these deductions and all, which will go away because the old will be replaced by the new. So these two are the main things. Otherwise, on the gross numbers, I think still conservative. You see the disinvestment target scaled down because they have consistently not been able to achieve that, no matter where they put the disinvestment target. But that has been scaled down. So I see figures in terms of the expectations, growth expectations, tax revenue, all those things as reasonable.
So it is achievable in that sense.
But then talking about the new tax regime, Saraswati, less paperwork or no paperwork, good for us?
Well, I would say the new generation definitely would opt for the less paperwork and maybe not really look at building up the retirements. So yes, moving clearly to a default new tax regime is really welcome, and I think it's the right signal to give. And I agree the HNIs do have a good cut there by dip in the tax rates from 42.7 to 39. But I'm a little surprised that she's not pushed the ones in between towards a new tax regime. There's been nothing that's really pushing the ones between at the lower rates of surcharge towards a new tax regime. I'm a little surprised that nothing has happened there. I also agree with Monica ma'am that 25% for corporates and 13.9 for individuals is still a long way to go, and we still have the UAEs and the Singapores welcome Indians. So I think that's something that could have been looked at a little more closely. Rationalization of capital gain scheme, I think, was long overdue. If you look at, you prepare a chart, the holding period is very different, the rates are very different, indexation available for some, not for others. So it's going to be very confusing for a common man who's going to have varied types of capital gains. The other thing which I think is a miss is, again, from a startup, we were very keenly looking at that from the stock option tax payout, that is one good way in which a startup could remunerate those who are at senior leadership and welcome them to be their mentors. That I think there could have been something. Typically a stock option should have been taxed at cashing out. That would make things easier, but maybe that was a miss. But overall, I think if you look at it even beyond the taxation, no upskilling of people, all of that, there's a lot of pluses in for health and education, which is what we are looking at long term as a nation.
Exactly. Kushal.
Yeah, I think I completely agree with Saraswati ma'am as well. Being a startup founder myself and a content creator also, I think like taxability of employee stock options should be at the time of sale when the employee is already like selling that equity, or like rather than, you know, at the time of vesting, which is the current case which is happening in other countries like in the Western region. It's usually at the time of sale when the stock is sold by the employees. That is something which was disappointing according to me. But one thing which I liked about the budget, which was expected, was change in the personal income tax regime as well. As all of you would know that in the last year, when the new income tax regime was announced, not a lot of people had, gone into the new income tax regime because of the reason that deductions were not available, and a lot of people claimed deductions like ATC, ATD, Mediclaim, etc. So now, as of now, if we just do a rough calculation also, considering an example of 15 lakhs, in the new income tax regime, the tax would be around rupees 1.5 lakh, which is just 10%. And even if, let's say, I switch to old income tax regime, even if I claim deduction of 1.5 lakh of ATC, 50,000 of NPS, or let's say 25,000 of Mediclaim, maximum, like even if I claim deduction of up to 3 lakh, I'll have to pay a tax of 1,80,000 on an average. So there are chances are higher that salaried individuals will now switch over to the new income tax regime, which is something which was needed at the moment, which was not happening in the last instance.
All right. Now, on fundamental levels, Monica ma'am, just help me understand, what is a common man's issue right now? Inflation, they need some disposable income in their hands. These are the main things which are bothering them. With the budget that's been presented and talking about the new tax regime as well, you think also the capital expenditure, which also in the short run, we might just see inflation going up slightly. You think the government will be able to tackle the problem of inflation, although it has been in track so far, but a common man's problem of having more income in their hand, will that be achieved through this budget and through the new tax regime?
Kavita, I'll take the inflation part first. We have an inflation targeting central bank, which is mandated by Parliament to keep inflation between 2 and 6. And because of the expenditure due to COVID and then the war, Europe-centric war, that has got breached. But in the next financial year, that's going to be very much under control, which is why interest rates should start peaking and then falling. So inflation will fall, interest rates will start falling. In terms of the disposable income of people, that becomes a completely different question. So what is it that the budget can do to give more money to people? A very short-term approach, Kavita, is to look at tax freebies, 5,000 here, 10,000 there. But what this government has consistently done, and I give very, very high marks for that, is that they have gone for capital expenditure. Every rupee of capex becomes 3 rupees through the ripple effect. And I am old enough to be part of the 1991 cohort who joined work in 91 when the economic reforms actually started. The giant wave of growth over the next decade took us to places we could have never imagined growing up in a socialist country. So I have to tell you through simply the experience of my own life and the life of this cohort who came to work in that decade of starting 1991, the only thing that the middle class needs is an overall environment of growth. No socialist comments on wealth, to believe in a policy environment that being rich is good. Then the middle class, which is educated, can look after themselves. So rather than go for freebies and worry about this small tax break here, there, the larger picture of growth, better job opportunities, better enterprise opportunity, better raise opportunities, and just a better, more dignified way of living your lives rather than looking for some reveries here, there, Kavita.
Right, right. I want to ask questions on the Mahila Samman Seva certificate also. But then before that, let's quickly listen into Finance Minister's presentation bit where she's talking about these schemes, especially for women.
Commemorating Azadi Ka Amrit Mahotsav, a one-time new small savings scheme, Mahila Samman Savings Patra or Savings Certificate, Mahila Samman Savings Certificate will be made available for a 2-year period up to March 2025. This will offer deposit facility up to 2 lakh in the name of a woman or girls for a tenure of 2 years at fixed interest rate of 7.5% with partial withdrawal option. Senior citizens. The maximum deposit limit for senior citizens savings scheme will be enhanced from 15 lakh to 30 lakhs of rupees. The maximum deposit limit for monthly income account scheme will be enhanced from 4.5 lakh to 9 lakh for single account and from 9 lakh to 15 lakh for joint account.
All right, now let's elaborate on this. And Dhirendra sir, I want you to explain us the Mahila Samman Seva scheme. I'm sure you must have gone to the finance bill. This scheme and the limits which have been raised in senior citizen savings scheme, and also the monthly income scheme, where also the limits have been raised.
No, Kavita, unfortunately, I have not gone through that. And also, you know, what you are actually playing out right now, I could not hear it.
Sure. Okay, so
maybe somebody else will be a better person to answer it.
Sure. Arnav sir?
So there have been 3 changes which have been made on the small savings front. One is the senior citizen savings scheme, where there is a current limit of 15 lakhs, which is the maximum amount which you can invest. Now that limit has been raised to 30 lakhs. So which means that for a senior citizen who wants regular income, because under the senior citizen savings scheme, the interest is paid out quarterly. So you have a bigger amount which a senior citizen can invest in this and get a regular flow of income. Because the problem with senior citizens used to face is that they had a ceiling in it. Because even if you see the LIC Vyay Vanya Yojana, there is also a limit which is capped there. So now senior citizens can devote more funds and get a regular income. That is the thing. Similarly, when it comes to the monthly income scheme, the limit was that if you were earlier a single holder, you could invest a maximum of 4.5 lakh rupees into it. Now that limit has been doubled. So you can invest 9 lakhs as a single holder. If you were a joint holder, earlier you could invest 9 lakhs. Now that limit has been increased to 15 lakhs. So ultimately what it means is that as a normal individual, you can put more money if you have funds into these regular income generating schemes which are backed by the government. So it's a good thing. The third thing, which is the new Mahila certificate which is going to come out. From the details which they have given as of now, the exact thing will come later, is that it will be a certificate which will pay you 7.5% interest rate for 2 years, and you will be able to invest for that 2-year time period and put money there. So this is meant specifically for women, so it's a directly targeted at women and for them being able to save and generate some income which is safe, secure, and it is not open to market volatility. So that I think is the goal.
Sure, you want to say something? Yeah.
If I could just add to it? I think this is a move where typically if you look at India as an economy, the mentality is that I would look for tax-linked benefits when I'm doing an investment. So I think the message that is coming is under the new tax regime, there are no tax savings which one would get when investments are made. So normally what we would expect is with this kind of a move, there could be a dip in saving. I think this would definitely help the government to make sure that the dip in saving is somewhere made up, because savings do constitute a large part of government resources for capital investment.
Right.
So I think from that way, two things. One is it is in a way compensating on the savings. Two, it's giving a clear message that do not make your investment decisions only for the purpose of tax. Possibly we are the only country where taking an insurance policy or a Mediclaim, I look at the tax benefits more than the benefit of the policy itself. I think it's time we moved away from that, and that's one message I really welcome.
I will elaborate this point with Feroz later on, but then one question I want to understand from Dhiren sir. So the kind of investment options, we talk about the Mahila scheme, we talk about MIS or senior citizen, these are all fixed income products, Dhiren sir. Now, if we also look at the government, they obviously encourage equity participation. Do you think it's actually a miss that nothing came in LTCG or anything related to the capital markets?
No, it is not for the government to do anything. I think the government has only been an enabler. And if you look at, all the digital stack, which is being talked about all over the world, I think that is actually one of the biggest enabler in terms of investors being able to participate so seamlessly. If you look at all the announcement that happened about the digital transaction, about the fintechs, the way they can actually participate, there is going to be a single source of all the information from where the digital enablement that will happen. I think that is the role of the government which they are doing. This is something which I think is much ado about nothing, because 2 lakh rupee for a lady, it's her own money, she can withdraw it anytime. I don't think, and when I look at the return, it is nothing special. Maybe it might have a draw for them because something which is targeted at them, because it's exactly the way we have this for the girl child, a scheme was created. It is a replica of PPF, but people save there. And that actually turns out to be a catalyst when you brand it and design something exclusively for someone. But 2 lakh rupees, I don't think it's a very big thing.
Monica ma'am, your view?
Kavita, whatever is done to induce women to onboard the formal financial system is good. So we know that women are kept outside of asset creation in most of the households, whether urban or rural. Women traditionally have taken recourse to buying and hoarding gold. Now, anything which induces a woman to go to the bank or somebody helps her onboard a formal financial product like a small savings deposit can only be positive in terms of at least introducing her to the process of onboarding formal finance. So I would just look at it as one more step to empower women to actually access the market which they need to come to and build assets in their own names. So it's a larger point than just the budget for me.
Fabulous. One question to Feroz, and then later on we have to slip into a quick break. I'm getting that command. But Feroz, as Saraswati also was talking about initially, a dip in savings, because a lot of times, in fact, all of us are used to do investments for the purpose of tax saving. Now, with the new tax regime getting so much of thrust, what about our habit of saving? What about that discipline of saving and investing?
No, I think a tax can't be the prime criteria. I think as there has been education, investor education started in 2013 by SEBI mandating to spend 0.02% of mutual fund assets. That today is 800 crores of expenditure. Now that you've done 8 years of educating people, now you can't just incentivize them on tax to get into the right planning for their finances. That's point one. Point two, now if you look at insurance policies, like ma'am also said, that people don't look at the actual policy. We at Anand Rathi created a department which helps people exit insurance policies. And we exited 2,000 insurance policies, 2,000 of them. And the return per annum was 3.03%. after holding it for 7.83 years. After holding something for 8 years, if you are going to get 3%, even if you did nothing, Government of India bond is at 7%. So just going for the tax incentive and losing a lot more is not meritorious. So I think the younger generation, we are a young country, they're amenable to learning, they're eager to learn. I think that change is very critical.
Okay.
So coming back to the point of the new regime, taking away only 7,500 rupees more from you at a 9 lakh salary, which is taxed at 5%. I earlier said 10, I was wrong. You pay 7,500 rupees more tax and get 1.5, 2 lakhs in your pocket today. So if you invest this 2 lakhs better, not at 3-4%, but at 15%, you make a lot more than that 7.5. So if it's not just about women empowerment or men empowerment, citizens are being more empowered to take conscious decisions. And there is an infrastructure of good advice distribution which has been created over the last 10 years of financialization. So I'm very positive about it. And I pray that everybody takes it positively and takes finance as, get into the driving seat of finance rather than just backseat driving.
All right, and on that note, let's slip into a short break, and after that, let's open the floor for Q&A, and we have students and faculty members who would want to raise their points, make their views, and also ask questions to our panelists. All of this after this break.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Welcome back. You're watching the ET Money Show with me, Kavita Thapliyal, and we are discussing Budget 2023. And now let's open the floor for Q&As. And I have my first student who wants to ask a question. You can sit and ask your question. Just your name and what college and your question.
Yes. So hi everyone. My name is Samiksha Singh and I am from Atharva Institute of Management Studies.
Sure.
So my question here is, UN has declared this year as the year of millets. And also in the budget, Honorable Finance Minister mentioned that India can be the hub for millets production. Now this will help us to increase the income with farmers. Now that the farmers' income has increased, how to bring financial literacy to our farmers?
Quite interesting. Monica ma'am, would you like to answer?
I want to tackle this question of literacy in a very different manner. Most Indians are fairly savvy in terms of finding value in what they buy. We need the market to be less toxic. You want the products not to be built like traps. You want parity between different products who do the same thing rather than rules change according to regulators. So this is a very old debate in the policy circles that regulation has to be on form, on function and not form. Function, what is it that the product is doing? For example, like you said, one of the panelists said, insurance policy is a very expensive way to buy a government bond. The government bond is giving you 7, the insurance policy is giving you 3. Where has the middle gone? Into the companies and the agents' pockets, right? But a fixed deposit offers you 5, gives you 5. You take a mutual fund and you take a ULIP. Very similar products, but the taxation is now becoming closer, but is still different. Disclosures are different. So the way that we solve for this is to get the market right and then give some basic financial education. Till we get the market right, I am not in favor of pushing toxic products like especially life insurance, investment plans, and very high risk mutual funds to a population which is just onboarding financialization. So I'm afraid of that. We need to get the market fixed before we build these pipelines, Kavita.
Exactly. All right. We have Professor Pagi also who has his view on budget and also would like to ask a question, sir.
Thank you.
Yeah, it's on.
Well, the point is that I would rather go to the bottom of the pyramid. I think the top has been handled very well. And what it says is that agricultural accelerators have been put into in the program. If you look at the planning and the implementation process, every department of government, every activity requires an accelerator. It requires a center of excellence. It requires excellent cooperation in public and private sector and the youth and the startup. A beginning has been made in agriculture, but I think this could have also gone to other areas. What do you believe? Is that the way forward, or we'll leave all the agriculture or other accelerators to the startups only? That's my question.
Talking about startups, Kushal, are you really happy with the announcements? And
Not really, to be honest. I had expected more regarding the announcements of startups. For example, if you talk about the compliance procedures, what I had personally expected was there should be a single window clearance when it comes to registering for MSMEs or having those tax exemption benefits. Of course, this was expected that the tax exemption period would be extended by another year, and there's also a change in the announcement of the period of 7 years has now been increased to 10 years, where these startups who have been incorporated from 1st April 2016 can now claim this deduction exemption till the next 3 years. So that is something which was expected. But apart from that, talking about compliances, talking about ESOP taxability, that is something which was more expected from the startup perspective. And I was more looking on the lens that there should be, like some schemes. There's a startup scheme, of course, which is there for all the startups. But as of now, the compliance procedure of registering into DPIIT, it's very, it's not that user-friendly as of now. So that is something which is a pain for the startup founders as of now. And going forward, I would expect that, the incubator which is there for all the startup founders, the amount which is there for the ecosystem to invest in these startups, that should be increased, and more amount of funding should be given to the right entrepreneurs is my point. So for example, identifying them, putting professionals who can identify which kind of founders can excel, which is the industry, sector experts and all, that is something which would be very value additive when it comes to promoting the entrepreneurial spirit in India.
right, those were the misses for the startup sector. Next question. Yes, ma'am.
Yeah, hi. I come from the educational sector, and in this budget, a lot of impetus is given to training a large number of teachers, right? So my basic question here remains is, when we go to rural areas where there is not so much well-developed infrastructure as far as the education, giving education is concerned, so from where you are going to generate these so many numbers of teachers, and how are you going to train them? So this is my question.
Dhirendra, sir?
No, I'm not very knowledgeable about this, but I think this is a problem. I come from Bihar, and recently I had an opportunity to be visiting a set of schools in some other context, and there what I was witnessing was the delivery by the government machinery and all the upkeep of everything, and including the teachers, their training, the way they are hired, the way they are kept motivated or to be interested. I think all those systems in some regions, I think it has failed, and that's a different kind of problem. I think throwing money at many of our problems is not a solution.
Next question.
I'm Dr. Mangesh Kasbekar. I'm a professor at NL Danme Institute of Management Studies and Research. In the beginning, we all rated the overall budget, and most of us gave an 8 or a 9. I'm wondering from the panelists, what rating will you give for the MSMEs with regards to what kind of how budget has helped the MSMEs in this regard? Thank you.
Arnav, sir?
So if you look at the various provisions which have been made in the budget for the MSMEs, it's quite vast. So at each of these areas, if you look at all the areas which the finance minister has highlighted, and then you find that the MSMEs have found a mention in each of them. So the question here is also, what kind of effect will this actually have on the ground on the MSMEs? Because having a scheme is one thing, getting it across to the MSMEs and seeing a notable impact on them is a secondary thing. So that remains the question. As far as provisions are concerned, various points or various announcements are concerned, there is enough for the MSMEs to look forward to. The question now only remains as to whether it actually trickles down or flows down to them in the manner in which it should. Because that is the one area where we find that there is a gap between the announcement and what actual impact finally comes about. So, I mean, MSMEs, I would give it a rating of 10 on 10 on politics. Okay? The senior citizens have been taken care of, women have been taken care of, MSMEs and employment has been taken care of. So this is, I mean, you should see it as part of that overall reach.
Next question, yeah.
Hello everyone, my name is Apurva Soshi. I am from Atharva School of Business. As we are talking about MSME, so MSME has received a great relief through this budget. So do you think they will face a big challenge for organizing large-scale manufacturing due to emergence of artificial intelligence and data analytics. So how can they scale up?
Arnav sir?
So scaling up for MSMEs is always a big question, and which is where the funding gap which is there and the funding which is there is supposed to be the bridge between those two. The second point is also in terms of the various new technologies which are being talked about. See, technology is not meant only for bigger companies, bigger entities, so that they come, for example, now you see Apple, the kind of manufacturing it does. But you also have to look at the fact that whenever there is a big manufacturer, it brings an ecosystem along with it. And the ecosystem has to be strong enough, because you can't be saying that I'll just assemble a final product here without many of those inputs coming in from the surrounding areas. If you want real employment generation, if you want the MSMEs and the SMEs to actually succeed, you need to develop that entire ecosystem whereby those smaller units are able to feed into that bigger technology unit and provide the necessary thing, and which is what China has done, which is the secret of its manufacturing success. So if we have to go ahead on the manufacturing front, this is a very important thing, and which is where all these new emphasis on technologies which can actually be used by smaller units, that is the key to actually building up that kind of ecosystem.
If I can just add, I think building up talent is also very, very important, and that's something that has found a place in the budget in terms of upskilling, specifically in the areas of artificial intelligence and development for 5G, again, rated applications. There are going to be development focus on developing applications, and for all of these, the large institutes are being roped in. So I think from a talent perspective, it's important for MSMEs as well, and that's one area which I thought had got good focus in this budget.
Yes, sir.
Well, personally, I would assign possibly 9 out of 10 for this budget, but just would like to have views from the panel. Generally, it is said in classical structural finance that budgets are to be evaluated on 3 basic pillars: transparency, consistency, and simplicity. Out of that, you have already talked about consistency pillar. How would you rate this budget on transparency and simplicity pillars?
Monica, ma'am?
I'll take the transparency question first. Starting from 2 budgets ago, there has been a move to remove the off-budget items and take them on board. So what previous governments would do is that to show a lower deficit number, they would get the state enterprises to borrow so that it doesn't come into the books of the government. So, so you could never believe the numbers, and a budget where you can't believe the numbers is not worth the paper it's written on. So I think that transparency question got sorted a couple of years back, and I don't think there is anything hidden away in this budget. And in terms of simplicity, finally, it is a $3 trillion economy with 1.3 billion people. The historical tax structure which we have inherited is also very, very complicated. The simplification of all of this will take time. The move to this new tax regime is an attempt to start simplifying some of these things. Another way would, of course, be to rationalize the capital gains structure. It cannot be a very simple exercise. The budget cannot be, simply because of the number of variables and the number of concerns and the number of constituencies which need to be addressed. But I think the disbelief in the numbers has got sorted, and that's a big one.
Yes, sir.
Hello, this is Dr. Chandrahas Deshpande from Wellinkar Institute of Management. I was just wondering, see, given the gravity or the intensity of the problem of current account deficit, which has been acknowledged by Reserve Bank of India some time back, and also specifically by Economic Survey released yesterday, I thought that there would be some mention of some incentivization or some specific provision of, say, opening up an additional sector for foreign direct investment, but not a word was said on any aspect of foreign direct investment. And I, for one, was not very happy with that, but would like to know the views of the panelists here on the omission of any provision with respect to FDI, especially when this government year after year has been opening up some or the other sector or raising the ceilings of FDI into some or the other sectors. So why this omission? Any view on this?
Dhirendra sir?
No, my sense is that, this government has been extremely proactive on the execution front, because you can make big policy announcements and make life miserable for anybody who is going to make investment. I think this government has been very impressive on executing, having a single point of interaction. I don't know if you had an opportunity of setting up a company in recent times. It's a single window, just now somebody was referring about a single window system. You have to really experience it. Just the 7-8 things that happens at one go. You get the GST number, you get your PAN number, you get your bank account number, and so at the time of incorporation. My sense is that this government is very high on attracting or serving or catalyzing, playing the role of a catalyst in FDI. I don't think there are big sectors which are closed for any entry. We have to be an attractive destination. We are actually a very big beneficiary of the shift that, or even a marginal shift that we find is happening on account of apprehensions about China, and we have been very fortunate to be in a position to capitalize on those.
All right, so now we have to, we are almost on the end of the show and we need to really wrap this session. But thank you so much for all of you joining us, and I would request the panelists to be with us. We are going to continue our next session also, but for the audience, in a nutshell, it's a strong budget, it's a simplified budget, and win-win for everyone. Thank you so much for watching.
Honorable Speaker, I present the budget for 2023-2024. This is the first budget in Amrit. I propose to increase the rebate limit to 7 lakh in the new tax regime. The revised estimate of the fiscal deficit is 6.4% of GDP, adhering to the budget estimate. The fiscal deficit is estimated to be 5.9% of the GDP. In my budget speech for 21-22, I had announced that we plan to continue the path of fiscal consolidation, reaching a fiscal deficit of below 4.5% by 2025-26, with a fairly steady decline over the period. We have adhered to this path. 75th year of our independence. The world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track, and despite a time of challenges, heading towards a bright future. Today, as Indians stand with their head held high and the world appreciates India's achievements and successes, we are sure that elders who had fought for India's independence will, with joy, bless us in our endeavors going forward as well. Investments in infrastructure and productive capacity have a large multiplier impact. on growth and employment. After the subdued period of the pandemic, private investments are growing again. The budget takes the lead once again to ramp up the virtuous cycle of investment and job creation. Honorable Speaker, sir, the capital investment outlay is being increased steeply for the third year in a row by 33% to 10 lakh crores, which would be which would be 3.3% of GDP. This will almost be 3 times the outlay made in 2019-20.
No, I think it's a great budget, Nikunj, because capex is up sharply, which was very good, and fiscal consolidation has been reiterated, which again I think is extremely good because India's common debt to GDP has moved up sharply post-COVID, so I think we should be able to moderate that. There is stability and further simplicity in taxation, which is liked by everyone, individuals, businesses, and a lot has been done to further promote domestic value addition, manufacturing. The tweaking in custom duty rates, I think, is supportive of that. And I also think the assumptions behind the budget are quite reasonable. The tax growth, the revenue growth is reasonable. I think what is probably helping this year a bit is the likely sharp fall in subsidies on fertilizers. So net, I think it's a very good budget to my mind.
It's a budget which I call the 4S, it is simple, it is short, we didn't have a 2-hour speech, it was very crisp and short. It is focusing more on the structural bit, which we talked about in the morning, and fourth is it has brought smiles all over. So I think I would say it's a 4S budget going in from your 3 C's which you're talking about in the morning. And I think it couldn't have been better, and it's allayed a lot of concerns. It has been very, very thoughtful. Obviously, we still have to read the fine prints, but the way it was presented, first on fiscal prudence, second on the corporate side, third on the structural side, and then on the personal taxation side, I think you couldn't have asked for more. No, so I'm constrained, whatever way you ask, and you have a lovely smile, but I still resist not going into stocks. But Nikunj, I think we always get into this thing about looking at stocks and this and that. I think, as I said earlier, the biggest stock to buy has been India, and if you look at good funds, they have grown like 100, 200x. So obviously there will be some sectors which will do well, some sectors which will not do well from time to time. You mentioned about a cigarette company, it was down 6% and now it's up to 3%. So let us not go into a very knee-jerk kind of reaction based on what has been announced today or tomorrow. Ultimately, when you invest, when an investor invests in stocks, it is from a 3-4 years perspective. So look at the structural side. I think the full focus has been, a massive $120 billion plus on infrastructure, which is like 10 trillion rupees. It's up by 33%. Almost 40% of that is going into the railways. A lot of focus on road building, a lot of focus on other infrastructure building. There has been an increase or an extension of low tax rate of 15% for new manufacturing companies. So I think the thought process is very clear. And, if you believe that this government is going to continue for another term, I think we should be just extrapolating this from the next 5-6 years perspective. And I think the road from 3 to 6 is now looking very, very near. And I think that should be the focus.
I think this is a super budget. It's a lot more than what we could have bargained for.
Super duper?
It's a super duper.
Super duper.
In my words, Torford budget. Okay. I think it's a very responsible, progressive budget. Okay. Lowering taxes for all sections, I think is a big move. I think this is a big move in terms of taking India forward. The initiatives on technology, digital, setting up centers of excellence for artificial intelligence. I mean, look at the whole narrative of the budget. A budget 10 years back, a budget now, and a budget which is now really looking ahead. Setting up physical and digital libraries for children in villages. I think this is massive. This is not about setting up physical infrastructure. This is about setting up intellectual infrastructure for the future. This is making India a much more stronger and a modern economy. And this, I think, is the big takeaway of this budget.
Vijay Kedia, dhamakedar budget?
Yeah, I think it is 10 out of 5. It is not 5 out of 5. Because I was expecting that they are going to tinker with capital gain tax. So the tenure has not been increased and tax rate has also not been increased. So of course it's a Diwali, it's a bumper Diwali budget, kind of budget.
For the first time, in the longest time you and me have tracked budget, you've seen the aggregate tax rate for HNI and ultra HNI go down. Normally it's always that, the rich are earning more, tax them more because you need fiscal, you need more revenue.
More money, yeah.
So this time around, even though this is about 1.5 years away from the election cycle, the first time the aggregate tax rate has come down. Just shows the mindset of the government in terms of how confident they are about the bent of the economy and about revenue buoyancy. Because fiscal deficit, if it comes down and if assumptions are normal, that means the government is very optimistic about where they feel the tax collections are moving. Would you agree with me, all three of you? Is that the main crux of this budget?
Oh, absolutely. I mean, absolutely. I think it clearly shows a lot of conviction and a boldness on the part of the government to assume that clearly taxes are going to keep rising and the ability to lower taxes and still have higher taxes, which means that the government seems to be very confident on growth, which I think is a huge message to investors and to markets and to business and enterprises.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation.
What a day it's been for Indian stock markets, full of twists and turns and peak and turfs. Markets got